do that. So pharma is the second one. The third one is on the auto component side. Again, I think because our auto industry is so big, our auto component companies have learned, and auto ancillaries also, I would say, to do advanced electronics, advanced sensors, advanced panels, forging, casting. So I think these are the three sectors that I am, pretty excited about, and there are plenty of opportunities.
Okay. What are the risks to this thesis? Could a indifference on the Nifty level hurt some of the promising earning companies, or could earnings delivery mean that there could be rewards on the bourses even if the Nifty were to flatline or correct another 5-10%?
Yeah, I would not worry about Nifty at all. I think Nifty is just, representing what large cap buyers, especially a lot of foreign allocators, look at as India proxy. And I think that's what they are looking at and being disappointed because of the anemic growth, as Alex said, in 5 to 7% in the large cap earnings. And because these large global allocators do not have an on-ground presence, they do not want to make bets on the small cap and mid cap growth stories in India. But what I can see is that over the next 2 or 3 years, many of these small caps will become mid caps will become large caps, and they will attract foreign capital. They will become, the new mid cap and Nifty entrants. So because of Nifty's underperformance, yeah, sure. Capital flows overall may be restrained, but I think there is enough domestic capital available to back the growth of these companies. And also they have done, their innovation in a very frugal manner. The capex, I find some of these companies to be astonishing, with little amount of money, what they have accomplished. It's just remarkable. So I don't think they are dependent too much also on inflow of capital, and whatever they need is available easily in India. So really not worried about their earnings being at risk.
It's interesting, Abhay, and certainly I think a lot of our viewers and Indian investors will take heart from the fact that while there is a little bit of anemic growth and maybe large caps languishing, there are opportunities at the broader end of the spectrum. So thanks so much for taking the time and speaking to us today.
Thank you.
All right, well, that brings us to the end of this edition of India Market Open. As we close, we've seen gains, at least at the benchmark level for the Nifty 50, evaporate a tad bit. But guess what? The broader market's actually looking pretty good.
Yeah, and maybe bottom up is the story of the day. In fact, if people have queries around that, I think Ask Profit would be a great platform to kind of talk about that. It'll be a curtailed version of Ask Profit, but nevertheless, I'm sure that Mahima and Puneet will try their best to get you all the answers. From Alex, me, and the team that put this show together, thanks so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit,
for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour today, because we have the big town hall coming up at 11 a.m., we'll try and solve all those stock-related queries. So a slightly more shorter version of Ask Profit today. So do start sending in your queries right now, and we'll take it before the big town hall starts, where a lot more queries will be answered as well. But before we do that, very quick check of how the markets are doing, because we were indicated by the GIFT Nifty today that we will be starting in the red, but that wasn't the case. But then, since then, you have seen some sell-off from the highs, and it continues to be under pressure at this point of time. But continuing that 42-point uptick. We're at the lowest point of the day, sold off from that 23,250 odd mark, and the heat map that is reflected. So you at the start as well, not too many stocks that flew through in trade. You had Indigo doing well as the top Nifty gainer at the start of the trading session, but Trent has now overtaken that position. They're up now 2.5% odd. Jio Financial, ICICI Bank and Grasim are some of the other names that are doing well, while Tech Mahindra, NTPC and Titan is under pressure. When you also look at the advanced decline ratio for the broader markets though, yesterday was a day where you had consistent pressure across the spectrum on the broader markets as well. And today though, there's a 4:1, almost a 4:1 benefit for the advances compared to the declines as well. Mid cap, small cap also reflect that outperformance. So you're seeing almost a percentage point increase in the mid cap 150. Small cap also doing well at this point of time. But the BSE 500 though, and therein is there you see individual movers like Relaxo, Balaji Amines, TTK Prestige also continue to do well at this point of time, while Rajesh Exports, NLC and Z Entertainment taking some reprieve at this point of time. But let me go across and welcome in our guest today, Swati Hotkar, AVP Technical Research, and Nirmal Bang joining in on the technicals. Astha Jain will be also joining in us very shortly as well. Swati, very good morning to you. Thanks so much for joining in. Let me go across and just start taking the stock related queries now. So the first one that's coming in, and this one it's from Surya from Hyderabad on Cochin Shipyard. Now Swati, he wants to buy to this counter and ask if it's a good time to enter this with a slightly more longer term, a 6-month to a 1-year view. What would be your opinion? Hi Swati, can you hear me? Swati, you're on mute.
Good morning, all of you and Puneet as well. Definitely the view is positive for longer term duration, but as of now the counter is trading below all the moving averages, say 50 and 100 DMA. I believe that more selling pressure is likely to be intensified if the stock manages to give the breakdown of 1400 levels. Then downside at least 1350, 1370s are the next target we are looking forward on downside. So wait for some more time. Let the stock settle down at 1350, 1370 levels where the risk reward ratio is favorable. You can buy those levels, and then the near term targets for the upside will be open at around 1470 to 1500 levels.
Got that view, but let me also welcome in Astha Jain, Senior Research Analyst at Hem Securities. Astha, very good morning to you, and the first question towards you as well. On EPL, Rakesh from Hyderabad actually wants to buy into this counter and he's holding shares at 250. He wants to ask if he should still continue to hold this counter for the long term. What would be your recommendation?
Good morning to everyone. Talking about EPL Limited, I think this counter has a strong potential to move upsides. Why? Because I believe the kind of financial performance it has posted very, very strong side of a number, strong revenue growth, strong profit growth. In fact, what I'm seeing in this counter as a fundamental main focus is that they're global diversified. So they are globally diversified. So that is also helping this company, because we all know that it is a packaging company, and with this global diversification they are really focusing on other areas as well. And my idea here is that going ahead also with the strategic expansion this company is doing, definitely this is well poised to move to the level of 225 to 240 in the coming days. So looking very strong counter. Yes, one can make entry into this counter at the lower level of 205 also for the price target of 240 to 245.
Got that view, Astha. But the next question, and this one's coming in on a retail favorite stock, Vodafone Idea. Viewer Monty from Hyderabad is holding 10,000 shares, bought at 10.59. So he is currently sitting in profits, asking if he should continue to hold or sell. Now, Swati, we've seen, of course, Vodafone continuing to be around that 14 rupee odd range for a while now. Do you think that sustains? What would you recommend Monty to do?
The client is bought at a very attractive levels, and already from the month of April we have seen a very strong momentum from almost 9 to 15 levels. Now the counter has entered into the overbought zone, from where we might attract some sort of a profit booking after such kind of a rally. So since you have a huge quantity, I will suggest to maintain the long positions, but with the strict stop losses on the downside. I will suggest to maintain the stop loss of 13.80, which is nearby the 20 days moving average, because it gives the breakdown of those levels. levels, then profit booking is likely to be seen, which will take a counter towards to 12 to 11 rupees on a downside. So you can hold on the long position with a stop loss of 13.8, and the immediate target we can see if it manages to give the breakout of 15 once again, and 70 to 18 levels can be seen in the near term.
Well, I think that discussion, Swati, would have been just outrageous just a few months ago, but at 17 to 18, once that level crosses of 15, now we're talking about Vodafone Idea. So it's very interesting of what the juncture has been for this counter. Some AGI relief, of course, boosting that. But Devashish Mohanty from Bhubaneswar is asking this next question. And, Asta, his question being that he's asking if it's a good time to invest in Servotech Power or as well as IRB Infra for the long term. Actually, both counters, especially IRB Infra, not performing well, Asta. What would be your recommendation for both of them?
First of all, talking about IRB Infra, today it is into the news on the basis of some good performances that this company has posted, I suppose. And they have got some increment in their toll revenue, if I'm not wrong with my information. So, but this news has today just make the move of upside in this counter. But if I talk about the Servotech Power, now this company is basically, we should know what other companies focused on. It is focused on basically EV charging, solar products, battery, energy storage, etc. So now this is purely a power focused company, and this company has shown very, very strong side of our numbers, not only in Q4 FY26 but full year of FY26. Now, why I'm liking this company? Because they have got a very good exposure to the high growth sectors. In fact, as I've already talked about the numbers, so if we see their margin, the margin have also seen a strong expansion, and hence I believe that on the basis of their capacity, expansion also, this company is well poised to show some good moves in the coming future. So between these two, Servotech is looking better. And IRB Infra, although it is up today on the basis of some news, but for a long term, I think Servotech is a better choice. Go with this with a price target of 150 to 120.
Got it. Asta, also just a very quick question on Arvind Limited, because a viewer has bought shares, 300 shares, bought at 350. Now stocks up almost 50% in just this year, the last 6 months. So Santi's question being if he should continue to hold this for the long term, or is it a good time to book out? Now, it's not been a very runaway move for the last few years, Asta. So is this a good opportunity to book that profit?
One should remain invested or partially book profit, not book profit fully in this counter, because some of the fundamentals seems to be on the good or better side. First of all, the sector tailwind is there, because what we are saying that there is a recovery in the textile sector. So definitely Arvind Limited will going to be a key beneficiary, because their financial performance is also very, very strong. Now, second thing which I feel that this company is looking unique from the other or differentiated from the other is that they have shown a very, very strong material growth. So that is also looking very good to us. And in fact, the kind of business they are doing in the garments, definitely this business is looking very, very strong. In fact, if I look after the macro, apart from the sector tailwind, if I look after the global macros, then also India being the key beneficiary for the textile after China, definitely company will going to benefit from this. So all these factors are signaling towards more upside in this counter, because this is the company which has got sectoral tailwind, as well as their financial performance is also very strong. So no need to book full profit, just book partial profit into this counter and remain invested in the partial quantity for the price target of 550 to 600 at the initial levels.
Got that view, Asta. But the next question coming in on Supreme Industries. Now, when you pull up the counter, look at the year-to-date chart, and what we've seen here. And Lalita from Bangalore holding shares at 3565, so very close to the current market level. But let's look at the year-to-date chart, and it's been very volatile. That's because of the polymer price, which is a key raw material for all pipe makers, and hence you see that continuous volatility as well. But her question being, Swati, if what should she do with this counter now, because has been volatile, very close to a buying price. Should she exit or continue to hold, add more?
See, my little view as of now, looking towards the current price momentum is little bit cautious because from the last almost 1.5 year, the counter is continuously trading in the downward sloping channel. It means it's forming a new higher high and new low lows as such. As of now, the stock has given the breakdown of the 20 DMA also. Since the buying price is nearby the CMP itself, I will suggest to maintain the strict stop loss of 34.80 rupees. If it's break those level, then more selling pressure is likely to be intensified, which will take the stocks towards 3,400 rupees on the downside. So maintain the strict stop loss of 34.80. Long positions can be hold. Breakout of either 35.50 levels will attract some sort of a buying, which will take the stock towards to 36.50 to 36.80, which are the previous swing sides. So I will suggest take 30 points more risk and hold your long position. If you're getting any rise towards to 36.50 level, exit your longs.
Got that view, Swati. But the next question is an interesting one. And let's just quickly cut in to the TCS AGM because N. Chandrasekhar is speaking now as the flashes on the bottom of the screen. Let's listen in.
I believe the disparity fundamentally stems from the misconception surrounding the relationship between AI and IT services. My purpose today is to share what this relationship actually looks like. AI tools definitely reduce the need for human input in the building and maintenance of software. However, AI does more than reduce the effort. It is not merely a technology. It is an infrastructure. It is an infrastructure of intelligence. If you look back at the history, when such a infrastructural shift happens, opportunities expand. When steam engines made coal more efficient, we did not use less coal. We used more because it unlocked new uses and opportunities. Cloud made technology central to every industry. AI will do a lot more than any of these examples. At a greater scale and across wider canvas. As the cost of intelligence falls, many more processes, decisions, and interactions in many more industries will become candidates for AI-driven transformation. I have watched this industry navigate every major technology wave for decades. But I feel this one will have much to build. The global enterprise IT industry, which is currently worth 1.6 trillion, is expected to double to 3 trillion in the next 5 to 10 years. So this presents significant number of opportunities. I'm going to specify 5 important opportunities. The first is updating the primary technological functions that large businesses rely on. Many businesses are still working on outdated systems, old infrastructure, fragmented data, weak cybersecurity. Overhauling these functions is the starting point for any enterprise AI deployment. TCS is seeing this across the client base. Recently, it had to overhaul 8 SAP systems for a global pharmaceutical company to create a unified SAP S/4HANA cloud platform. And there are many more such examples in the pipeline. The second is using AI to reimagine how the businesses operate. AI demands a redesign of how work gets done, end to end, from supply chains to customer journeys. This requires deep domain and customer knowledge. And TCS has that understanding of the customer's businesses, the value proposition, and the complexity of their IT systems. TCS is engaged with many customers in building such an AI platform Recently, it completed an implementation for a global bank.
Well, that was, of course, N. Chandrasekhar talking about what the AI opportunity could be, gave the example of the steam engine as well, and there could be more opportunities for IT services companies with the mass, deployment of AI services as well. That's something to watch out for. But let's get back to your stock-related queries, and this one's, coming in from S. Yadav from Ajmer. He's invested into Sirma SGS at 750. So he is currently in the gains. What's also interesting is he watched our interview with the management this morning and asking that it looks promising, but what's the expert's opinion as well? There's also a similar question that we've gotten on Sirma SGS as well from another viewer of ours. So hopefully this will answer both those questions. But Asta, we've seen the management actually relay 4,800 crores in revenues this year, going to almost $1 billion in a couple of years. New verticals, new joint ventures in defense, maritime. And stocks still continuing to outperform versus the other peers as well. What's your opinion on Sirma?
Opinion is positive because I would like to highlight one more point is their order book, which is massive. I think they have got the order book of around 6,600 CR. So on the back of such a strong order book, definitely this company has got a very strong revenue visibility. In fact, I would also like to focus on one point that their balance sheet is also in a very strong position. They have got very strong net cash position is very strong on the balance sheet. In fact, if I talk about the debt also, debt is also not very high. So, and exports is also working very strongly for the company because their export have grew a lot. So all over, I think the fundamental seems to be on a very positive side. This is one of the strongest player in the EMS space, and hence we are positive on this counter because EMS space in particular is also looking very, very good due to we all know that China plus one strategy is playing for India right now, and we know that there are various PLI incentives which the EMS players are getting from the government. So overall, yes, this counter is still looking very positive. One should remain invested in if anyone wants to buy or focus on some fresh buying also. Then also one can go ahead with this counter with a price target of somewhere at around 1,280 to 1,300.
Got that view, and hopefully Madhukar was the other person who asked that question. That also answers on Sirma. But another query is on Ola Electric, and now Yogesh from Jaipur actually was smart enough to buy these shares at 25.64. So stock had corrected from 40 to 22 on the way up. Yogesh jumped on the bandwagon, bought 2,400 shares and is in gains of almost 51,000 rupees. Now, his question being if he should continue to hold this or book out. What would you recommend here, Swati? Because, on the fundamentals, there's a lot that we can talk about with Asta on, but we've seen this momentum not before, right? At 47, we've generally looked at that 40 level. This time the breakthrough has come through. What's your view?
My view is definitely positive. This stock counter we have already recommended to our clients as well. The interesting observation, Puneet, is that on the monthly and the weekly chart, the counter has given the breakout of the inverse head and shoulder patterns. And the neckline was coming at around 41 to 42 levels. After those breakout, we witnessed a breakout. A swift momentum rally has been continued along with the volumes. Looking towards setups, I believe the stock has a very strong potential to continue this rally towards 257 to 60 levels on the high side. So you can definitely hold your long positions. If you want to keep any kind of a profit stop losses, I will suggest to maintain the stop loss of 42 rupees on a downside and hold your long positions for a target of 60 rupees.
42 and 60. So, Swati's been busy with these difficult names, Ola Electric, Vodafone Idea. She's given a very interesting view on both of those counters. But also on NRB bearing, Swati, because yesterday we saw a massive run up. And today Neha from Bengaluru is, asking us this question. She's holding shares at 292. So in massive gains here as well. Asking if she can hold this counter for another 2 to 3 months, or is it a good time to book out? What would you recommend here, Swati?
Puneet, already the counter has given a very strong rally from almost 300 to 450 levels. Now the counter is trading in the overbought zone, near to the 52-week high or say the all-time high as of now. I will suggest to book at least partial profit current levels because the market are too uncertain. Even though the counter is trading at a very attractive levels and the formations are really strong. I will suggest to book the partial profit. Second partial you can hold on by maintaining a profit stop loss of 390 rupees. If the stock manages to give a breakout of 450 levels again on the higher side, then this rally is likely to be continued towards the new all-time high, at least 500 to 520 levels on the high side.
Got it. Well, now it's time to start the rapid fire round. Astha as well as Swati, you know the drill. The first question coming in on NTPC. Praveen from Chennai is asking a long-term view. Astha, after a 10% correction, is it a good time to add?
I think buy or dips should be advised at this point of a time. So add, but at a lower level of around 350 to 345.
HDFC Life bought by Harsha from Vijayawada at 720. Wants to know if she should continue to hold for the long term. Astha?
HDFC Life is a good long-term play in the insurance space. So hold is recommended for the price target of 600 to 620.
Got it. E. Venkatraman is asking a next question. He's a senior citizen from Bengaluru. Between Bajaj Auto, Hero MotoCorp and TVS, he wants to exit one stock. So he has three of them, Astha. Which one would you recommend that stock to be?
Although I'm liking all these counters, so it is a difficult choice to say exit from any one of the counter. My idea here is if one can manage to stay invested in all these three, then it is a better choice.
Got it. Well, the next question coming in from Bindu from Hyderabad on Vedanta. She's holding shares at 277. Asking Swati if she should continue to do that.
I will suggest to book the profits at the current market price.
Got it. LIC Housing Finance bought at 590. And, Swati, this question to you, if, asking if he should move on and switch out of this counter now.
No need to switch on because the counter is under the positive formation. Hold for a target of 580 to 590 levels.
Got it. The next one that's coming in is on Thomas Cook. Jeevan actually bought these shares at 88. I think yesterday the counter was in focus. Today as well, up 6.5%. Swati, does the move continue?
Yes, the move is likely to be continued towards 120 levels. So you can hold on the long positions by maintaining a stop loss of 105 on a downside.
On Rain Industries as well, Astha Sriram Raghuraman from Chennai is holding shares at 146. Stocks at 196 now. Should he book out?
So it is a global leader, as we all know, that into the calcinite, petroleum, coke, etc. But my idea here is that it is a good dividend, not good a dividend play, but yes, if anyone get this into the correction, then it is a better choice. So right now, only partial profit, don't book full profit here.
Got it. On KPIT Tech though, because Krishna from Chennai has bought shares at 1793. So he's currently in almost 50% of losses. Now, asking if he should wait for another 2 to 3 quarters here, Astha, because he's already held on for so long. What would you recommend? Is it a good time to buy also?
Time to buy, but there is one reason why this has seen a strong fall, because what we have seen across the board OEM players has seen a correction. So that is one of the reasons, but long-term growth story is still intact. So buy on dips is recommended at the level of around 730 to 720 with a price target of 800 and above.
Got it. Well, the next one's on Grow, which is of course Billion Brains. Swati, our viewer Padma wants to enter this counter now. And a question being if it's a fair price and what's a good time frame to hold this one?
I would suggest to wait for some more time. Any dips towards to 185 to 180 levels are the attractive levels to take a long positions, and then after that the target will get open at around 220 to 240 levels.
Got it. Well, that was the last question of the rapid fire in this edition of Fast Profit. Astha as well as Swati, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, it is now time to have the big town hall. Shankar Sharma joining us right here in our studios. You can also send in your queries as well on the number that we've been flashing, and there you go on screen, of course, with Tamanna as well. All those stock related queries, all the market opinion that you need to know about what to watch out for going forward. We've of course had a very interesting quarter in the last 2 to 3 months, but what are some of the key aspects to watch? Join in after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार विमल।
बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. How are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective.
Welcome to the much awaited NDTV Profit Town Hall, and today the speaker we have in our studios is none other than Shankar Sharma, ace investor, founder of G Quant, Fin X-Ray, but I would say also one of the most controversial market speakers, at least on social media.
No, I don't think so.
No? Shankar, everything you put out then has a series of people who are coming aboard to say that whatever you said was wrong.
Of course.
You think about that when you post, that how many people will I upset with this post?
Of course.
So it's a considered thing.
100%. Social media is supposed to be like that, right?
Yeah.
If you're middle of the line, then there is no traction.
Yeah.
And if you're too goody-goody, also there is no traction. If you're a little borderline bad boy, it's good.
So of all the things and of all the years that I've known you, I don't think anyone can accuse you of being goody-goody. That's
not even
for
my
sure.
mother.
Okay, that's good to know. So here's what we're going to do in this show. Here's the format. We'll have a couple of questions with Shankar, and then of course our brilliant team, all our anchors, researchers, and the NDTV Profit newsroom is here. They're going to be asking questions as well. But you have an opportunity to write into us. All of the handles are on your screen, where we will pose your questions to the one and only Shankar Sharma. I'm going to start with I think one of the controversial or more controversial things that you put out recently, a thought that Indian equity markets will actually have to take the brunt, let markets crack for some of the pain that we're seeing in our ecosystem to ease. What were you trying to say? Just recap that for us.
So it's a pretty straightforward theory that, look, any country which is going through some kind of crisis, and let's accept it that we have some degree of crisis. It's not 1991, but it is pretty bad after 2013. In that you have two markets functioning, or let's say three markets functioning. One is the bond market, your local bond market. Second is your currency market. Third is your stock market. Bond market, the RBI can manage because it can do the OMOs and keep the rates, yields down, which is what has happened. I don't know how long that can continue, but it has happened. Then you have the currency market, which is a more global market, and a stock market, which is also a global market. So the market that you have controlled is the least globalized because you can control it, and that's why you can control it. And on the other hand, currency is something you're trying to control using reserves in India, which, as I wrote in my article in Mint paper, was that these are not earned reserves, these are rented reserves. Barring the invisibles component, which is your remittances and your software exports remittances, other than that, it's all rented. Rented money you cannot use to defend your currency. It's like a promoter raises money and then he goes out and starts buying his own stock with that to prop up his stock. It's not possible. So the only thing that you can let go of is that the stock market, because the stock market here is giving the FIIs a very easy exit liquidity. And this I wrote a year and a half back. And now you can see exactly the effect of that play out, that you're hemorrhaging $500 million or so a day. These numbers are absolutely staggering. You cannot continue this path. So India is, for example, going to raise, I don't know, $30-40 billion through the FCNRB. That's what is talked about.
Yeah.
That's 2 months of outflows. FIIs still have $800 billion to go. So you're raising a liability to fund exits. Very different from 2013, when if you see the data, we actually had a net FII inflow for the FY14. There was no bleeding and all that. So the buffer so the cash that was raised by India was a buffer. It wasn't to fund exits. This time you're raising cash to basically fund exits. It's ridiculous. So my view is that you have to stop the stock market from providing these easy exit liquidities to FII. In doing so, of course, you'll have to raise rates on mutual funds and do whatever. I mean, I'm not the policy maker. Let the market fall. In my 35 years of this business, I know FIIs walk in when there is a big market crash because everything then changes. So that AI trade will then, okay, AI is risky. India has fallen 30-40%. Let's go back in. That's the way you will solve this problem. Otherwise, raising liabilities to fund exits is absolutely not a winning game.
No, but how do you let the market crash? Then it comes down to the domestic Indian investor who has stood up in the last 5 odd years.
I don't like this term stood up. What do you mean stood up? Market mein, you're not going to get paid to be brave and all that, yeah?
But they've come
this
to
is
the
not
table.
This is not the army or the soldiers fighting on the front.
No, I'm agreed. I'm not
Ki
saying...
ja rahe hain ye foreigners and we are, fighting them.
Okay, so let's remove the morality from it. Let's remove all of that. But the fact is that they've come here for a reason, right? People are investing for a reason. They saw their FD returns. They want to make more money in their lives. And they're coming here because they've got returns. They want to be there when this dip comes. That's why you have people putting money in SIPs. Why should they walk away right now?
I'm saying they don't have to walk away. They need to be slowed down. Now, either it slows down on its own. So you saw that SIP closures exceeded the new openings, I think in April. I don't know what the May data will show. If it happens organically, well and good. But probably it won't happen so easily. In the interim, you would have bled another 30, 40, $50 billion of hard currency. India cannot fight a two-front war. You can't fight currency. In fact, three-front, bond market, currency, and of course the stock market. If there is one lamb you have to sacrifice the equity markets. They always come back. Always. There is no history of civilized markets where markets crash and they don't come back. Saal, 2 saal ke baad mein everything comes back. So you also give the locals a chance to buy cheap. What's wrong with that?
Okay, and what would be the mechanism of sacrificing this lamb of equity markets?
Simple. Taxation is the best mechanism.
You think tax more? Entire market is saying tax less.
In the 90s, when India opened up to FIIs, FII taxation was zero. It was on paper something, but through Mauritius, they could take advantage of the DTA and come with zero taxes. Domestic investors were taxed 20%. So the differential was a 20% differential. I am saying we needed dollars then. We need dollars now. Just do it. I know it will not happen because all of you guys will start demonstrating in front of India Gate and all that with candle lights and all, which is what people do.
Market participants don't demonstrate anywhere. They demonstrate on
they
Twitter.
Do it only. I mean, people do it for stray dogs, I think.
On Twitter. Yeah.
So I think that's the only way. You need to disincentivize this engine. It is a runaway train. And it is causing a macro problem. If there was no problem, I wouldn't be saying that. But I'm saying you have $550 or $600 billion of reserves. They are rented reserves. If they keep flying out the door at $500 million, $1 billion a day, you're not going to be left with a lot of it by the end of the year.
Okay, queries flying in and we'll get to them. But first we're going to go in-house and of course our entire team here. Hiral, we'll start with you.
Hi Shankar, this is Hiral here. Your point taken when you're talking about what needs to be done with SIPs.
You have to take my point.
No, I want to counter this.
Okay.
You're saying at this point in time, SIPs need to slow down. I was just picking up a little bit of data where your fresh SIP registrations have hit a 3-year low. Your SIP stoppage ratio has risen as well because it's gone up to 101.1 in April versus 52, 75, 94 between 24 to 26. Does this mean that this is the starting point and from here, slowly, steadily, staggered way, you will see FIs coming back? Because this is exactly what you're alluding to, that SIPs somewhere have to come to a standstill.
Look,
people are not putting fresh money. And two, the other point is you've called India a haunted Haveli right now. So what is it that FIs are seeing which domestic investors are not able to see? Or are they also starting to see that?
So that's the point. I was chatting with Tamanna before the program started that last 24 months in my personal investing journey on the global macro front has been the smoothest ride I've had in a very long time. The entire world has been having a party. Entire world. India, unfortunately, along with maybe Philippines and Indonesia, are the bottom 3 markets out of 40 markets that I invest in. Bottom 3. India has never been in that position to the best of my memory. It's been middling to the top end of the markets. First time, and this is therefore the problem, the haunted Haveli thing is because you're not part of a large group of emerging markets that are underperforming. You're just in a pack of one. That's where the problem is. If you were a larger pack, no problem. Now, question is why? The question is obviously, AI is one angle, domestic growth is another angle, currency. All of that put together tells me that you have a problem, recognize it, but the solution is not going to be raising more FCNR or doing a Resurgent India bond kind of thing, because today's environment, is not 2013, where rates were too low, the spreads were very wide. As a non-resident, I could get a lot of leverage and lock in 4%, and you were levered 5 times, 6 times, you're making 20%. Today, you will not make that. So what is the solution? The solution is either organically mutual fund inflows stop or come down, or you make them come down. Now, organically, it will drift down. I think it will. My take, over 12 months. By that time, you've lost $100 billion. As I said, still have $800 odd billion to go from FIIs. You don't have that much cash to just keep putting out and giving foreigners easy exits. There's a huge wealth transfer.
No, but okay, so as an FII, as an NRI, how attractive, or what is your assessment of all the moves that have taken place in the last week or so, what the Reserve Bank of India has done, the removing of taxes on investments into government securities? How do you assess those?
Okay, so let's take that one first. In my view, that is a good move, but the point is Indian bond yields are artificially low. It was 7% or so, 6.5%, 7% when the currency was 84, 85. It's still the same. When your currency falls, your bond yields have to go up to compensate. Here, that compensatory mechanism has not happened because the RBI is obviously keeping the yields low. Therefore, it's not attractive enough for 7% rupee yields for any FII when your bond yields in America 4.5 or 5, depending on what maturity you take. It's not a good enough reason for people to come into the bond markets. One very important thing, the total bond market investments in India from the time it started is only about $75 billion total. Oh. And that, out of that 1 year, I forget which year, was $28 billion. That's your total data of flows into debt markets. That was when we were not in a fragile one kind of situation. So put it in context here. I mean, the market is telling you 7% yield is not attractive for a dollar investor into a domestic debt markets. And from the FCNR part, I don't know what banks will offer. Maybe they'll offer 6% or so. But the funding cost is going to land at my doorstep as a non-resident at maybe 5.5%. The spread is 0.5%, maybe 1%. Is that good enough to bring in 50 billion? I would be very, very surprised if it does.
Okay, so that is not necessarily the most attractive thing. Let's get more questions in. Alex.
Hi, Shankar. Alex here.
And let me add to that. You put a duty on gold, what, 15%? Correct? So what's a holy cow thing about equities?
I was actually going to ask about gold. So
I know what you're going to ask.
You can actually read my mind.
Exactly.
But so you've spoken about the equity market, but why not curb gold, right?
Because they've done it.
They've done it, but why not stop completely?
You
What's
cannot
the harm?
stop
It's not
it.
a productive asset. It's not a productive asset.
It's productive for the people buying the gold. It may not be productive for the government or for the economy in the sense you think it is. But for people buying gold in India, that's the only pressure cooker steam let off that exists to protect your capital from a dollar appreciation against the rupee. There is no other tool available. Otherwise, India's financial markets are all about financial repression. Correct? This was the only route. Now you have taxed it. Now you want to stop it.
Counter to your mutual fund point, hybrid as a category is now a pretty large category, right? You talk about balanced advantage funds, multi-asset funds, etc., etc. These invest in government bonds as well. Big buyers of government bonds.
Sure.
So if you stop SIPs, and there are quite a few SIPs that are now going into these hybrid funds, you stop SIPs or you curtail fresh flows into mutual funds, you don't have a buyer for government securities in India. Isn't that counterproductive?
I don't know what the data is about how much goes into GSECs from the mutual fund part, but I think we still have a large body of potential or real investors from the mutual, from the insurance company, pension funds. So there is still a large enough body, and then you can channel them through debt funds. So hybrid is and balance is a different animal, but nothing stops you from investing in a. Do that, fix that, increase equity tax, reduce the bond tax, as you've done for FIIs.
The point about, and you said that there's no army coming in, and you shouldn't look at it that way, that domestic Indian investors should come and fight off the foreigners, etc. Okay, that's, I agree with you there, it's misplaced. But the fact is, and we've seen this for the last 20-25 years, this cry that not enough Indians invest in equity markets.
They should not.
Of the markets. It's shallow. Finally, they've come to the table and you're saying, "Band karo." Or at least,
You want to hear my real view?
Always.
Okay.
Only real views
My
here.
view is equity markets are meant for big boys and professionals. They're not meant for Mr. Joe on the street. Because the data does not support equity investing for the retail investor. Best case you make maybe 10, maybe 12%. Those days also, in my view, a little bit of a hindsight and past. If you're going to make 10%, 12%, 11%, minus the tax of whatever 15, 16%, you're left with 9.5. Divide that by volatility. Annual volatility is about 15, 20% in India, historically. What are you left with there? Nothing. You cannot on a risk-adjusted basis beat even a fixed deposit, because in fixed deposit, you have no risk to begin with. You have no volatility to begin with. If you do it in a decent bank, you'll get your capital back. So you have return of capital and a return on capital. In equity, potentially best case is a 10% headline number, 11%, minus the tax, divided by the volatility, you're left with not much. So that's what I have always believed for 35 years. All my relatives, my friends, they have pestered me over decades. And I've told them, Khabardar, bhi baat bhi mat karna equity market kabhi. And today they thank me. And I've tweeted this, my sister. We had gone to for a holiday in Bali. Arey, Papu, you never tell me any tip. I said, Didi, if you want me to remain your brother, you're not asking me for stock market tips. Because if it has reached her, that means this thing is out of control anyway.
To be a fly on the wall on those family holidays. No, but I don't know. So we have a lot of viewers who are coming in. I want to know their views on this as well. Cut to 2 years ago. And
look, I know you are catering to the retail public. I should not be saying this.
No, we
but you asked
all
me,
views.
you called me, so you will get exactly what I think.
That's
right?
perfectly fine.
Yeah.
You don't have to apologize for your views. We're here to listen to your views. What about the people, the Mr. Joe and Ms. Jane, who made a significant sum of money when they came in COVID? They did make money if you remove the last year or so, and maybe some of them are still sitting on profits, and they saw their lives change. They saw potential open up, which they couldn't before.
I don't disagree.
Are you saying that was an aberration and can never happen again?
No, I don't think it's an aberration, but it doesn't happen as frequently as people think it should happen. Over 35 years, we have had one good bull market. 2003.
In how many years?
36 years.
In 36 years, we've had one good
One solid, proper, kosher bull market, which was the 4 to 8 bull market, in which it was a big, broad bull market, small caps, mid caps, large caps, of course. They blew out the lights. Uske baad mein, you have had virtually no returns till 2020. .com I don't count as a bull market. It was just a bunch of stocks across the world in tech, but the real economy, EPS numbers were all flatlining. There was no growth. It was all of, I think, 1.5, 2 years. So nobody really participated except again, like I said, the big boys. So remove that. Harshad Mehta, again, we have to remove for obvious reasons. You're left with one bull market, and then we had this one, okay? Which actually, in terms of returns, gave you virtually 40% less returns for the 4-year period that it lasted as compared to the 2004 to 2008. It will not replicate itself again within 2, 3, 4 years. I have given a view 2 years back that you will not see much headline returns from the Nifty for the next 5 years. That was in 2024. You can see we are already halfway there. I don't think anybody in his right senses can think, barring some people who predict 130,000 on Nifty or Sensex or whatever it is. At least I'm not in that camp. You might go back to 85,000 Sensex where the bear market started. So bottom line is, for people thinking the last 4 years, the previous 20 to 24 will replicate itself, it will happen, but it will happen after a long time. Do you have the staying power for that? How many people? Look, India is still a lower income country. Equity markets are meant for high income countries. So you can say US equity ownership is 60%. They are rich. It's 100,000 per capita, social security, Medicaid, there's nothing. And now you have an EMI equivalent of an SIP going out of your bank account every month. Sooner or later, you will ask the question, what am I getting in return of this? So my view is equity hona chahiye. Not to say, that's not a correct view.
I was going to ask you, are you a bear in this market
No,
right
I'm
now?
not a bear. I've been putting in money. I put in like 100, 200 crores from the bottom of the March. I tweeted also on March 11th. When people say bear or bull, I am both. So I'm a hare, as I always say. I'm bearish on Indian large caps. I'm very bullish on Indian small caps. But how many small investors can play small caps? It's not possible, right?
You know, I actually have a question from Prashant. He's writing in from Bangalore and he's exactly asking this question. Where within small caps should investors put their money? Shankar, after this gloomy picture, you have to give them some ideas.
It's not gloomy. It's cheerful picture.
After this realistic picture from your point of view, you
Much
have
better.
to also give them something to take away. So he's exactly asking this. Where within small caps should investors put their money?
No, like I said, it's a professional's game. You can find a good small cap manager. You can find,
What have you
PMSs.
found exciting? And if you don't want to take stock names, at least spaces. What have you found exciting in the recent past?
My view is that in India, the trade that will play out and play out well will be anything to do with technology, because we are underrepresented in tech in India. That's been my bet over the last 2 years in this bear market. I put money into what I consider Indian tech companies, not IT services. They are smaller hardware engineering companies and stuff like that. I put in there. I think that is still the only place you will make good money. Other than that, buying a domestic retail business or another apparel business, this and that, I think consumer side is going to be badly hurt. We know that. You can see that. Tech mein banega paisa. 100%.
Commerce is not exciting you?
I mean, it excites me to see the kind of prices they offer me on my app. But other than that, I don't see how on earth this business has any meaning at all. I don't think it can make money or not make money to justify the valuation. And that's the other problem. We are still a damn expensive market. If you compare our, these platform companies or whatever it is to global, there's no comparison. And I'll tell you, give you one example. In the 90s, when markets were just opening up, our commodity companies, so the Hindalco, Tata Steel, Yevo, they used to trade at 20, 30 times earnings, 90s. When the FIS came in and we said, sir, this is a great buy, that is a great buy, Hindalco this and Indian Aluminium this, and you guys are nuts. I'm 30 times for a steel or a aluminium company. I said, but India is expensive. They said, wait, give it 5-10 years, you will all trade at single-digit multiples. Exactly in 5 years, they were all down to 5 times, 8 times, more globalized convergence of multiples. I see no reason why our platform or these so-called new tech companies will command these kinds of valuations. They will compress down to more rational levels. That's the real problem here. And now you got a few of them in the Nifty, by the way.
That's true. Okay, we're going to take a very short break. We have a lot of questions coming in on all our social platforms, questions here in the studio with the one and only Shankar Sharma. Don't go away. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
we'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Welcome back, Shankar Sharma in our studios. And if you want to fire in a question to be part of what is already becoming a very, very interesting conversation, I can already see all the comments that are going to come to some of the things that you're seeing. Well, here's what you do it. All of those lines on your, all of those numbers on your screen. Okay, we're going to start with a question from our team NDTV Profit. Sharad Dubey is coming in with his.
Hi, Shankar sir. Sir, we spoke a lot about the secondary markets, but primary markets is also where a lot of stress is there. We have overpriced IPOs coming in, MNC IPOs especially, and right now they haven't even touched their IPO prices. All of them are down 30-40 odd %. So there is a liquidity issue, do you think? And even you can see QIP deals are also happening where DIs are participating. So how do you see this liquidity moves happening, especially at these expensive values?
No, I just think in the last 4 years, 5 years, I was going to tweet this, but I'll say this now, that I think SIPs have been a great product. I mean, they have made a lot of money, except they have not made money for the SIP investors as much as they have made money for VCs, PEs, family offices, and of course FIIs. So it's a great product for the 4 major selling groups. So IPOs have been OFSs in reasonable part. Of course, the family offices have cashed out big time because somebody made a plastic business, paper business, this business, and they had no clue, no hope they would ever get these exits. And now suddenly they're $1 billion, family offices. All that money has been given through a wealth transfer mechanism called SIP to all these informed investors. As I said, secondary is a problem. Primary has been equally a problem when through aggressive marketing, and mutual funds are also just the front face for the average investor, right? So anchor books, retail participation, retail frenzy, this is all gone totally bonkers. And 10, 20 years from now, when they write the new chapter for a book, which was a popular book back in the day, Extraordinary Popular Delusions and Madness of Markets, I think this is going to be the first chapter, when how the average Joe really gave fantastic money-making opportunities to these 4 most, let's say, of the group. Who do you think are the smartest? These 4 categories. And you gave them exits, right? So the IPO market must also collapse. I don't think anybody should be in the frame ki nahi IPO market je dead ho gaya, it's very bad. I think it's a very good sign. Let it mature down to more reasonable valuations when they're leaving money on the table for people. And for God's sakes, don't please approve the big mega IPOs that we are now hearing about. Delay them by 6-12 months. Otherwise, we are going to lose another 10, 20.
There's one DRHB filing today.
10, 20, $50 billion, it'll fly out the door. So unko delay kar do, kuch query nikalo, kuch kar do. But I don't think it's a good thing for the country to bring in these mega IPOs where the exiters will get fantastic numbers, the dollars will flow out. So IPO market moderation is an equally desirable outcome of the current bear market. We need to conserve our capital. We are just blowing it up. It's ridiculous. At least iPhone kharid rahe ho, you got something in return. Idhar mein to just, what do you have? You just have vapor.
So how does the average Joe then make money? So at the end of the day, the query is there. You're saying IPOs, bad idea, good only for FIIs and other investors, family offices, etc. You're saying markets are treacherous terrain right now. SIP is like a forced EMI. Kahan paise banaye?
Good question. I believed gold is a fantastic investment by and large for Indians, even with the duties that are in.
Even now?
Even now. I mean, it's not going to give you the returns it gave in the last 2.5 years, but it's still a pretty good area. Real estate is a very good area. Bank fixed deposits, good corporate deposits. Those are your assets I would think should be 80-90% of an average investor's portfolio. 10% you can do mutual funds and all that. My sense is people have gotten marketed to very aggressively in the last. It's been a fantastic marketing game by the whole fund management industry, and kudos to them. I don't blame them. Please understand that they are doing a business. Like the merchant bankers who sold overpriced IPOs, I don't blame them. Unki kya galti hai? They are doing a job. It's your fault if, like an idiot, you went and put in money into all these IPOs and kept, buying all the SIPs. That's your fault. I think ultimately India will remain a financially repressed market when your returns will not come that easily to you. It's a pure financial repression. And equity markets is the place which is promisingly so that wahan nahi hota repression, you will make money. The unintended consequences, you're not making money, but the sellers are. Family offices, VCs, Ps and FIIs.
Let's go into how you're looking at Indian markets right now, and spend the time that we have talking a bit about that. A lot of things externally have been a pain point for India. You have this geopolitical crisis. Actually, in our extended neighborhood, oil prices have gone out of control. The rupee, as a result, has been depreciating. And then there is this whole AI wave happening, and then we've been left outside that party entirely. How much of it can we recover from, or do we have to wait for these mitigating factors to fade?
Okay, if you want it from a data standpoint, I'll give you the answer. And the other night I was sitting with a very old friend of mine who has been an FII for 30 years. And he was saying, look, the weight of India in the emerging market index, MSCI, I think about 11% now. Most funds in the world are underweight India. They have about average, median fund is about 8% weight. So they're 3% underweight, okay, in terms of India. The question is that 11% weight of India in MSCI EM, everybody is at 8. At what point do FIIs say it's time to neutralize our underweight and go to equal weight with the MSCI index? It's still a large market. You cannot ignore India. In my view, you can hasten the process by engineering a market crash, meltdown, whatever you want to call it. That will bring back people, because suddenly that 11 would have become 7 or 8.
Why should we as domestic investors suffer for FIIs to find this market more
appetizing? You will suffer anyway. I mean, look, do you want to run out of foreign, the precious rented capital we have in our forex reserves? You have to make choices. As a patriotic Indian, everybody must say ki we are not going to participate in this ridiculous thing in which FIIs keep taking dollars out of India.
By what? By not doing SIPs?
Yeah. Not doing mutual funds. I know none of my CIO friends will be liking me much after this, but that is the reality. That's just the plain math.
So you are saying...
Let me also clarify one thing. मेरा इसमें कोई self interest नहीं है कि SIP बंद हो जाएगा तो मुझे कोई पैसे आएंगे. I am a foreign investor. I am neutral to all the domestic, all of this. I say this with complete neutrality. The way to save forest reserves is you have to plug this big leak in the boat. So आप boat में बैठे हो, there is a big leak happening and you're plugging it with little FCNR, this and that. वहाँ पर पानी निकालते हो, वो पानी वहाँ से घुस जाता है. You have to stop this. This is madness. Now your question है बाकी पैसे कहाँ बनेंगे? That's not my problem. Really.
As an FII.
I'm saying even as an Indian. Why should you just go into something just because कि मेरा यहाँ नहीं बनता, वहाँ नहीं बनता? यहाँ भी नहीं बन रहा है.
Okay. Let's come to more questions inside and externally. This is an interesting one because we spoke about AI as one of the factors, which is why Indian markets are not looking as interesting. Atul Ahuja from Delhi is writing in. He's asking, is AI the future of tech or another bubble in the making? I want to couple this with the gigantic IPOs which are out there, the public offers in the American markets. We were speaking to someone from BlackRock yesterday who's saying this is a literal phone call to global fund managers saying, show me the money. If you have a SpaceX, Anthropic today, OpenAI has talked about it, and that's where the capital is going to flow.
Yep.
Do you think it's a bubble or is there something real there?
No, it could be both. I mean, why do you have to choose? In my view, the valuations that SpaceX is asking for is absolutely batshit crazy. It's ridiculous. I mean, and if you look at the prospectus, I've read excerpts of it here and there, it sounds like Tennyson's poetry. And I mean, this is not a serious financial document. But hey, anything to do with AI is getting capital. We've seen that in the dot-com boom. When anything to do with a website was getting capital, it did not end well. My suspicion is this will also not end well.
So as a foreign investor, you're not investing in SpaceX?
No chance.
Anthropic, OpenAI?
No chance.
NVIDIA?
No. I have got
TSMC?
I have TSMC. I have Intel. I have a lot of semiconductors. I don't have NVIDIA now. I exited around $180, $190. It's up, I think. It's about the same or maybe $10, $20 more. So semiconductors have been a big driver of my profits from 2023 when the SOX index started to go up. But I'm not a believer. Look, I'm an investor. I don't have to be a believer.
Fair.
And I believe nothing, but I play everything. That's my philosophy here.
What are you?
Believe तो तिरुपति बालाजी के पास करेंगे ना ये स्टॉक मार्केट में क्या बात का बिलीफ
नहीं अच्छा तो बिलीव छोड़ो यहाँ पर इंडिया में क्या अपॉर्चुनिटी लग रहा है? You talked about some smaller
power
IT
equipment
companies.
sector looks good to me because again India is building data centers. I think that will be a structural demand in terms of everything to do with power and power supplies, cabling, optical fibers, equipment that supplies the plumbing to data centers. I think that's a good theme. I don't want to say 5 years, but at least 1 year, it looks a pretty predictable theme. And you can call it an extended tech ecosystem. That looks good. I mean,
That's run up a fair bit.
I still think there is headroom because India will attract a lot of capital in terms of the data center part, especially given the problem in the Middle East, where obviously we know data centers have become a kind of a target.
Yeah.
Right? So that might well move, and it's moving also. So I think that is a good trade, broadly speaking.
Where are you on the Indian IT debate? That Indian IT companies, will they survive? Will they not? Will they adapt?
Good question. My sense is, again, no, I'm not making a big forecast here. My sense is, and Mr. Chandrasekharan wrote a very nice piece yesterday in, I think, Business Standard. Of course, he has to write that as an optimistic perspective because obviously, TCS is the crown jewel. The reality is that implementation will require Indian IT services to implement the AI models. The thing is, you will get a compression of top line. You will not get top line growth. Margins may well might hold up because of the rupee. Because this year, they have kind of managed to keep their head above water because of the rupee. If the rupee actually stabilizes, then next year your numbers may not look that good. So I think IT services, and then somebody was telling me yesterday that the free cash flow yield used to be 8-9%. I don't know what it is now. But he was saying now the free cash flow itself is in some degree of danger. So I don't think it's a great trade. There will be need for them. I don't think it's going to go away, but the go-go years are behind them. They'll become utility stocks of the overall tech ecosystem. Let's put it this way. That said, I must say this. There's a lot of unfair criticism about these companies. They did not invest in AI and kuch nahi kiya and we lost the race. So I was telling a friend that this reminds me of a cricket match, a test cricket match, in which India was supposed to make some 120 runs and we were about 90 for 6 or something and Kapil Dev came out to bat. And he played a very rash shot and he got out. And that evening's press conference, everybody, 1 billion people piled onto him and said, kya faltu shot khela yaar? You should have 30 runs to go, you should have played better, this, that. He listened to it and they said, okay, now enough ho gaya, now listen to me. Boss, I'm a fast bowler. I was never a batsman. Just because I got some 30-40s here and there didn't mean I was a batsman. वो जो पहले के जो 90 for 6 के जो out हुए थे उनसे पूछो ना मेरे को क्यों मार रहे हो यार That's the same analogy I give for Indian IT services. They set out to do a body shop model. Did they do that well or not? Answer is an unequivocal yes. They transformed India. They did far better than even they thought they would. They did far better than what even we thought. After that, you expect them to again leapfrog to the next generation, bring AI model. तो बाकी 150 करोड़ आदमी क्या? They'll sit and twiddle their thumbs. What rubbish is this यार? वही 4 कंपनी के ऊपर पूरा देश चल रहा है क्या? अगर उन्होंने कुछ नहीं किया आईटी में, अपना एआई में, डेटा सेंटर में, तो भाई हम तो बाकी तो कुछ करते ही नहीं, हम तो खाली फूड डिलीवरी और एल्गो ट्रेडिंग के ऐप्स बनाते हैं. That's ridiculous, unfair criticism. They did their job. They've done a fabulous job. Their business model is no longer going to be the same. Accept it. But बाकी लोग क्या कर रहे हैं? इतने आईटी के इंजीनियर क्या कर रहे हैं?
तो वो सब प्राइवेट स्टार्टअप इकोसिस्टम में है. That's where family offices are making money.
Startup का क्या मतलब होता है? Last I checked was that Mr. Adani had gone to some startup place where there were 15 founders. वो मैं देख रहा हूँ उसमें कोई राइड हेलिंग है और कोई अपैरल कंपनी है. I said these are not deep tech startups, boss. These are not deep tech.
Okay, so a lot to unpack. You have just about 15 minutes with Shankar Sharma. Give us your questions. We're taking a very short break and we're coming right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll
All right, we have the NDTV Profit Town Hall with Shankar Sharma. We're taking your questions. Our team is asking all of the questions and he's not holding back on any of the answers. In case you missed it so far, you talked about power as a space that you found interesting. Vikas from Pune has written in saying, is there genuinely a boom in the power sector or is it overhyped?
No, I do believe there's a genuine boom. And it's not just an Indian boom. A lot of the power companies that I know are also supplying to Europe. Okay, so it's a genuine boom. Like I said, I'm not making a prediction that 5 years from now it will be so, but I think 1 year numbers for all of these companies, I don't want to name them, there are a lot of MNCs, there are a lot of domestic companies. I think that space looks very, very good, even now. That is a good area. Again, like I said, all the plumbers of the AI boom, there are quite a few in India.
Okay. So power is one, you would say, your wires and cables, your cooling solutions, those kind of ideas.
Exactly.
Is what you're saying.
Look
as well.
hard. Today with AI, everybody can go and find out which are the beneficiaries of AI in India. We don't have a pure LLM play, but the plumbing plays, in my view, are actually much safer.
Yeah.
Because वो fail करे नहीं करे, मेरा तो plumbing तो हो गया ना building में. So go for the construction part of the building rather than the storefronts. I think India does offer plenty of plays there. That's where the real money will be made, and it's been made also.
You think the story has moved sharply to small caps and large caps, with the Nifty in that sense losing favor?
Absolutely. On March 11th, I tweeted saying that, in my view, the money to be made in India is going to be, in small caps. And from March 11th, if you see, they're all nudging their highs. I mean, even just the indexes, stocks have done phenomenally well. I mean, across the board, wherever there is some tech involved, there has been a very, very strong move up. I think that is here to stay. So the Nifty looks aging, but below that, I think there is a vibrant bull market happening. Now, it's for the viewers to do some hard work, heavy lifting, and figure out those spaces. I've given broad ideas of where the play is going, but there could be newer plays coming up. But we'll see. But my point is, it's not that India, there is no money to be made. It's just that in this kind of market, the opportunities shrink. But they exist. It's still a fantastically broad market in terms of choices.
Top choice for a lot of institutionals when they come out with their annual notes and their monthly notes, etc., is financials and the big, large private banks. Is that a space that has ever excited you?
Not at all. I mean, it has excited me a lot. I mean, HDFC Bank has been my favorite bank for the longest time. Not as a customer, by the way, but as an investor.
Yeah, you actually have a question from Abhishek. View on banks, especially HDFC Bank, after the recent
See, I'm
issues.
telling you the questions before they come.
After the recent issues, he's added. So he's added a bit of that as well, all the controversy.
No, I don't like the Indian banks. I just think the best years of banking are behind us. If you look at the whole lending spectrum, MSME is where they intend to grow, but in my view, that's the riskiest part of the whole spectrum, apart from the unsecured loans on the consumer side. I just don't see where the play is there. So I would steer very clear of financials.
Including NBFCs.
Including NBFC.
Capital market plays.
Capital market play I don't like. I think, again, the best years are behind them. So I'm just saying, forget about this. So in China, they have a very nice term for this. Right from Xi Jinping. He calls these businesses fictitious businesses.
What do you mean fictitious?
He's a bakwas hai. What rubbish financials and AMCs and wealth managers. China can't become a superpower based on these. We need hardcore tech companies, which is why they have progressed so much in the last 10, 12 years. I still think there is a merit, there is a grain of truth in that. All these businesses are bull market businesses. We don't have one. Forget about them. They're yesterday's trades. Move on. In life, you need to move on.
Okay, let's move on to the next question. Nimit and Puneet both have questions. Let's take them one by one all together.
Hi, Shankar. So just to question you a little bit, you said the big boys, the market should be left to the big boys. I put to you that in difficult times, the big boys are often the first to exit the market, and it's the domestic cushion that we have now that keeps the market from tanking. And retail, and there are studies to show that long-term retail.
You can also call, instead of cushion, you can call it a punching bag.
Either ways, there is a bag between
it's
your
a fine
face
line,
and the punch.
Right?
There is a bag
They're
between
taking
your face
punches.
and the
They
punch.
become a punching bag.
Fair. There is a bag between the face and the punch. But in any case, long-term retail investment in India, even if you look historically over the last 20 years, it has worked. Second point is, you say that right now retail investment has become too much. Fair, it has become too much. But the problem, the solution that you give is that retail investors should stop.
What's the question?
The question is, I don't think that it is a problem that retail investors should stop. Maybe long-term investment needs to be incentivized more. It's not that retail investment needs to stop, right?
So
that seems outlandish because it has helped us in the past.
So your question is, why are you saying what you're saying?
Yeah, and FIIs seem to run away as well in tough times.
So it's good, no?
So then there's
why are you giving them the dollars to exit? Back in the day when I was active on the sell side, running an institutional broking house, we never had retail money coming in to bail out FIIs. कोई FII phone करता था, I want to sell 5 lakh shares of Bajaj Auto, is to say कि boss, then do one thing, Manhattan में next office में this guy is buying, call him up and give him a good story. He would call his friend up, they all stab each other in the back, and the friend would then place an order and this guy would sell. So dollar to dollar, kuch nahi gaya, wahi dollar aaya and dollar has gone out. That's the right way to do this. If India starts to fund exits at the scale it is doing, we don't have the cash. Long story short. What you're saying is right, but what is the solution? You have $550-600 billion left. You're hemorrhaging $500 million a day. Please think about that. Can we afford a currency crisis? If I have a choice, I would rather afford a stock market crisis. They almost always come back. But currencies rarely recover to the pre-crisis levels. Look at the history of currencies. You will have hardly any examples that currencies after a big collapse recovered all the losses and then went up. It doesn't happen.
Okay. We have a few minutes left. I want to give Varsha a question and Puneet a question. Ladies first, Puneet. Let's go with Varsha.
Hi, sir. So you've been bearish on Indian markets and that has...
No, I am not bearish. I am harish. I am harish. I've been bearish on the Nifty. But like I said, from March, I've been very bullish on small caps.
I just wanted to understand. So you've been, I would say, bullish on power and IT. What about healthcare? You know, no Middle East crisis would impact the diagnostics or hospital companies when it comes to India. So just wanted to understand what is your view when it comes to the overall healthcare?
So healthcare is a very wide space. I mean, I don't know what you're talking about.
Hospitals, diagnostics, and of course, pharma companies.
So, I mean, a lot of the traffic was coming from the Middle East also in terms of medical tourism. Domestically, of course, we know that these are fairly structural industries. Whether you'll make a lot of money buying them now, I'm not a believer in that camp. If you say 10 years from now, maybe. But remember one more thing, very important. Most of our healthcare, especially the hospitals, are now also owned by the private equity funds. Yeah. So if there is a bull market, they will sell and again the dollars will flow out. Please don't forget this important fact. कि क्या ले रहे हो, उसके सामने कौन बेच रहा है? Please, now that is a genuine factor, which is what I said. The mega IPOs should be deferred.
Mega IPOs, we have headlines after headlines from this town hall. Puneet, very quickly, we have 3 minutes left.
Yes, just one quick question, because you spoke about IT and banking, but do you feel that there are some dinosaurs currently in the Nifty 50 and we need to change some way in terms of regulation that composition of Nifty 50 so that you can see the exposure? And the second one, and sorry to interrupt, but you said small caps continuing and tech being a factor. So do you feel that spaces like the mid and small cap, healthcare, auto components, defense are some of those plays that you like, or do you feel some have run up quite a bit for the average Joe?
Thanks for his answer also.
Yes.
Okay.
Defense has run up a lot. I'm not a big believer. There are good defense plays. I bought a couple recently. They're more reasonably valued. As far as Nifty's composition is concerned, I think the index committees are there and they keep taking out old companies, bringing on the newer. That's a matter of process. It'll happen, which is why you had Zomato's entering and I think JSW exited or something like that. So the natural process here, it will happen over a period of time. But before that happens, we can't keep waiting. We have to go under the surface of the Nifty, pick up the winners, and I've given you a decent basket to choose from. That all things relating to infrastructure spends on AI, there are good plays in India. You can fill up a decent portfolio with that much capital.
What in the consumption story do you think is relatively undiscovered? When I say consumption basket, okay, widened autos, OEMs, ancillaries, then you have FMCG, you have the entire consumption basket.
Auto ancillaries have looked good. I've got a couple. Autos, I know they're doing very well. I mean, we know the numbers. I think they're big beneficiary, probably the biggest beneficiary of the GST cuts. I don't think any other sector has benefited as much as autos have. But it's just out of my radar for now. I look at companies which will be more plumbers rather than the brand owners. So even in autos, you have ancillaries which are doing well. I mean, there are a couple of very interesting plays out there. Smaller companies, but they look very, very good.
One closing comment before we wrap up. Do you see the situation as we are in now for Indian market, say for the next 6 months, if I were looking at December 2026, as improving from here, staying the same or potentially worsening?
I think Nifty might be lower and small caps will be higher. That's my clear view.
Wow. So that's clear and precise. Thank you so much, Shankar, for coming in, taking all of our questions. Okay, we have a little clap from the audience, and over here our team, much deserved.
You guys are just babies here.
Well, thank you for taking all of our questions.
No problem.
Great to have you here.
Great.
That's all the time we have on this town hall. Tell us what you think and what you would like to ask our next big speaker on the show. Thank you for joining. We'll take it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
US President Trump says Iran and Israel have halted hostilities and signals that a US-Iran nuclear deal could be just days away. Trump also hints at a total victory declaration within 2 weeks, with talks progressing well. Benchmark staged some recovery on Dalal Street, with the Nifty above 23,100 and Sensex gaining over 100 points. PSU banks, auto and realty lead the gains. IT remains on the back foot today. Banking stocks surged after the RBI unveiled a concessional forex swap facility aimed at boosting overseas fundraising. The move lifted the sentiment across the sector, with most bank Nifty constituents trading in the green today. TCS AI strategy took center stage at its AGM, with the company highlighting the launch of sovereign AI infrastructure for India. Management also said that AI is increasingly moving into the physical world, while demand for AI-led solutions continue to drive the steady revenue growth. Oil prices ease after Israel and Iran agreed to halt attacks, raising hopes of a broader de-escalation in the Middle East. While Brent slipped towards $93 a barrel, supply concerns persist as the Strait of Hormuz remains effectively blocked. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take a quick look at the market at this particular time. And yes, from the low point of the trading session today. And remember, the day has been quite volatile, as you can see there. But there is a huge amount of exuberance in terms of the recovery from the lowest point of the day when we talk about Nifty 50. So 23,191 levels, just shy of 23,200, 0.3% up on Nifty 50 at the current moment. And there is recovery seen. Let's see what's really adding to the constituents of Nifty 50 and the benchmark indices. It's the banking pack because of the RBI's decisions on increasing the fund flow that are really showing the impact on the big banking names, especially coming in from the larger banks, which are constituents of Bank Nifty. ICICI Bank is the top gainer. In fact, if you really take a look at Nifty 50 and out of the few points gained in Nifty 50, a large part is really contributed by ICICI Bank and SBI Bank. Both put together are really adding close to about 30 points to Nifty 50. Apart from that, also Larsen & Toubro, Mahindra & Mahindra from the aviation space, some good news. Indigo is also in the green with its vision statement that it had really spelt out. Also remember, on the downside, HDFC Bank is an outlier or is going against the tide. It's a contra call on that. Infosys from the IT pack is also on the downward trend. When we really take a look at the overall picture, it's Bank Nifty which is really taking the charge in the overall market momentum, with a huge outperformance to the key indices today, and 1.5% up on Bank Nifty. When we talk about the mid-cap universe, also it is 1.2% up. So therefore, there is huge amount of action as well as buying when we look at the broader markets today, while the benchmarks have been a little lackluster. All right, oil also has a huge role to play, and there is a little bit of softening owing to the global cues coming in. US President Donald Trump says that the US is in the final stages of a deal with Iran that would really prevent Tehran from acquiring nuclear weapons, adding that the Strait of Hormuz could really reopen immediately after an agreement is signed, possibly within days, is what he says. But even as diplomacy really gathers pace, tensions remain high when we talk about the Middle Eastern situation, and Iran as well as Israel have really paused direct attacks. Yet Tehran has really warned that military action could really resume if Israeli operations really continue. So Iran has also accused Israel of repeated violations, raising fresh questions over the durability of the fragile ceasefire. All right, so let's hear out the US President Donald Trump on Iran and Israel war, and they have agreed to halt the hostilities following his intervention. He also signaled that a US-Iran nuclear deal could be just days away. Listen in.
He was hit and he hit back, and I can't blame him for that, but he was hit, he hit back, and now they've called it quits. So they're going to just leave each other alone for another week or something. It's been going on for a long time. You could say about 3,000 years if you really want, but certainly it's been going on for 47 years. But no, he hit back. They were going back and forth, and now they both agreed through me to stop. And we're in the final throes of what will be a very, very good deal that will not allow in any way, shape, or form nuclear weapons, etc. And the strait will open up right away. It'll open up immediately upon signing, which could be in 2 or 3 days.
Right, so some de-escalation, and that's good news. And the crude price is softening, Indian markets recovering. That's really good news coming in. Shashank Udupa, the founder of Vayu Capital, joins in now. Shashank, good to have you on NDTV Profit. My quick question to you would be, to begin with, that there is buying opportunity all across the market. In fact, the broader markets today are performing much better than the key indices. And with the momentum building and with some sanity on the war front, probably there is value picking going on. So Shashank, what tops your list when we talk about some of the stocks which could be value buy at this current moment, with a lot of valuation drop that we've already seen, and the scenario of the world and economy has changed?
Wonderful. Thank you for having me. So I think looking at the current market, we are having a lot of geopolitical issues, and Nifty keeps fluctuating, going up and going down. And I think we just saw Donald Trump talking about the Iran piece. So I think that is a good sign. But I would say today this is a stock pickers market, and we are identifying some very good opportunities in the healthcare space, pharma space, and in the FMCG space. Pharma is something we are very bullish on. I think yesterday Piyush Goyal, the minister as well, spoke about Indian pharma industry doubling in the next 5 years. And with also the rise of GLP drugs coming into India, I think we are very bullish on the pharma sector as of now.
All right. When we talk about pharma sector, any value picks, Shashank, over there? Because most of the companies are now going towards their R&D push as well as increasing their geography. So there are two-pronged strategy in the pharma sector really going on. First, how to really push the distribution channels for higher sales, and on the other hand, push for R&D. Any value picks that you see in pharma?
So we are looking at 3 companies in the pharma healthcare space. I think the first company we are analyzing is a company called Torrent Pharma, a very big group company. They have businesses, majority of their business is in India itself, and they have in cardiac, diabetes, CNS, gastro, everything is here, right? But recently, Torrent Pharma has now done an acquisition with a company called JB Pharma Chemical. Now, JB Pharma Chemical was a company that was not doing well. The private equity firm KKR came in. They kind of turned around the entire company. And now Torrent Pharma has acquired approximately 40% in that, right? Why we like Torrent is mainly because if you look at the current GLP-1 market in India, Torrent Pharma is basically leading in that front. And they're also fighting with a foreign company called Eli Lilly, which is in the Mounjaro space. So that is something we're very bullish on. The second company that we are identifying and looking at is a company called Laurus Labs. Now, Laurus Labs has a very interesting history in the past. They had a very good run post-COVID. And after that, they had a very big fall because of aggressive guidance from Mr. Chava sir, who is the promoter. And then I think when nobody was looking at this company, they kind of increased their assets from increased their assets by almost 4,000 crores between 2022 and 2025. And they also changed their mix. They were making money from a segment called ARV. And now they have gone away from that and they have entered the CDMO space. And as you can see, they have done a phenomenal turnaround.
Definitely. Yes.
1.5.
So Shashank, from the pharma space, Laurus Labs as well as Torrent Pharma, and very rightly put, Torrent has really consolidated its position after Warburg Pincus really changed the scenario for JB Chem. But which are the other stocks on your list which are value buy at this level?
I think value buy, there is an FMCG company called CCL Products. Now, CCL Products is in the business of coffee. They are into B2B coffee. And now they have started expanding into B2C coffee. There's a very famous coffee brand called Continental Coffee. So this is a very interesting company that we are looking at right now. So why is it interesting is because they have been growing by almost 28% in the last 5 years. Their debt has significantly gone down from 1,800 crores to 1,300 crores. And they have come out in their recent con call and said that after this, we are not going to put any more capex. And now we are going to go into a cash flow surplus kind of a zone. And because of that, it is sitting at very attractive valuations today. And they're also talking about doing a lot of acquisitions.
And Shashank, so after CCL, of course, another stock on the radar, HCG, what's your view on that?
So HCG is a classic special situation turnaround play. This is a private equity firm called KKR that did the turnaround with JB Pharma as well, that did the same turnaround with Gland Pharma. And now they have entered in HCG at around 500 rupees of the price. And this is a cancer hospital. They work with very good margins, very good cash flows. And now they are removing all the dirt, which is all the bad assets, they're disposing it. And now they are growing at attractive rates. And as of now, it has not done the turnaround yet. But I believe in the next 3 to 4 years, this turnaround will be very interesting, because if you look at KKR's playbook, they focus on an acquisition first approach. So you will see a lot of news coming on acquiring different hospitals and then showing the growth. And then eventually they will sell it off. I think KKR did the same thing with Max Healthcare recently as well. So it's a very interesting company on that radar.
All right. So you have been, as a trend also, Shashank, playing on the stocks where the private equity firms have really created value, but they are also considered sometimes rich in valuations once the private equity is there. Apart from that, another on your list would be Azad Engineering. What's your view on that at this level?
So Azad Engineering, we are looking at it from a little futuristic perspective. I think they are very good with precision engineering. And if you look at Azad, they are now entering the aerospace department, and they're one of the best players in that space. We have seen a lot of interviews of the founder and also the machinery that they actually have. So they have this 0 defect per million validation going on as well. So they are, again, growing very fast. I think that PAT grew by 43%. Their EBITDA margins are sitting at 38%. And today, 18% of that revenue comes from aerospace. And we are seeing a lot of investments coming from the aerospace segment into India. I think for the next 2 to 3 years, this is one company that is looking very interesting in that space to capture the entire market share.
And Shashank, very quickly, just to wrap up, how concerned are you about the volatility at this moment, and how much of cash would you really keep on the side at the current moment instead of deploying it for probably a lower valuation?
I think, as I said, it's a stock pickers market, and either the companies are very expensive or they're very cheap. But I would not deploy everything today, even though the market valuations are very good. I would like to see some signs of revival where Nifty starts moving up towards 25,000 and above. So I think around 50-60% invested. I would keep 30-35% in cash and wait for the first sign of revival and, that aha moment where we start moving up. And I think that can come with a lot of government intervention. I think we need some kind of push or a trigger in the Indian market for it to start pushing higher.
All right. Thank you so much, Shashank, for giving us your stock picks as well as your views on the market. Good to have you on NDTV Profit. So those were some of the suggestions and value picks at this particular point. But an important news development for today coming in from the telecom sector and Vodafone Idea. That stock has pared down its gains a slight bit. currently, but has been gaining. And on the other hand, Bharti Airtel is also on the weakish trend. But this particular news comes as a relief, as Bombay High Court has delivered a major relief to telecom operators, striking down the centre's one-time spectrum charge. Now, the court set aside the 2012 decision that really imposed additional charges on the spectrum held beyond 6.2 megahertz. Now, levy that was applied retrospectively from July 2008. And let's get chatting about its impact. Mahesh Uppal, who's the director of ComFirst, joins in. Mahesh, good to have you on Profit. And what's your take on the scenario and the benefits for both Bharti Airtel as well as Vodafone Idea after this Bombay High Court verdict? And do you also hear that there will be more legal tussle on this particular point?
I do think that this decision would be extremely welcome as far as the companies are concerned. And I think even as an analyst, I think this is a welcome decision because it does correct something which was actually quite arbitrary in my view, as well as not very objectively done. So it was essentially trying to correct the price of spectrum retrospectively, which the courts have in fact rightly decided that it was not a good idea. And certainly the way the DoT was trying to do it was neither transparent nor objective. So I think that is a good thing for the companies. And as far as challenges to this decision is concerned, I do believe that there may well be, because the government has always, in my view, very unhealthily been focused on its revenue losses, or for that matter, preserving its revenues. And in this case, the courts have rightly said that this is not something that they were right to do. But I suspect if the past is anything to go by, there will be a challenge to this decision, and the government will want to take another chance with the courts.
All right, so government may go, for other legal options as well. But when we talk about the AGR dues as well as this particular benefit really coming in, considering that Supreme Court in all likelihood may also chart the decision that Bombay High Court may have given, hypothetically, putting both these aspects together, how would you view the overall telecom sector and especially Airtel and Vodafone Idea in view?
I do believe that both those companies would welcome this decision. It's good for them. And I think given the competitive landscape in the sector, it's a boost for them as well. And certainly for Vodafone, which is attempting to revive itself and to attract more investments, I think this would be an important boost.
Right. And when we talk about today, there has been a brokerage report which downgrades Indus Tower. Now, Indus Tower has always been reflective of the sentiment as well as health of the telecom sector. How would you view the Indus Tower, potential from here on, considering the macro, challenges, inflationary pressure, which may be impacting the telecom sector, which is already a very capital-intensive space?
Yeah, you see, there are two things about that. One is that the tower industry, particularly companies such as Indus Tower, etc., are now facing a different environment from the one that they faced 10, 15 years ago, where you had a multiplicity of players in the market. There were several companies competing in the telecom space. As you know, the competition in the sector has reduced quite significantly, with barely 4 players in the market, including BSNL. So I think in terms of actual number of the market size for Indus Tower, in that sense, has reduced, as indeed it has for other operators. And of course, the Indus Towers, as well as other tower companies, are also major users of fuel, particularly diesel. So I suspect some of the new costs also would also have been reflected in what we are observing now.
All right. And Dr. Mahesh Uppal, just one final question to you. That Jio, with its launch, has caused a lot of disruption in the past in the telecom sector. And hopefully it will chart its path for a listing as well at some point when the markets stabilize. How do you see the overall sector and the public market picture of the telecom industry and any changes because of this big event happening?
Well, I do believe that the market will grow very, very fast, especially given the kind of demand for data services that we will now see thanks to the huge growth of AI, etc. So I think as far as Jio is concerned, indeed any of the telecom players have a lot to look forward to in terms of growth of their businesses. However, I mean, whether the market will accept the kind of pricing that will make it worth their while is an open question.
Thank you so much, Dr. Mahesh Uppal, for joining in with your views on the telecom sector. Let's shift focus to J&K India. They have won a significant order, and we have with us Deepak Bharuka, who's the CEO and whole-time director, and Arvind Kamath, who's the chairperson and whole-time director. Gentlemen, so good to have you on NDTV Profit. My first question to you would be that your order book with this new order being secured has become substantially large. And this question is for Deepak. So now looking at the overall FY27, what would be the kind of performance addition on your numbers when it comes to FY27 numbers, and how much of that order book will really finally make it to the performance?
Thank you for having us on your channel. Definitely, this order will have some impact on our overall number for this year. We already given the guidance of around 25 to 30% growth we are expecting in this year compared to the last year revenue numbers. And we expect around 25 to 30% of the order will be executed in this year, which will add to the revenue of this year.
Right. And also, when we talk about your green hydrogen opportunity pipeline currently under discussion, Arvind Kamath, where is that headed, and what could be the potential for the company and the shareholders?
Yeah, good afternoon, Nisha. Thanks for having us here today. Basically, see, this opportunity, what we have got also is towards the sustainability and emission control. So we are glad to inform that because this is the first contract for us for an export opportunity for incinerator. So this is also towards the sustainability and emission control. And regarding green hydrogen, we've had a JV last year as J&K Chemists from Pune, which is focused on green hydrogen and renewable fuel technologies. And they've also received the contract from Pune Hydrogen Valley for the green hydrogen project, which we are executing now.
All right. And also, Arvind Kamath, what is the kind of, order inflow outlook that we are seeing in this particular quarter and this financial year? What's the visibility?
We have very good pipeline, Nisha. Basically, this is this being a start of the year. Yes. Already, we've one good opportunity, but there are also big pipelines mainly for export opportunities in Africa and also in Russia in this year. And other than that, maybe a few Indian opportunities as well for the later part of the year.
All right. And Deepak, my final question to you, that in terms of the growth momentum for FY27, what percentage could be India specific and what could be international, and what could be the capex requirement for really apportioning for the kind of order inflows that you've got?
Yeah, this year we see more growth on the export market. In the first part of the year, we do not see many opportunities in India. As Arvind said, we have a bid pipeline is looking very healthy and good, mainly in the Africa and Europe or Russia part, where we are bidding for many of the projects and which are likely to materialize in next quarter or so. And later part of the year, we see good opportunities in the Indian market, where some of the refineries, new refineries are likely to come, and old refineries, some of the debottlenecking and expansion projects will give us a good opportunity. So going forward in this year, we see that order inflow will be more from the export project compared to the domestic project, particularly compared to the last 2-3 years, where our order book was more dominated by the domestic orders.
All right, Deepak as well as Arvind, pleasure speaking to you on NDTV Profit. Thank you so much for joining in. The stock of J&K India is up over 5% in trade, but another stock which has really shown a lot of exuberance is PI Industries. The shares rise as revenue guidance really improves for the company. Varsha is here to give us the details. Tell us, Varsha.
Well, Kumi AI, which is a customer of PI, has actually raised guidance. So the revenue guidance by the company has been raised to by 10.9%, and the operating profit guidance has been raised by 70%. Now, why this is important and why PI Industries is in focus per se? PI supplies a herbicide to Kumi AI known as pyroxsulfane, and this is an herbicide and which forms 35 to 38% of PI's total revenue, and hence we are seeing the stock seeing that buzz in trade, because if Kumi AI is actually increasing their guidance, that will reflect in PI Industries financials as well. So hence, because the growth outlook is very positive for the client, and hence PI Industries is in focus, and this will be a positive impact on the company's financials.
All right, thank you so much, Varsha, for that, and completely out of time on this edition of Markets at 12. But stay tuned to NDTV Profit. Lots of market action on the other side. Thank you so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and I have Sharad Dubey, who's as always standing at the profit market pit with all the action. Sharad, good afternoon. I think there is some action to talk about as well. We've seen a good recovery that's coming in from the day's lowest levels. If you have to look at Nifty 50 as well, I mean, almost 80 to 90 points recovery is what we've seen. The question over here is how sustainable is this going to be, and what are the cues telling you for the rest of the day?
Well, good afternoon, Hiral. And yes, the cues are suggesting some positive moves coming in. But remember, today is the expiry. Also, the weekly expiry comes in. A good recovery, and it is sustaining. So that's a healthy point. But let's have a look at Nifty Bank, whose setup looks much better as compared to Nifty. And it is holding up really strong, especially the PSU banks, the private banks. All of them are doing really well in trade. A good basket buying is happening after a lot of days. Can expect a little bit of short covering also, because almost 92% of shorts are there in the system. FI heavy banks might see some short covering. But let's look at the key factors to watch out right now, what we should be focusing on in the day's trade. And largely we are expecting that short covering to continue going ahead. Nifty still remains volatile. The support, the bounce which happened was at 23,100 level. So that's very much important to look at. On the other hand, Nifty Bank's technical setup, I pointed out, is much stronger than Nifty, and a much more longer buy side deals are being made, especially from the traders. The resistance ranges from 54,600 to 55,000 right now for Nifty Bank as well. Apart from this, the risk of sentiment that has reduced after 3 days of sell-off globally, which is happening, and that is why a lot of asset classes are actually in a flattish moves. Apart from this, let's look at the other key factors which is there in the expiry at play. Of course, the value buying in the SMIDs has also returned back, and the buying is especially coming in the PSU banking and the auto space. The mid cap, small cap is also doing well. So definitely the breadth of the market that has improved nicely. Muted performance coming in the IT segment, and a little bit of sell-off has intensified. A very volatile counter, to be honest. Strong reversal in the rupee from the last trading session, and the yields, they have also cooled off as well. So that's something interesting to track. And most of the assets are steady right now, as Iran and Israel have halted their strikes. What happens next will decide the course of the sentiment. The two important data coming: US existing home sales, consumer inflation expectations as well. So net right now, things are looking good for the Indian markets. But I must say, Hiral, Nifty Bank at the day's high level showing a really good technical strength.
Absolutely, and I think PSUs are seeing that buying interest, as Sharad was mentioning also. But let's look at the watch list. NLC India, the OFS is open for non-retail investors and the stock is tanked in trade. Belrise, a positive note coming in there, and this is in spite of that run-up that we've seen since the IPO. HSBC is still bullish. Gabriel India, you have a Motilal Oswal which has initiated coverage. I think a 20 to 25% upside is what they're seeing. Panacea Bio, they've expanded their dengue vaccine access. 2 consecutive sessions, over 30% is the kind of gains that we've seen. Equitas Small Finance Bank is up 46% since March 30th. You have telecom as an industry, that's Vodafone Idea and Bharti Airtel. But the Bombay High Court has quashed the OTSE charges as well, and that's the reason why that sector is up in trade. Zepto has filed the updated DRHP. They're eyeing almost a little over 8,000 odd crores. Ola is at a 7-month high. Serra Sanitary. Goldman Sachs has bought shares as well. IDFC First, you have again a HSBC note, which is keeping that stock afloat. Few of the alternative, the CDMO players in pharma are in focus because non-China alternatives is what US markets could be looking at. Sirma is looking to strengthen their non-consumer business. We did speak to the management. And you have MOS Albert, HDFC Life has bought around 18 lakh shares. Tata Tech seeing some bit of profit booking today, and Z Entertainment has fallen 9% in 2 days. A run-up in terms of Thomas Cook, that stock has been trending up 20% in the last 10 trading sessions. But Sharad, over to you to take the rapid fire with Somil Mehta of Sharekhan.
Thanks a lot, Hiral, for that. Good afternoon, Somil. It's always a pleasure to have you. We'll start our rapid fire segment. And of course, the first stock we are going to talk about is going to be Equitas Small Finance Bank. That's the company I'm talking about. Of course, the operational update was strong. Wanted to understand further up move possible as it is strengthening.
Positive on the stock. I'll be expecting a target of around 90 plus in the medium to long term. Do not trade in the short term.
Somil, Ola Electric has started buzzing again. Good volume buzzer. Stock is up almost 8% in trade. There has been an up move coming from almost 39 to almost 40 plus right now. Is there a good time to book a little bit of profit in this volatile counter, or do you think the medium term momentum is still strong enough for Ola Electric?
The Ola Electric medium term to long term, I'm not too bullish on. However, in the very short term, I think still more steam is left. I'll be expecting a target of around 50 on 52. Hold on to it. No fresh buying on this counter.
So hold for Ola Electric. Next stock is Serra Sanitary, where FIs have been entering this stock. Yesterday also the large FI's name had come in a block deal. Do you think this counter is going to sustain going ahead, or a little bit of consolidation can be there in the future?
I'm very bullish on this counter in the short term, in the medium term, in the long term, all three phases. Keep a stop loss around 5383 and another stop loss for a long term would be 5200. Now my targets on the upside in the medium term outlook would be around 7100.
Right. Next stock is IDFC First Bank. There was a broking upgrade also coming in. Just wanted to understand, it's one of the top gainers also in the FNO today. Do you think this volume build-up will continue? And what would be the important levels to watch out for going ahead, at least in the near future?
I think I'm pretty bullish on this stock. I'll be expecting a target of at least 85 plus levels on IDFC First Bank. Bullish in the short term, medium term, long term, all three time frames. Fixed stop loss around 69 for short term. However, 66-65 is a very crucial level to watch out for.
Right. Pharma stocks have also been buzzing in trade. Especially, I want to pick up the charts for Divis Labs and Piramal Pharma. There's of course some favorable news flow coming in, especially on China front from US. But these stocks are also doing well in trade. And pharma seems like a lot of sector churn happens, over the last 2 to 3 odd months we have seen. Do you think either of these two stocks, any alpha is there to be made from the current levels?
I'm pretty bullish on Divis Lab. It's been consolidating for some time, but I think now is the right time to enter the stock. Support is around 6,300 levels, but on the upside, I'll be expecting a target above 7,200, 7,300.
Another stock in focus is Motilal Oswal Financial Services. Domestic funds have been increasing stake in this counter as well. Your views on that? Do we see some more positional bets happening in this counter?
See, in the very short term, yes, there could be a spark here till 910, 920, but I'm not too, keen on the medium term outlook. Keep a very strict stop loss around 810. If it goes below 810, then you can exit.
Right, and Somil, your views on Tata Tech? It has been buzzing recently, and volumes also seems to be having a pickup. Important levels to track for this stock?
See, resistance for short-term traders, you can exit. However, for medium term, there is a resistance around 798 levels, which is the previous swing high on the quarterly charts. Support is around 730 and 685.
All right, so these are the key levels to watch out for in the rapid fire segment. Over to you, Hiral. What are the stocks you are seeing in the Google trending?
In terms of trends, last 2 days I've just looked at a trend and IFCI that has been trending in terms of counters. But let's see in terms of today's session as well. You have Reliance Industries, Adani Green, CG Power, Tata Capital, Sterlite Tech. Interesting set of names that are coming up. Somil, anything that you like? Let's look at a Reliance Industries from the large cap space. You have Adani Green as well. If you have to look at any of these, what do you like on the charts?
See, Reliance has been clearly making low top, low bottom formations, but I'm not expecting the stock to go below 1230, 1240 levels. So we'll revisit this stock again at 1230, 1240 levels. However, at this point of time, I would suggest to stay away from Reliance. We'll revisit again at the lower levels. Adani Green, definitely a very good stock to be in. Buy on decline should be the strategy. Support would be around 1300 levels.
That's a pretty interesting take coming on the stocks, but we have heard about this company called Rajesh Exports, and Nimit has actually grilled the management earlier also this week. But is there something new right now, Nimit, happening, or is there some more jugglery coming in from Rajesh Exports?
So very interesting that Rajesh Exports has told us that they are a debt-free company. This directly contradicts a debt recovery tribunal order that came through earlier this year, where it says that about 509 crores is owed to the company as a loan. They've even tried to sell off this loan, but they've not managed to so far. But let me explain to you how the dynamics of this loan arose.
So Nimit, just explain me, like suppose if I'm having the loan for Rajesh Exports, what does it actually mean?
Let me twist it around a little. Suppose you are the bank, I am Rajesh Exports, and I am say that I need to import gold from a foreign company. So, and I don't have the money to pay them right now. So I will draw a letter of credit from you. Through this letter of credit, when the gold comes in, you will immediately pay off that company and extend to me 90 days to make the payment to you. Now this goes on for a while till about 6 months where I have not made the payments to you, and that's come to about 450 crores. Now you ask me, ki, where is this money? And you're like, COVID is there, so many other things. I tell you, I'm not able to repay you. But the twist is that the company that you have been paying off against loans to me is actually my subsidiary Valkambi, and it is the same subsidiary that SEBI has said in its order has inflated revenue, undisclosed revenue, and shows 99% of Rajesh Exports' entire revenue. So do you understand how Rajesh Exports has paid off its own subsidiary using bank money without paying back the bank, and then that money which it owns through its subsidiary, it's not paying back to the bank, and now it has come out and said that there is no loan that it is owed and it is a debt-free company, when the DRT has clearly found that this is a loan that it owes to Canara Bank. It's an interesting play around the words that the company is using and what it is causing as debt, what it is causing as loan, and what it is disclosing.
Exactly, and that is why Nimit is here to actually make it very simplified manner and actually watch the real story. And maybe Nimit, we might see some more can of worms opening for Rajesh Exports.
Exactly, because it seems the management keeps pointing out these different things, because the SEBI order said nothing about debt. Remember, the SEBI order said nothing about debt. Then Rajesh Mehta on his own came out and said that we are a debt-free company. Now we understand why he was saying debt-free company, because he was talking about this Canara Bank order, which was never mentioned in the SEBI report. But now it's out there for us all to see.
Right, so problems might come in, and that's why we are at NDTV Profit to find out and give you all these details. Thank you very much, Nimit, for that. And joining us, we are having Gaurang with us as well. Good afternoon, Gaurang. It's always a pleasure to have you. Me and Nimit are discussing about what happened in the Rajesh Exports fiasco. But just if you are tracking the stock or this industry as a whole, more can of worms are coming out in this counter. What do you see on that?
So I think, thanks so much for having me on the show, and good afternoon to all your viewers and to you as well, Sharad. One small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So this company, Rajas Exports, it's been in the news for all the wrong reasons. I recollect, and please correct me if I'm wrong, this stock used to be 1,000 rupee plus stock once upon a time. And then there was a series of news flows, misgovernance, and now this very big can of worms getting opened up. And I was surprised with the kind of figure that SEBI, under its investigation, had found out. And thereby, without anybody asking questions, the management has come out and put various stories in different medias. And as you were discussing with your colleague right now, I think this routing and rerouting business needs to be seriously looked into by the regulator and by the law. We have had a lot of instances in the past. I don't want to name them. Unnecessary digging the grave will not help. But one more case similar to what had happened in the past history. And the problem is that investors who just look at the price of the stock, thinking that once upon a time it was 1,000 rupee stock, now it is 500 rupees, or it is 100 rupees, or it is 80 rupees, or below 100 rupees is a value buy. This is not a value buy. This is a great trap, a value trap, I would rather say that, and give that term to this particular episode that has unfolded. So it's very important and very necessary to do a little bit of homework, understand, gauge your risk appetite, and then select a company where you want to get invested. I don't know where this particular lower circuit is going to stop, but it definitely is a thing of concern.
Yeah, it's a concerning aspect right now for the investors. But moving on, Sirma SGS, the management designed to strengthen their non-consumer vertical, as the management says that their consumer business will grow slower versus others in FY27. Today we spoke to Jasbir Singh Gujral, Managing Director at the company. Let's listen into what he had to say. The stock is nearly at the day's highest levels, with gains of little over 4% coming in there.
For the current year, we believe the consumer will, last year it grew by about 15%, whereas my overall growth was 27%. This year also, we believe the consumer will grow at a slower pace, same between 10 to 12%, not more than that, whereas my overall other markets, other verticals will grow at a much higher percent. So by 28, I expect the consumer to be sub 30 of my total revenue. Now, whether it is 27, 28 or 26, it's very difficult to predict. But the endeavor of the management is that it should be sub 30%. That the objective is to grow EBITDA by 30% absolute basis. So if we did 545 crores of EBITDA last year, the objective is to grow that by 30% on an absolute basis, which means it should be closer to 650, 700 crore rupees this year as a 30% growth, and then a 30% growth year on year. So we are targeting a 30 to 35% growth in revenues, a 30% growth in EBITDA, backed by a positive operating cash flow, which should be between 30 and 40% of the EBITDA.
Okay, so that's the word coming in there. Gaurang, any view when you're talking about SGS, Sirma, or any of these EMS players?
Sure, Hiral, good afternoon to you as well. So, I was listening with the management right now, and yesterday also I was listening to the commentary or the verbatim by the management in terms of how they want to take the business forward and what are the near-term, short to medium-term hurdles. So, hurdles remain in terms of raw material supply side issues, but they are short to medium-term. 25 to 30% growth on EBITDA year on year. I think this opens up a lot of confidence in terms of where the management wants to drive the business. PCBs, chips, semiconductor, EMS sector, as we call it, Hiral, we are extremely positive about it. On Syrma SGS, we had an IPO note when the IPO was there from a long-term point of view, and the company has really made good progress and have given handsome returns to the long-term investors. So keeping that IPO note in mind, if you are a long-term investor, you can continue to hold. Other players in this sector that we are positive on are Amber Enterprises, CG Power, and PG Electroplast.
Okay, so interesting names coming in there. In fact, CG Power is seeing some good buying traction in today's session as well. But moving on, NLC India, it's interesting to see what happened to the stock. I mean, as it's opened up for the public in terms of the OFS, that stock is under pressure today. Seeing that mild recovery from the day's lowest levels, now seeing cuts of a little over 2%. My colleague Jasmeet is with us to tell us more in terms of what's happening there. Jasmeet, over to you.
Well, thank you for that. Here we see the government push being continued in terms of the overall OFS space. We did start with the overall Coal India and NHPC, and now the government is heading towards NLC India. If we look at the overall size of this particular issue is at 2%, where the government plans to sell nearly 2% of the shares they held, but with the green shoe option of 1 additional %. If you look at the total value of the overall OFS, it's roughly at 840 odd crore, but including the green shoe option, it reaches to 1240 odd crore. While the price set for this particular OFS is rupees 303 rupees, it's roughly a discount of 10 to 12% from the current levels. Now, if you look at the key things that will be in focus on this OFS, will be the overall understanding of how much institutional investment would come in to take the stakes. Further, also overall subscription level will be something to watch out for. Given if the subscription reaches the particular limit, the government will open up for the green shoe option as well. But if there is a pressure, then the government might stick to the 2% limit.
Okay, so that's with regards to NLC. Gaurang, what is your view? I mean, we are seeing that downtake. Do you think investors should actually look at the OFS?
Well, Hiral, government diluting its stake is a very positive note, as it was mentioned by your colleague. And I have been of this opinion that government's business is to run the country, make conducive policies so that domestic companies and foreign companies can come and play their part. Better late than never, Hiral. So companies which are in this particular event of OFS may have short-term reaction to the price, to the offering, to the demand supply. On the fundamental side, I won't give a buy, sell and hold on NCL because currently we don't have a coverage. But I think the sector looks quite positive and the operations and earnings visibility is definitely clear.
From this, Gabriel India is also in focus. Motilal Oswal has come out with this initiating report. To get this more details, we are joined in by Puneet. Auto ancillary space has been buzzing a lot and now the brokerage is also getting bullish.
Well, most certainly, and I think the smaller ones are getting a lot of traction as well. So, and Gabriel is one of them. Last year had that big integration of the unlisted subsidiaries that came into the listed entity, and hence you've seen that big stock price rise. Now, Motilal Oswal has mentioned that it's moved away from that one product suspension into a multi-platform company, and hence that is one of the biggest beneficiaries. They see the company going as a transformation now. They've also highlighted that they are seeing a larger growth compared to its historical average, as well as seeing that the recent initiatives will create long-term shareholder value. They've also highlighted a couple of key important aspects, that the integration of Dana Anand will drive the company's scale, and the other entity, Henkel Anand, will essentially give the company that integration benefit in terms of the margins as well. So they are looking at a very strong growth in terms of revenue, 23% revenue CAGR, but EBITDA and profitability CAGR is almost 50% in the next 2 years.
That's a pretty big number. Thanks a lot, Puneet, for that. Gaurang sir, just wanted to understand, the auto ancillary space is heating up and now brokerages are also turning bullish. Just wanted to understand about Gabriel India. What do you think about it, and also the auto ancillary space as a whole?
So, look, that's a simple correlation. No rocket science. If you are positive on the auto sector, I don't see any reason why you should be underweight on auto ancillary, OEM, tire manufacturing or battery manufacturing, because all these subsectors combine together and form a universe called auto. So you have a very strong new auto market, and along with that, you have an equally strong replacement market. Gabriel is one of the oldest companies in the OEM stroke auto ancillary pack. As Puneet was mentioning, they are basically into the suspension equipment, shock-ups as we call it. And if I'm not mistaken, I think crankshaft is also something that they do supply largely to the two-wheeler, three-wheeler pack. But The lineup is extremely good in terms of expansion. We used to cover this stock once upon a time, our target price in place, so we have not initiated any further coverage. But we like the auto ANSI space. Uno Minda, CI Automotive are some of the names on which we are positive.
What about Belrise Industries? You know, HSBC has actually initiated coverage. They have a target price of 270. The stock is already up nearly 140% from IPO. Would you still looking at a Belrise where valuations stack up?
So in terms of valuations reflect what earnings are doing, Hiral. And again, as a disclosure on Belrise, also we had an IPO note from a long-term point of view. So keeping that IPO note as a base, if you got invested from a long-term point of view, continue to hold on to your investment. And I think growth trajectory for the company, earning visibility is also again very, very strong. And that will translate into share price targets getting revised upwards as we see improvement in earnings.
Okay, so that's with regards to where earnings are concerned. Thank you so much for joining in. It's always a pleasure, Gaurang, to speak to you. Very quickly, Adani Energy, they will be acquiring IntelliSmart for 3,000 odd crores. That's the announcement coming in on Adani Energy. We'll give you more details on the other side of the short break. Please stay tuned to NDTV Profit, and a thank you from all of us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
US President Trump says Iran and Israel have halted hostilities and signals that a US-Iran nuclear deal could be just days away. Trump also hints at a total victory declaration within 2 weeks, with talks progressing well. Meanwhile, benchmark states some recovery on the Lal Street with the Nifty close to 23,200. Sensex also gaining over 100 points as well. PSU banks, auto and bank lead gains. IT remains on the back foot. Banking stocks surge after the RBI unveils a concessional forex swap facility aimed at boosting overseas fundraising. The move lifted sentiment across the sector, with most Bank Nifty constituents trading in the green currently. TCS's AI strategy takes center stage at its AGM, with the company highlighting the launch of sovereign AI infrastructure for India. Management also said that AI is increasingly moving into the physical world, while demand for AI-led solutions continues to drive steady revenue growth. Oil prices ease after Israel and Iran agree to halt attacks, raising hopes of broader de-escalation in the Middle East, while Brent slips towards $93 a barrel. Supply concerns persist as the Strait of Hormuz remains effectively blocked. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about Nifty or Sensex right now, you're seeing a little bit of recovery really coming through for both of these indices. When you talk about the broader markets as well, the trend in fact remains largely the same, even though you do have small cap and mid cap, both of these indices actually outperforming benchmarks just a tad bit. When you talk about the entire sectoral picture as well, it's very sharply tilted in the favor of green. So you talk about PSU Bank, Nifty Bank, auto, financial services, realty, rural, pharma, all of those sectors firmly in the green as we speak, especially PSU banks with that 2.5% thereabout uptick coming in. Nifty Bank as well in good shape after that forex swap announcement as well, and that's something that you're watching out for in terms of important updates. But on the flip side, there's actually IT that is on the back foot right now. And when you talk about some of the gainers from within the Nifty 50 pack, it's Interglobe Aviations that made quite some recovery in today's trading session with 3.5% uptick coming in. Aisha Motors, some of your banking counters also in good shape. So ICICI Bank, SBI also in good shape, up anywhere between 1.9 to about 2.5% odd. and a bunch of counters like Trend, Asian Paints also in focus. On the flip side, when you talk about the losers from within the Nifty 50 pack, there's actually a Tech Mahindra, NTPC, Power Grid, Eternal, Titan, some of your IT counters also that make it to this list, given that IT is the only sector that is holding on to a tinge of red as we speak. So Infosys, HCL Tech make it to that list, also TCS. And that's something that you're looking at in terms of some important updates. That said and done, let's quickly take a look at the commodities wrap as well before we get you some insights. When you talk about oil, it's extending some declines, and you do have Israel-Iran halting attacks tentatively right now. Netanyahu saying that Israel really holding fire is going to be the response that you're looking at right now. And you do have Trump, of course, chiming in and saying that he's been brokering peace between the two countries as well, given that Israel and Iran are, being mediated by him, and that's some bit of commentary coming in through him. Now, in terms of Iranian media, they're signaling that there's a similar stance when it comes to retaliation from Tehran as well. And the Strait of Hormuz, though all said and done, remains closed under the blockade very much so. So you do have Trump, in fact, saying that victory is expected within 2 weeks. He's also given the sort of guideline of 2 to 3 days when it comes to the announcement of a deal. And that's something that you're looking at as an important update. Also something that is reflecting in terms of gold as well, that is waiting for its next geopolitical cue as well, with Trump really urging de-escalation amid global market volatility. So you do have Hormuz flows really boosting oil, weighing a tad bit on gold prices yet again. And when you talk about the forecast going forward as well, you do have Citi that has actually slashed its 3-month target to about $4,000 as well, and Citi is maintaining $5,000 in terms of the target over the longer horizon. So that's also something that you're looking at this afternoon when it comes to the entire commodities update. But all of that said and done, let's also get you some more updates in terms of some of those insights to help put all of this that I told you about into perspective. In fact, Kunal Shah, Head Commodities Research, Nirmal Bang, joins us on the show right now. Mr. Shah, first of all, a very good afternoon to you. And second of all, when you talk about this very interesting market right now, oil prices, you've seen quite the escalation come in and a little bit of a volatile trade that you're looking at right now.
I think right now what is happening in the market is that without any actual fundamental change, only news flow is deriving the ups and downs in the commodity market. So right now, because of the Trump news, we saw oil coming down from $96 to $93. But in the reality, the actual supply scenario continues to remain worrisome. If the deal doesn't take place, it will again shoot up. Similarly, even in case of gold and silver, if the deal doesn't take place and oil shoots up, then the inflationary expectation will move up, the interest rate hike narrative will again come into the picture, and the upside will be restricted. And vice versa. If there is a possibility of a deal taking place between US and Iran, then I think the completely opposite scenario will emerge. The interest rate hike expectation will go down, rate cut expectation will gradually build, and entire commodities will again start to move up. So it's a continuously yo-yo push and pull factor without actual news coming in. The fundamental does not indicate towards bearish scenario. The downside in gold and silver from here is very limited. $64, $63 silver is a great buying opportunity. Absolutely. As far as gold is concerned, $4,100 to $4,200 would be somewhere in between, would be a great buying opportunity. So I would recommend that if some of these kind of levels will
absolutely
come.
Point taken there when you talk about that as well, because I just wanted to try and understand what your assumptions are looking like right now when you talk about oil prices as well, and we'll move on to gold and talk about that as well, because that's a very fantastic story that you're looking at right now. That in fact is also the word coming in from some of the ace investors when you talk about this investment story as well. We'll come to that in a bit. But before that, when you talk about oil as well, you do have that little bit of elevated geopolitical premium that you're looking at. Add to that the higher for longer oil price assumption. How are you then looking at the bottom line for oil prices?
I think the oil prices, till there is any concrete peace treaty being formed between US and Iran, I think the downside is very limited for Brent $90 should be the floor. For WTI, $86 should be the floor. The overall outlook on crude oil still remains bullish. And I would only change my view if there is a ceasefire. After the ceasefire, there is a peace talk, successful peace talk, then only I will be forced to change my view. Else, I believe that crude oil prices will remain under upside trajectory.
No, absolutely. And when you talk about gold as well, I wanted to try and understand what you think about the fundamental assumptions right now when it comes to gold prices. Do you think that they're remaining intact? Because even some of the brokerages, while they're slashing some of the near-term targets, they're still penciling in that longer term it's going to be scripting quite a recovery.
Yeah. So see, when you look at the gold and silver prices, they are only going down on the back of stronger job data. And if you look at the breakup of the strong job data, some of these gains have come because of the Olympics. In US, we have, sorry, not Olympics, in football game. So because of the Football World Cup, the government job creation has been on an aggressive curve and the payrolls have increased. So it's a short-term factor. The job markets is strong, but I don't think so. It's quite away from heating up because there are a lot of old economy sectors which are not doing great in the United States of America, except the new AI thing. So I believe that these are short-term phenomena, and the possibility of rate hike in this kind of scenario is very less until you see a big oil shock. The possibility of rate hike is minuscule considering the kind of debt US is having. Not possible. So I believe that this narrative of strong economy, higher interest rate, whatever downside you see because of this narrative, capitalize it, because it's not going to be a scenario where you are going to see interest rate going up by 1%. So I believe that dip in gold and silver should be used as a buying opportunity.
Okay, so any dips should be used as a buying opportunity. So if somebody already, let's say, has chips on the table, what should they be looking at right now? Do you think that they should be holding on to their bets, or should they be reworking their investment strategy right now to suit the kind of volatility that currently is on the table?
I think they should sit tight. If you are long, you should hold on to it. And if it goes down, I think you should really try to average it if you have a further room to do it.
Right. Absolutely. And thank you so much for taking time out and joining us this afternoon, helping us understand not just how you should be looking at the markets right now, but how the entire fundamentals should be looking like in the near and long term as well. Let's also move on and talk about US President Trump and put the spotlight on some of his commentary also coming in about the ongoing negotiations with Tehran. He's saying that and I quote him here, we're very close to having a very good and a power deal. Let's go across and listen in to that bit of commentary.
We should be able to do it in 1 hour, if you want to know the truth.
What's the biggest sticking point right now?
I don't think there are any sticking points. I think we're very close to having a very, very good, strong, powerful deal. If we go and bomb, which we can do very easily if we want, and we spend another 2 or 3 weeks bombing, they'll have nothing left whatsoever, but you won't have the Strait open for months. If we do the bombing, a lot of people are going to be killed. Who wants to do that? I don't. And we'll have a signed document that's actually stronger than doing the bombing. What has proven to be a very powerful thing is the blockade. The blockades turned out to be much stronger than bombing. And it was really a combination. It was our initial thrust and then the blockade. But, their economy is really suffering, and they're going to make a deal.
Another, now that we have all of the commentary in place when it comes to US President Trump, let's also talk about something that he calls a problem. A federal judge struck down a $100,000 fee that US President Trump imposed on new H-1B visas for highly skilled foreign workers, concluding that it constituted an unlawful tax that Congress never really authorized. In fact, Jasmeet is standing by with that update coming in and some more details on this.
Well, thank you for that. As rightly said, the US federal judge has struck down the entire approach of Trump, which says that of having rupees $1 lakh as the overall fees and calling it as unlawful. While the court also says that the overall tax which they were taking is unauthorized, and also stuck it down by stating that the overall Congress never authorized such fee to the court. Now, well, this will have a direct impact on Indian IT companies, given Indian IT companies have their employees sourced out to US and most of them require the visa. But the good part is the Indian IT companies have been reducing the dependence on the overall H-1B visa over several years, and currently they have very minimal stance and minimal dependency on H-1B visa. While if you look at the overall IT companies, the Indian IT origin companies have roughly 20% requirement of H-1B visa, but over the time they have reduced. Now here's a management commentary of TCS, Infosys and HCL Tech, where they have told how they have reduced the dependency on the overall H-1B visa. While TCS states that the dependency has reduced significantly and they have localized the workforce over the period, while Infosys also sees that the majority of the employees in the US do really require the support of the immigrant. While further, the HCL Tech says the dependence on visa has reduced to few hundred over the time, and right now the impact from the overall 1 lakh fee was negligible, but this reduction will also reduce the cost to the company whatsoever. While lastly, if you look at the overall Trump administration, it's likely they might appeal the entire thing again, so it's a wait and watch of how does the entire process goes ahead.
No, absolutely, and thank you so much, Jasmeet, for joining us with all of those details. So there you go. That's largely a little bit of silver lining really appearing when it comes to IT companies, even though they've reduced their exposure to the H-1B visa, like Jasmeet mentioned as well. But all of that said and done, it is bad news for President Trump as well. And that's the word coming in from him. Let's go across and listen in to what he had to say about this particular judgment.
Our federal judge today struck down the $100,000 fee for the H-1B visas, saying you need congressional approval. Are you going to push for Congress to do this?
These federal judges are really giving us a hard time. It's really crazy what's going on with the court system. They are giving us a very, very hard time, and they shouldn't be doing it. They're hurting our country very badly.
All right, then, so there you go. That's the word coming in. He's calling it a problem. He's saying that this is something that he's looking at as a very hard time for the country itself, that is the US that he's talking about. But let's also move on and talk about Rajesh Exports, talk about the debt recovery tribunal order that has stated that Rajesh Exports routed bank-funded letter of credits to its own Swiss arm, leaving Canara Bank exposed after defaults on 509 crore rupee dues. Nimit Dixit, in fact, standing by with some more details on this one.
So yes, it's a very interesting tale that's unfolding with Rajesh Exports now. What has happened here is now a DRT order, Debt Recovery Tribunal Chennai, passed an order which found that there was a 509 crore loan against Rajesh Exports which remains unpaid to this day. In fact, Canara Bank tried to sell it off but couldn't. But going deeper into this, it's quite interesting to note where this loan arose from. Now, about 5 to 6 years ago, Rajesh Exports wanted to import gold into the country. Now, to import this gold, it did a letter of credit arrangement with Canara Bank, which is absolutely natural, where Canara Bank will then pay the foreign party immediately once the gold is imported and then give Rajesh Exports 90 days to pay that amount back to the bank. Now, this was going fine till about 5 or 6 months in COVID, where Rajesh Exports did not pay back that bank, and that amounted to about 491 crores. Then, firstly, now Rajesh Exports has this loan against this bank, which is calling not a loan. But the second most interesting thing to see here is that the payment that was made by Canara Banks was to Rajesh Exports' own subsidiary, Valcambi, which was the same subsidiary that SEBI had pointed out had inflated revenues and comprised 99% of the revenues of Rajesh Exports. Now, this is where the story gets interesting. Valcambi, a subsidiary of Rajesh Exports, has taken money from the bank against import of gold. This gold has gone to Rajesh Exports, and Rajesh Exports has failed to pay the bank, saying that it does not have the money right now when its own subsidiary is receiving the money at the other end. This sort of revenue diversion and trends like that SEBI has also spoken about come into focus here. The other interesting thing to notice here is that Rajesh Exports, Rajesh Mehta came out and said to us that that it's a debt-free company. There are no debts against this company. And this was a little bit of a revealing statement, because the SEBI order found no issue with debt. They did not raise debt. Now we understand that maybe what Rajesh Exports had been talking about was this Canara Bank order that had come through. Even though SEBI has not spoken about it, they are saying that there is no debt. And Canara Bank and the Debt Recovery Tribunal clearly found that there is a debt. Now, where this money has gone and who is going to pay this back is a question for the regulators. But just a pattern and trend emerging in terms of the way Rajesh Exports is dealing with banks and then responding to the media.
No, absolutely, and thank you so much, Nimit, for joining us with all of those updates. And it's interesting to say the least, right? As you mentioned at the very start of your link as well. But when you talk about some other updates also coming in, HDFC Mutual Funds, Nari Nivesh Yatra is a nationwide investor education and awareness initiative aimed at empowering women to really take charge of their financial future. Let's also go across and listen into the word coming in from Navneet Munot, MD and CEO, who explains his insights when it comes to the initiative, but also the industry as a whole.
35% of women, participate, contribute to the AUM of mutual fund. With this initiative, what sort of a growth do you expect, or overall, how do you think this financial year will be for women investing?
I think our bigger idea is that millions of women who are already saving money but haven't started their journey of investing, how do we get them into the investing world? And also the women who have already taken the first step. As you know, the industry has been publishing the data that the growth rate of women investor and the AUM from the women investor has been increasing. But how do we ensure that they become a better and better investor as this is aimed at? And I'm sure there are millions more women who've been waiting to invest.
Also on a broader investment sentiment right now, with SIP stoppage ratio having seen an increase, and also SIPs, fresh SIPs being lesser than expected, what sort of an investment sentiment do you expect going forward for the mutual funds?
So in 2016, the total industry collection of SIP used to be around 3,000 crores. Now it's been more than 30,000 crores. It's been 10x in last 10 years. It's been a huge journey, more than 10 crore contributing accounts. And I'm sure compliment to the industry, compliment to people like you, compliment to the whole ecosystem and our policy makers for this transformation.
Alright, and so there you go, that's the word coming in on this particular Yojana as well. But when you talk about some of the counters that are buzzing away, it's Sirma SGS that is in focus with a 4% uptick. Let's go across and listen in to what the management then had to say in terms of strengthening the non-consumer vertical. As the management says, their consumer business is going to be growing slower versus others in FY27.
For the current year, we believe the consumer will, last year it grew by about 15%, whereas my overall growth was 27%. This year also, we believe the consumer will grow at a slower pace, same between 10 to 12%, not more than that, whereas my overall other markets, other verticals will grow at a much higher percent. So by 28, I expect the consumer to be sub 30 of my total revenue. Now, whether it is 27, 28 or 26, it's very difficult to predict. But the endeavor of the management is that it should be sub 30%. That the objective is to grow EBITDA by 30% absolute basis. So if we did 545 crores of EBITDA last year, the objective is to grow that by 30% on an absolute basis, which means it should be closer to 650, 700 crore rupees this year as a 30% growth, and then a 30% growth year on year. So we are targeting a 30 to 35% growth in revenues, a 30% growth in EBITDA, backed by a positive operating cash flow, which should be between 30 and 40% of the EBITDA.
Alright, and that's all on this edition of Lunchtime Trades. Thank you so much for tuning in. But as we wrap, let's take a look at this one, which is for anybody who owns an iPhone, Mac, or aspires to own one. Apple is giving Siri its biggest AI makeover yet. And the new assistant is smarter, more context-aware, and can now take action on a user's behalf as well. Let's listen in to some of the commentary coming in. Let's get in my colleague Ayush Alawadi, who's joining in from California with a ground report.
I'm at Apple Park for the big event, WWDC 2026. We knew this was going to be a make or break moment for Apple. And the question and the answer seems to be just one term, AI. artificial intelligence, or how they like to call it, Apple Intelligence. Let me break down some of those announcements for you. You know, each year the iPhone event gets all the attention, but forget the hardware this time. This one was a software revolution, much needed for Apple as well. Let's break it down. Siri AI. Yes, that's what it's called. No longer just a basic voice assistant. Siri now gets full-on screen awareness, deep contextual memory, cross-app actions, and a dedicated app bridging your iPhone, Mac, and Vision Pro and Watch and all other Apple devices. Also, visual intelligence now lets you point your camera or highlight your Mac screen for instant AI context. Meanwhile, Image Playground gets photorealistic generation, and the Photos app introduces spatial reframing. Incredibly cool, literally changing camera perspectives post-shoot. So you could have this shot and generate a much wider frame for me using AI, the kind of stuff you wanted to see on Apple devices a long time ago. There's also updates to Safari and stuff like that, but it's all powered by new Apple foundational models built in collaboration with Google Gemini, who you or I were not too long ago. They've partnered with them to make the AI dream a reality. The kicker though, it remains completely secure via on-device processing, and for the complex tasks, they have private cloud compute. Now, the bottom line is that Apple isn't just catching up now. They are embedding a deeply connected ecosystem-wide AI assistant into everything you do. Over 1 billion devices now with AI. This is Apple's definitive leap into the future, and you can safely say that they have firmly cemented their place in the AI race with these updates.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic
Good afternoon. You're watching Small Cap Buzzers, where we talk about all the small cap stocks buzzing in trade. Let's see what we're going to cover today. We're going to speak to the management of Gulshan Poly. Well, the interesting point over here is they are expecting growth come back from FY28. One is, and this is. So basically they're going to re-enter into a growth phase, and the focus is on specialty and import substitutes, which will actually help them to improve margins for the company. Moving on, we'll also talk about Panacea Biotech. We'll also speak to our fundamental guest on this. Well, the stock is buzzing as they have launched a DenStar dengue push, and they're targeting Africa and global markets as well. Now, what Zenic did to work hard, maybe their dengue drug will do wonders to Panacea Biotech, and hence we are seeing a solid move in this stock. We're going to speak about that as well. Moving on, we'll also talk about Fino Payments Bank. Again, this is a May update. If you see, the deposits are up 29% year on year. Loan disbursals surge 186%, and hence you're seeing that surge in the stock price. And lastly, we are also going to talk about stud accessories. If you see, the stock is up almost 11 to 12% in trade, if I'm not wrong. This is, of course, on the back of volumes, huge volumes over here, which are trading at 60 times of its 30-day average. So these are all the stocks and the management that we're going to cover in our small cap buzzers. But Sharad, before talking to the management, how are markets today doing?
Well, markets are showing a good kind of signs of reversals, but the small cap is where the action is, and of course Nifty has made a recovery. Nifty Bank setup is better, but Nifty small cap 250 index. Let's see the top gainers here. What's happening here? Panacea Biotech, Mahindra Holidays, Morpen Labs, Winsor Machines, Suven Life Science, all of these stocks are up more than 10% in trade. Of course, there are some corporate developments happening in this counter, but the volumes are strong. What's not working in terms of losers, we are having some sell-off in the textile names, especially like Kitex Garments, Dreamfolks, GNA, Axles. That is where the sell-off has intensified. Even if you look at it, Antiplus, Ceylon Energy profit booking goes on. Same thing goes for Black Box and Balrampur Chini as well. So action is happening either side, but overall the breadth of the market is still under the favor of the bulls. But moving on right now, we're joined in by Aditi Pasari. She is the Joint Managing Director at Gulshan Polyols. Good afternoon, Aditi. It's always a pleasure to have you with us at NDTV Profit. First question I want to understand is from FY28 perspective. You plan to enter the specialty and the import substitution chemical segment. Now, what specific areas is the company actually targeting, and is there any kind of a guidance or numbers for that, Aditi?
Hi, Sharad. Thanks for having me here. So yes, that will be the next phase of our growth, and it will be in the specialty chemical segment. We are always looking at import substitutes whenever we want to add a new product, anything which is not yet being produced in the country, which is being imported in a large way. So we are in the process of identifying products and finalizing the project. We will give it out to our viewers as soon as we have finalized.
Understood. Hi, Varsha, this side, pleasure to have you. I just wanted to understand, I think the potential revenue that you're expecting from this project is around 1,000 or 1,500 odd crore. Is this the peak revenue? And also what timelines, should investors expect for the meaningful contribution?
Any new capex which we will be doing will be a mega project. And definitely, when we pick up a project, we are expecting at least turnover ratio of 2 to 3 times. So yes, 1,000 to 15 crore, 100 crores would be fair enough to say.
Right. And Aditi, also, talking about the current order book, which is around 1,250 odd crore of 18 crore liter. But you had applied for 23 crore liters and got lower allocation. Just wanted to understand what led to this shortfall, and how confident are you to close this gap of around 22 crore liters this year?
Considering the current orders that we have in our hand and the new tender which will be coming up, the new ethanol tender in the month of November, we are very confident that we will be able to do an order of 23, we will be able to receive orders of 23 crore litre of ethanol supply in the current financial year. Considering the boost of ethanol blending and the government's increased interest in blending ethanol. So we are very, very confident that in this financial year, we will be able to get orders of 23 crore litre, which will give us a revenue of almost 1,800 crore litre in the ethanol segment. Apart from that, the grain processing segment, we are confident we will be able to do a revenue of about 800 crores, and another 100 crores should be coming from the mineral processing segment. So all put together, for this financial year, we are forecasting a top line of about 2,700 crores.
Then Aditi, a lot of government initiatives are also being announced right now, especially on the flex fuels front. It's very nascent stage right now for India, but nevertheless, E25, E30 and even E100 pilots are going on. So how is your company projected, or is there any R&D happening here? Any kind of product announcements we can expect from it? And what are the large scale opportunities coming in, Aditi, from this?
So we are very happy that government is focusing on increasing blending. It is the way to go forward. See, government has saved 40,000 crore in foreign exchange in this current year itself, with blending 20%. And as this blending increases, we are expecting the current requirement, which is about 1,200 crore litre, to go up to 3,000 crore litre in a year, which will almost save more than 1 lakh crore of foreign exchange for the government. And whatever this gets saved will basically go to the farmers. So it is a win-win for the government, and ethanol blending is the way forward for the industry and for the country. And as far as our company is concerned, we currently have capacity to produce 26 crore litre, and looking at the current scenario where government is pushing blending, we are looking at ramping up this capacity by another 30% in the next 1 year.
Right. And, considering the capacity expansion that you're doing, what's the estimated capex and how you're going to fund it?
This funding should be mostly a combination of debt and equity.
Okay, so
and expected capex would be about 100 crores.
Okay, so is internal accruals enough, or you're going to raise money?
We may see along the way, but internal accruals may be enough.
Understood. Understood. And also, you also talked about, the revenue guidance that you've given for FY27. How, what's the PAT margin is looking like? Can you see an, upwards growth when it comes to the PAT margin?
For FY27, we are expecting an EBITDA of about 11 to 12%.
Okay, understood. And, Aditi, Q4 profitability, was without subsidy support. Should one assume that the core business is strong enough to, deliver that double digit of EBITDA margin without any policy benefits?
Yes, absolutely. The current operational margins would be 11% and above. And any subsidies which we will receive from the government will be on top of that.
Right. And also, I wanted to talk about the grain segment recovery. So, in the con call, you were mentioning that the worst is over for grain processing. Now, what are the early signs of recovery that you are seeing on ground?
So already we see that domestic prices have increased for all our products in this segment, which is sorbitol, starch, and fructose. This was mainly because the export, which had become unviable 2 years back, is again viable. And there is the domestic demands and the domestic prices for these products has improved. As a result, I see this segment, which was almost at a no profit, no loss kind of EBITDA margin. We should be looking at least 5% EBITDA margin from this segment alone in this year.
Understood. And also onto the minerals chemical stability. Now, so do you reckon that the margins will be at 24%? And how should one think about growth over here? Just, because this segment has been a stable cash flow business for you. So what is the growth expected when it comes to this counter for the next, 2 to 3 years?
See, this segment is, it's actually our legacy product. The company was started with this product. It is almost a 40-year-old product. It is not scalable, so we don't see any major growth coming from here. But the revenue and the bottom line will remain constant and stable.
All right, got that view. Well, thank you so much, Aditi, for joining in and having a conversation with us. A pleasure to have you.
Thank you.
Well, this was Gulshan Pauli outlining the growth prospects for the next 2 to 3 years. But let's also invite the guest for our show today, Avinash Gurashakhar, who is founder and head of research at Avinash Mentor Research Services. Avinash, what do you make of Gulshan Pauli? You heard the management. What are your views on this counter?
Yeah, Varsha, I think first of all, the performance for March 26 has been very strong. In fact, bottom line of almost 107 to 108 crores. And my sense is, the kind of expansion which the company has planned for the next 12, 15 months, I think should definitely propel the volume growth throughput. And margins, as the management said, if they average around 11, 12%, that is definitely going to increase the earnings growth quite commendability in the current year, that is FY27 also. One noteworthy part about FY26 was out of an EBITDA of 230 crores, the operating cash flow was almost 206 crores. So the operating cash flow to EBITDA conversion has been very strong, almost 90-odd%. And that actually shows a very high degree of good working capital management. So I think, investors can definitely think of adding the stock, on every decline. Over the next, say, 12 to 15 months, if they can deliver on the numbers, I think the stock can get re-rated further.
Right. So if the stock delivers, re-rating is there, but you need to wait at least 15 to 22 months. But another interesting segment which you don't need to wait is the F&O market setup, which I get. And of course, the cues which are shaping up the trade today. But let's pull in how the Sensex and BankX is working. And of course, the technical setup for both Sensex and BankX is good. A good buying is happening, especially in the banking names, Interglobe Aviation, SBI, ICICI Bank, to name a few, are the top gainers. Of course, a little bit of sell-off is happening in a couple of Tata Group of companies. But let's see what's the action. It's stock-specific moves if we speak about it. Long build-up, we have PI Industries and Bank of Baroda. Good buying happening in the banking names. PI Industries, of course, on back of important corporate development. Of course, Varsha had covered that. Short covering also, there are certain names. This includes Indian Bank and one of the traders' favorite stocks, RBL Bank. That is where the momentum is happening. Long unwinding, let's see what's there. Largely Oil India and ONGC. This is, of course, on the reversal of Brent crude prices, which we have seen as the global situation tries to cool off from what happened 2 days ago. And lastly, short build-up happening for Oracle Financial Services and Tech Mahindra as well. But of course, not that much convincing, but nevertheless, IT stocks are seeing a little bit of sell-off or the reversals. So that's the entire thing in the F&O space. But the small cap space, heat continues. And after this break, so stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact.
Welcome back to Small Cap Buzzers, and just wanted to give a heads up on the Brent crude prices. That has actually come down, and I know now it's below the 93 per dollar mark. If you could just show the intraday chart for Brent crude, you realize this is also aiding the sentiment for the Indian markets as well. And of course, there's a good momentum happening as well. But there's also good momentum happening in a lot of small cap companies, especially Panacea Biotech. Interesting announcement also coming in from that stock, one of the top gainers in the overall small cap indices. And to understand more, we are joined in by Parth. Parth, the stock is up almost 14% in the day's trade. What's the key reason for that?
Absolutely, Sharad. It has been a great week for Panacea Biotech. The stock has hit a new all-time high today by gaining over 15% in trade, and today the volumes are 9 times its average 20-day volumes. So really good momentum in the stock. This is the stock's largest weekly gain since August 2024, because in the last 4 days they have gained, the company has gained 50% almost in its share price. Now the reason behind this is the new launched Denstar project that will expand their dengue vaccine vaccine access across Africa and global markets as well. This 4-year EU-funded project will reduce the rising dengue burden as the vaccine targets all the 4 strains of the virus and is in late stage trials at the moment. And because this is a single dose vaccine with no pre-testing required, the probability for a large scale rollout is fairly easy currently. And in India, the vaccine is in late stage development with phase 1 and phase 2-3 trials are expected to be in Africa going forward in this year. Now, what makes dengue all different is that it is a single shot tetravalent vaccine, and it targets all the 4 stereotypes of the virus equally. It is also designed to offer broader protection with very few side effects compared to all other vaccines in the market. Now, what will be next for Panacea Biotech will be that it's first expected indigenous dengue vaccine launch in India, and it will be the second only single shot dengue vaccine globally. So that is going to be a big thing as well, and the commercial launch for this vaccine is expected in the year of 2027.
Thanks a lot, Pat, for that detailed analysis, and the stock is also holding up. Avinash, just wanted to get your views on Panacea Biotech, an interesting small cap company in this pharma space, and it has been doing really well. Fundamentally, how do you think this pans out going ahead?
I think, Sharad, the stock has already moved up by 50%. Most importantly, this dengue vaccine is going to be a game changer for the company. So I think the markets are definitely going to look at the commercial launch of this vaccine in India, because in India also there is a big market apart from African markets where this vaccine is going to be launched. So I think definitely medium-term prospects appear to be good, but I think investors who want to buy this stock should wait for some time. The stock has run up very fast on this news flow. And I think going ahead, if there is some profit booking, which hopefully it will come, that would be a good time to accumulate this stock, because clearly the benefits of this are going to be reflected in 27, 28. So I think it's a good buy on dips. I think whenever the stock corrects for whatever reason, it could be a good addition to the portfolio.
Understood. Well, moving on, studs accessories, let's, pull up that counter as well. What that stock is doing is up almost 16% in trade. Now, this is on the back of, higher volumes. Volumes are trading at 60 times of its 30-day average. Just, what does this company do, and what are the key triggers for this company? One is they are manufacturer of two-wheeler helmets and motorcycle accessories, and the key triggers is of course the business mix transformation. They are going into premium, and export is now the key growth driver for the company, and the better mix is actually driving the average selling price and margins. Onto the export growth strategy, well, the exports in FY26 stand at around 20%. Versus 16 or 17% earlier. They are targeting 23 to 24% of exports in FY27, and the medium term target stand at around 30%. So, normally the realizations are better when it comes to export, and hence you have a inch towards the margins. Key market expansion is, of course, they are focusing on Mexico, US, Italy, Turkey. And the current share, if you see, is less than 1% in the larger market. But few things that one should watch when it comes to this counter. One is the Q1 margins may remain under pressure due to raw material cost, and the recovery is expected as cost ease. Exports and SMK mix are key for margin expansion, so you should watch out that whether company is actually inching up their exports, and the capacity ramp up are some of the is a key for growth visibility. So overall, a lot of things are actually working, but yes, Q1 margins may be under pressure, so you need to keep a watch on that. But Avinash, coming to you on this studs accessories, what's your view? And considering the huge run up today that we have seen, what would you advise to investors?
No, I think, Varsha, definitely the stock is in limelight today. But if you see the Q4 numbers, I think numbers were more or less flattish. And as you rightly pointed out, Q1 of FY27 is going to be a little challenging quarter in terms of prices, in terms of raw material cost. So I think, today's price increase is a little surprising. But I think, yes, they are a large player in the helmet category. And I think if they definitely boost up their export revenue, then I think margin should improve. So I think it's better that you wait for the Q1 numbers and take a call. I think you probably get a better sense from the management commentary. So it's a hold from our side. But yes, long-term prospects appear to be quite good.
Coming in for studs accessories. Thanks a lot, Avinash, for your time and giving your views on these interesting companies. Another interesting company on my radar is Fino Payments Banks. Let's pull out the chart. Of course, a good momentum is happening. There's a interesting operational update also at play, and Shivam is tracking this banking sector very diligently. Shivam, what's the update on Fino Payments Bank? And of course, on a full year basis, the stock is still down 40-odd%. But is there a kind of a silver lining right now on these numbers? How does it look?
Well, yes, the bank has reported its operational business updates today, and according to the data, the bank has added 2.93 lakh customers in May month. Now, the renewable income business has seen a muted growth of around 1% on a YY basis, while the deposit growth has seen a good moderate growth of around 10%. Now, the active customers of the company has seen a strong growth of around 22%, which aligns with the loan disbursal, which has surged over 3 times to 210 crores in this month. Now, looking at the management guidance for FY27 and outlook, the management has stated that the CASA and retail deposits are the key growth driver going forward, and also the margins are going to improve on the basis of the segmental mix. Now, company is focusing on high quality and higher balance customers, and OPEX discipline for the cost to income ratio is going to improve despite the investments in tech and compliance side. Now, also the bank targets around 20% of return on equity by FY30, which will be led by the secure lending model.
All right. Well, thank you so much, Shivam, for all the details. But viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve those stock-related queries that you might have. So do start sending them on the numbers that are flashing on the top of the screen. You can also call us for the stock-related queries as well. Speak to our guest and get those resolved as well. But before we do that, a very quick check of how the markets are doing, because yet again, we started off quite decently actually in today's picture. We were, the implied open did indicate a start in the red, but we started off very decently around 23,250. Then that bottom made in the middle of the day, and then we've seen buying again. So hopefully the next 90 minutes continue to do so at this point of time. When you also look at the heat map for the Nifty 50, individual stocks that continue to do well in the morning were Trent as well as Indigo. And right now you've seen Indigo actually starting to see much more follow-on buying, almost up 3.6%. Aisha Motors, SBI, Jio Financial as well as ICICI Bank are now doing well, while Trent has actually now not slipped in the red but continuing to be in the green at this point of time, not the top gainer though. In terms of the losers, Titan, ONGC and Tech Mahindra continue to be under pressure. But when you also look at the sectoral heat map, because now we're very, very even Stevens in terms of the advances and the declines on the Nifty 50 heat map. So the sectoral heat map will be very important. Let's go across to that because it's not individual like IT or a particular index that's dragging the markets down in one direction, but it's a 1% downtick on IT. The PSU banking is seeing some buying though, so up almost 3.4%. The Nifty Bank is also up almost 1.8%, and Nifty Auto is starting to see some follow-on buying now. So very interesting as to what's happening with both these indices at this point of time, and the sector heat map is telling you some perspective as well. The advance decline ratio is the other one, was up almost 4:1 in terms of favor of the advances in the morning, and while that has slightly come off, the trajectory continues to be very well. So we're taking those positives. Mid cap, small cap index also were doing well in trade today. Mid cap was up 0.8% in the morning, and that has continued to do so, while the small cap index was almost up 1.3%, and just continuing to doing well in trade today, up 0.8% as well. And finally, the individual movers, before we start taking all your stock related queries. You've seen that on Rajesh Exports, which continues to be down and out by 5%, locked in lower circuits. You're seeing Avanti Feeds also being slightly under pressure, while Data Patterns, MHRIL continues to do very well, up almost 8 to 13% odd. But let me welcome in our guest for the show. On the fundamental side, we have CA Tapan Doshi, research analyst at catapan.in, and we'll be also joined very shortly by a technical guest as well. But Tapan, very good afternoon to you. Thanks so much for joining in. Let me go across and start taking the first question with you. It's on a smaller name, Bharat Rasayan. Our viewer Sriram holds shares at almost 2,600 rupees and asking if we should continue to hold this counter in the near to medium term. What would be your view?
Well, if you say Bharat Rasayanam, no, its demand recovery is expected by next year. No, of course, export opportunities are there and new product registration are going to continue. The main thing is whether they are able to increase the margin or not. The problem is that is a bigger problem. China plus one policy is supporting Indian players, but the only thing is the inventory normalization is ongoing. Again, the revenue growth is very well modest only. Okay, so beneficiary of Argo recovery is there. My take is that no, I think one can hold this stock for a little bit longer. I think maybe 1 or 2 quarter things will be better.
And Tapan, since he's bought it at 2,600, so he's currently sitting on a steep loss. Would you recommend him to just continue holding, or is this a good time to average since the next 1 to 2 quarters look good?
Well, I'll not tell him to average, because these are some of the stocks which may go down more. So just wait for 1 more quarter, then take a cue rather than averaging. Lot of averaging, again, the holding will go up. That is a problem.
Point, Tapan. But the next question also, our viewer Ravi Kumar from Hyderabad wants to enter into Park Hotels and asking if it's the right time to invest 50,000 rupees in that. He's not mentioned if he already has exposure in the hotel space. But Tapan, on the individual stock, would you recommend him to buying into Park Hotels?
Well, Park Hotel, if you see overall, I think the hotel demand is strong, no doubt about it, and occupancy is going to remain strong. The only thing is, we have to see it is much more dependent on the metros. Okay, it's not there in the smaller cities, and the management is pursuing towards an asset-light model. So, of course, seasonality is there, but overall, I think I'm quite bullish on this sector. So, yes, he can add it, but in a SIP manner, better to add it.
Got that view, Tapan. But viewers, you can also call us for your stock-related queries as well, and the landline number for that is flashing on the top of the screen. But the next question, and this one has been focused for a while now, which is Bliss GVS. Now, it got acquired by Anupam Rasayan in this quarter. Saw an up move on that news. Let's look at the 1-month chart or the year-to-date chart as well, and that will give you perspective of what triggered that up move on Bliss GVS as well. And it's up 56% in just this month. Continues to do so this year as well, about 158%, so has done well for investors. Now, VSS Sastry actually bought these shares at 275, so he's ridden up a lot of that up move that we saw in the stock. Tapan, his question being, should I hold on or book out profits for his 500 shares? What would be your opinion? Should he ride the wave?
So if you see, the scale is quite smaller of this company, and the momentum is already there, and Africa business is expanding. Again, new registration are happening for the products, and margin improvement is going to happen. But the only thing is the limited domestic focus and no regulatory risk is there. So yes, I do agree with him. Better to have some profit in the pocket, and rest of the stocks he can keep it. Overall, it's an export-led business model. So after 1 or 2 quarter, if it goes in, then he can hold it. But yes, he can book some of the profit for now.
Got that view, Tapan. But let me welcome in Kunal Shah, Senior Technical and Derivative Research Analyst at Mirae Asset Share Khan. Kunal, thanks so much for joining in. Good afternoon. The first question coming to you. This one's coming in from Lenin from Hyderabad on Shriram Finance as well as Chola Finance. He wants to enter both of those counters now. asking if it's the right time and what are some of the targets you're watching out for?
Yeah, I think, definitely. If you look at the NBFC space, they have seen a good beating up in the recent times. For Shriram Finance, what I would suggest is wait for a stock to give a close above 920. 908 it is where trading currently. A close above 920 will have a confirmation for a bullish breakout, and then probably you can see the stock rallying towards 990,000 on the higher end. So close above 920 will be a buy with a stop loss of 890 on the downside.
Got that view, Kunal. But the next question coming in, this one's also an interesting one from Gautam from USA, who is a regular viewer. His question being that he's holding 700 shares of Bikaji, but he's bought it at 800. So he's currently sitting on a loss on that counter. Stock's trading just a tad around 650 rupees per share. So he's currently sitting in a loss of 1 lakh rupees, Tapan, asking if for the next 12 to 18 months, is it a good idea to sell Bikaji and buy Varun Beverages? Now, Varun Beverages also is an expensive counter, but what's your view on both the stocks, Tapan? Would you recommend that?
So yeah, Bikaji is little bit struggling. Now, mostly this complete counter is struggling because overall now the inflation is going to go up, that I seems, and no margin will be in a pressure. Again, the competition is intense in this criteria, in this area. Again, seasonal demand fluctuation is there. So yeah, overall the difficulty will be there. But Varun Beverage is also there. Also, there is a lot of competition from Campa Cola, and still I feel that also is expensive. So my take is no, he can partially do it, not fully. He can go partially to Varun Beverages because Bikaji also I think maybe after 2-3 quarters things will be settling down. So partially he can do maybe 40% he can go into Varun Beverages.
Got that view. But the next question coming in on Titan now. And Vijay from Chennai, he wants to have a short-term target of this counter. Now, Kunal, what would you recommend on Titan? Because you've seen last few days has been quite good for the company, today around 2%. But on the charts, what would you recommend?
So I think on the charts, if you see, it has been consolidating. 43, 40, 43, 50 has been a strong resistance zone for the stock. Till the time that is not taken out decisively, probably you might see the consolidation, and the lower end support is at 4,000. So probably a 300, 350 point range in which I'm expecting the stock to consolidate. If he's holding on the long side, continue to hold with a strict stop loss of on the downside. That is the low what it had recently made. That is of 4,002. If that is breached, then exit your longs.
Got that view as well. But the next question, and this is a very interesting one because we have a lot of questions on it, but not too many answers, and that's Ola Electric. Now, stocks flying in trade today. There's not much in terms of news flow that has happened. The latest one was the QIP in the first week of June. We discussed that on the show as well. But also the other one, that's Vodafone Idea, and Bindu from Hyderabad wants to enter both of these counters asking if it's a good time to enter for the long term. Now, Tapan, we've discussed this with you in the past as well, but I think since then, we've seen, I think the second or the third month of sales crossing 10,000 and the QIP of 780 crores. Now, that was also upsized. So, company is flush with money now, but how are you making sense of this up move as well? Because from almost the lows of 22 has been a very strong up move. What's your view on Vodafone Idea as well as on Ola Electric?
See, all the new institutional players are betting on the BESS and overall the Gigafactory. And in future, they feel that the stock is inexpensive. That's why they are getting at this level. And Vodafone Idea, because of the current news, you can see the liability is slowly and gradually increasing, but still they have a 2 lakh crore liability already there. Honestly, my take is both the stock are quite expensive, and it's a high risk bet. So if she can take risk, then only enter. I think better competitors are there in both the sector where there it is Airtel, and here it is I think Ether or Bajaj or Hero. And I feel that lot of execution risk is there for both the companies. So my take is avoid from my side for the long term. Better competitors, you can look at it.
Got that view, Tapan, but most certainly has been a very strong up move for Ola Electric over the last few days especially. But let's go across, take another query from Sagar Pathak from Mumbai. It's on Great Eastern Shipping. He bought the shares at 1641 and has been holding on to this counter, currently trading at 1427. Asking that it's been last 1 week or something has been very weak. But what do you make of the move, Kunal? Is there a chance of revival to his buying price?
I think overall the stock has been one of the big outperformer if you even look at the monthly charts, and now there's a cool off that is happening into the stock. So probably you might see a dip or decline towards the support zone of 1317, 1320 on the downside, and probably from those levels any reversal would give you a good confirmation on the upside. So my sense is if he's a long-term holder, then definitely it should continue to hold. But if it breaks 1300 on the downside, then probably he must exit as long position.
Got it. Well, next one that's coming in is on Britannia, and our viewer Mana from Gurugram is actually holding on to these shares for the last 2 years, bought at 5830. So, pardon me. Problem is that he bought it at that peak, I think, of 2024, and since then has seen a correction. Asking if he should still, is it advisable to basically still hold on to it, average down, or should he buy into some other FMCG player? Tapan, what would be your recommendation? Because broadly, all FMCG players are, probably waiting to see the impact of inflation amongst others. But would you advise that switch?
No, actually, the whole sector is in a pressure because of maybe inflation going up. Again, the volume growth is okay, not so great compared to the valuation they are driving. Again, commodity inflation risk, we don't know how much it will be. Rural recovery is still gradual. Competition is intensifying. Of course, premiumization strategy for Britannia has worked, but still I feel the valuation is on higher side. So my take is don't get into again FMCG. Better to go to other sector. And for Britannia, I think still it is expensive. So don't average it.
Don't average on Britannia is what Tapan recommends. But the next question that we have is on Kirloskar Pneumatic, and Dilip, who's from Kolkata, is holding on to shares at 1250. So he's currently sitting on decent gains actually at this point of time. But Kunal, question being if he can add more at this price, and that's his question. But he's sitting on good gains also. What's the chart suggesting?
Yeah, I think this is one of the stock where you need to average upwards. I think the larger term chart is also looking extremely bullish, and there could be even further new highs into the stock as well. So definitely my recommendation would be to average even at the current levels. Now the support on the downside is at 1450, 1460, which I'm not expecting it to break. Even on the weekly charts, we have seen a good reversal that has come in. So I'm expecting the stock at least to go towards the mark of 2000, 2100 in the very short to near term.
Got that view. But the next question is coming from Anuj from Delhi, and he's holding on to ICICI Pru Life, bought at roughly around 513 rupees per share. So currently sitting on a slight loss, but asking if he should continue to hold on to his 1300 shares or switch to some other insurance counter. Tapan, the whole space actually, barring I think SBI Life, hasn't done too well, right, in terms of returns. Would you recommend him to continue holding iPru Life or buy any other company in the insurance space?
No, see, even I like SBI Life much better than ICICI Pro. But from here also, I think if he is a long-term player, decent return, he'll get it. See, protection business is growing strongly. Again, VNB margin improvement is there in future. Agency channel expansion is there. Again, yes, persistency metrics are also improving for most of the companies. For ICICI Pru also, yes, regulatory changes will be there, but overall this sector penetration is much lower. So I think he can hold on to this stock, and in future, if he wants to invest, he can invest in SBI Life also.
Got that view, Tapan. But Tapan, viewers as well as Kunal, it's now time for the rapid fire round in this edition of the show. You both know the drill. The first question coming in on Techno Electric. M. Ahmad has noticed that the stock's down 25% post results. But Kunal, does it consolidate at these levels? Is it a good time to look at it?
No, definitely not. I think overall the larger term structure has gone weak. So already the stock has witnessed a sharp correction. So bounces should be utilized as an exit opportunity.
Got it. On RBL Bank also, our viewer Rajiv Mukherjee is holding on to shares at 323. But Tapan, he's bought 10,000 shares of the counter. Should he continue to hold?
Yeah, currently hold, but in future, no, please reduce the exposure.
Got it. Well, the next question that's coming in is on transformers and rectifiers. Our viewer wants a 3-year horizon. Is it a better pick, Tapan, or should he go to larger players like GVTND is his question?
No, this one is also good. I think he can hold on to this one.
Got it. Next one that's coming in is on Sundaram Fasteners, bought at 940. Kunal's question being, should he continue to hold on or exit this counter, Sundaram Fasteners?
Continue to hold with a stop loss of 785. If that is reached, then exit.
Got it. Next one's on MCX. Is it a good time to buy, Kunal? Is what Mr. Raju is asking.
Yeah, from a short-term perspective, yes, but from a long-term perspective, no.
Correct. Next one, that's coming in is from Satyan. Between CDSL and NSDL, a better pick for the long term. What's your view, Tapan?
CDSL.
Next question coming in, and I think we've covered CDSL, but between BSE, CDSL, and CAMS, Venu wants to know a better pick. So, Tapan, the list expanded now in the cap market space. What's your view?
BSE on dips.
Next one coming in, from Sabita from Hyderabad, and she wants to enter into Trent for the next 6 to 8 months. We've seen, Kunal, that adjustment of bonus now. So what's the view on the charts now?
I think extremely bullish on the stock. I think overall we are seeing a flag pattern formation on the technical front. I'm expecting the stock to at least go towards the mark of 3,200 on the upside.
Got it. Well, E2E network is the other one. Dr. Lavanya from Iluru is holding shares at 441. Asking what she should do with this counter. Tapan starting to hit lower. Today it's hit lower circuit, but what's your view on the stock?
See, it's expensive, but if it's a long-term player, hold it.
Got it. Next one's from Bharat from Andhra Pradesh. He's holding on to 400 shares of United Spirits at 1460. Should he continue to hold, Tapan? Should he average down also?
Yeah, you can hold it. Don't average, just hold it.
Okay. Pramod from Bengaluru is holding. Actually, we've taken this query, so we'll take another one. This one's on Tarrell, but on the technical side. Kunal, I think we got the fundamental opinion, but what's your view?
Overall, the stock has been consolidating. Once it breaks above 328, 330 on the upside decisively, you will see the momentum coming back, and probably from those levels, the stock can go towards 440. So if you want to buy above 328 on the upside.
Got it. Well, that was the end of the rapid fire as well as this edition of Fast Profit. Tapan, Kunal, thanks so much for joining in, giving us your views across the questions that we posed to you. But viewers, all the time on this edition of Ask Profit, the afternoon edition, thanks so much for watching. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook?
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. Hi, Hiral.
Hello, and an interesting day of trade, I would say.
It is, at least for the benchmark. If you're seeing gains of just about 1/3%, this is not where the action is. The action is in the broader markets.
It is in the broader markets, and it exactly resonates with the song that you were whistling some time back with Kabhi Alvida Na Kehna for the markets right now. Because there is some bit of respite today. There is some bit of recovery today coming in, right? So absolutely resonates there right now. But clearly, bank is where the juice is today. Yeah. PSU banks and your private banking space, 2% up move coming in there.
In your opinion? For me, it is the FCNR.
Absolutely, it is the FCNR because the kind of gains that banks will see, right, on the back of this income, you'll see what's happening there. And especially if you see the PSU bank recovery, that is also very interesting. That's where the juice is right now. Let's just pull up the PSU bank index. There you go. 3.5% nearly is the kind of up move that you're seeing there. And clearly your PSU bank book is going to be stronger as compared to the private bank book when you're talking about the G-Secs as well, right?
Yeah.
And that's what the story is playing out for me as well.
So the allowance that the RBI came out with just yesterday with regard to the statutory levels that they have to manage and the use of these FCNR deposits, the fact that, and Parag Thakkar was talking about this morning, if a Canara Bank or certain other banks come through and say that they'll offer a little bit higher than what was initially offered on the FCNR in order to make it more lucrative for foreign investors to come through, it's still an attractive cost of funds for these banks, right? If you think about it, because right now, the way that deposit rates are in the market, it's not so easy to mobilize those deposits.
Correct.
So it's actually a good thing for them.
For the banks. In
It's
fact, let's
actually
just look
looking
at the
good.
contributors of Nifty 50, and that will also tell you the story of what is the kind of contribution coming in from the banking majors. If we can just have the Nifty 50 contributors, I mean, there you go. ICICI Bank, SBI, Axis Bank, top 3 coming in from there. Indigo, yes, a beneficiary in terms of lower crude prices. You've gone below that $93 per barrel mark, and that's the reason why you're seeing those kind of gains. But what's interesting is Infosys under pressure. Bharti Airtel.
Surprising, right?
It's very surprising. I mean, you did see a positive opening when you talk about Vodafone Idea and Bharti Airtel on the back of the dues that we were talking about in terms of AGR, but that has crashed. Reliance negative, Titan as well negative. Banks is ruling the roost. In fact, let's just look at the sectoral heat map and then we'll look at the broader markets as well.
We should look at the sectoral heat map. It's actually a pretty green screen, and this is because the breadth actually is pretty good. We'll talk about that in just a bit. PSU banks ruling the roost, as Hiral pointed out, followed by the Nifty Bank. By the way, on the technical levels as well, even in trade yesterday, despite that broad-based selling, a lot of technical analysts were pointing to the resilience of the Nifty Bank, and that is holding out. Auto was one of the big losers yesterday, dropped about 1.8%, and Realty is up and about. It's recovering some ground, up about 1.2%. This is an index that dropped over 2% in trade yesterday. So a little bit of comeback there. But I do want to pull up the...
one more thing I just want to point out over here is the pressure that IT is catching up to in today's session. This is something which is coming to my radar because it's been ups and downs, a constant seesawing ride, alternate days is what you're seeing in terms of IT. And in consonance to this, what's happening with defense. I mean, yesterday we pointed out a couple of things which were positive for BEL, HAL. Probably that's also playing some bit of a catch-up. So I think defense could be a sector you should be watching out for.
I do want to pull up the advanced decline ratio just to drive home the point on the breadth, right? It might have closed just a tad bit, but it's still holding at a pretty wide point. And it was the polar opposite in trade yesterday. It was pretty bleak. And so this is something that you will take as positive. Of course, the Nifty 50 is seeing a little bit of volatility and a little bit of pressure. Remember, today is the weekly expiry as well.
Weekly expiry, and you're seeing, you know, more, I mean, positivity in terms of the small cap space. Let's just pull up the mid cap and the small cap index, and then we'll look at the VIX as well. There you go. I mean, it's not been as volatile as you could see in terms of benchmark indices. Mid cap 150, and there you go. See, pretty steady, but we're trying to inch there, a 1% gain.
But having said that, in trade yesterday, these were indices that dropped far more, right?
Absolutely.
You had the benchmark that dropped 1%. Mid cap was 1.5%, small cap was about 2%.
It's come back there.
Yeah, it's come back.
Let's just quickly pull up India VIX, and then we'll look at the factors as well that you should be watching out for and the levels. There you go. I mean, 15.78 is a very good number to look at from what investors are watching out for, because this tells you that the cautiousness that was prevailing in terms of markets is somewhere going away. And I'm sure the conversations that we're hearing in terms of West Asia crisis, I know not something that we can stick our necks out and say that it's a resolution or not, but that is one of the factors which is playing out, because your Brent is at 93 already.
Exactly. I was going to say exactly that. If there is one fulcrum that will move the market in the near term, it is crude oil prices. And so if it went up to 97 yesterday, it's cooled off
below
today.
93.
Yeah, it's cooled off to below 93, and that's positive.
And that's positive. In fact, let's quickly look at the factors as well and levels. I mean, Brent below 93, one of the key positives that you should be watching out for as we're talking to you about it. Now, Nifty, the volatility is going to remain, and we can't get away from it right now. But support is coming in at levels of 23,000, and hence that bounce back in intraday trade. And then the next level is 23,100. If you see in terms of overall setup as well, it is stronger than Nifty 50 in terms of Bank Nifty. And you're seeing the resistance in terms of Bank Nifty at 54,600 and 55,000. You know, the risk of sentiment has actually reduced in terms of markets after 3 days of value bang that we saw in terms of the small and mid cap space. There is buying which has emerged in the PSU banking space today, as we were talking about. There is buying in terms of auto. However, the performance when you talk about the IT segment, that has remained absolutely muted. If you see in terms of money market moves as well, good amount of strength that is coming in when you talk about the Indian rupee, and the yields have also cooled off. So a strong reversal coming in on that front. And on the global market front, you have global assets which are pretty much steady. If you talk about Iran and Israel, the strikes have been halted, and that is a positive which is impacting your crude oil basket, having an impact again in terms of the Indian rupee as well. So overall, the setup right now is looking absolutely positive. In fact, let's get in our guests. We have Jigar Mistry, co-founder at Bond Capital, and Akshay Bhagwat of GM Financial joining in. Welcome to the show, gentlemen. Always a pleasure. Akshay, let me come to you first. There is volatility when you talk about the markets right now. However, we are way above the key support levels on Nifty 50. And the setup with regards to Bank Nifty is looking much stronger as compared to Nifty 50. If you have to take a trade at this point in time in terms of Nifty and Bank Nifty, what would that look like?
First of all, good afternoon. See, clearly it is the bank index which is taking the lead. And if you look at all the banking components, primarily the mid-cap banking space and the PSU banks are helping the bank index to garner strength. Whereas for the case of Nifty, it is the IT which has been a major laggard for the up move in the Nifty. So I believe if a choice has to be made between the two indices, then it has to be the Bank Nifty index. The technical setup is pretty strong. The derivatives open interest readings are pretty strong, which indicate that Bank Nifty soon should overcome the 55,500 mark. That is the first target we are looking, and the extended target can be till 56,000. So clearly Bank Nifty choice among the two indices to take a BTST or buying position.
Got it. Okay, what about individual stocks, Akshay? That's the question, because ultimately in the broader markets as well, even in trade today, there are stocks that are doing particularly well. You take on the back of news flow, right? You take Fino Payments Bank, you take, I believe, Serra Sanitary Ware is up and about. You have Studs that is doing well, accessories. What are the individual stocks that you're liking?
So I have two trades which I would recommend for the show. One is from the cement pack. It is Grasim Industries, which is again at a support base. It did stage a technical breakout few trading sessions back at the levels of 3,100, revisiting the support, showing good intraday strength from the support. So an ideal candidate from a risk reward payoff to buy at current market prices for a trading target of 3,200 and 3,250. Maintain a stop loss of 3045 on this buying position. And banking has to be the second name here, because there is where the entire momentum game is. And Punjab National Bank is my stock selection in the PSU banking space. Current market price 109.5. Possible technical targets work up till 116 to 118. And you can maintain a short-term trading stop loss at 104 on this buying position.
Okay, so that's with regards to where your top picks go. But let me get in Jigar Mystery as well. Jigar, good afternoon and welcome. This is Hiral on this side. My question to you is the kind of interest that's emerging in terms of banking majors today. It's PSU banking space which is hogging the limelight. How are you looking at valuations in the BFSI space, and would you be a buyer at current levels? And if so, between private and PSU, where would your bets be?
Hi, Hiral. Good afternoon, and thank you for inviting me to your show. So I would, if I have a little bit of latitude, I would like you to run through essentially what has transpired, right? What RBI did on 5th of June was essentially launched a bazooka of sorts. The amount of relaxations that has been done, both with regards to FCNRB and ECB, will potentially bring in at least $40 to $50 billion. On the higher side, about $80 billion if both retail and the leverage flows in. And that will essentially take care of the larger current account deficit that we might expect given where crude is. Now, one might think that if the RBI is willing to go that much of a distance, can it essentially take a leap further and relax some rules on the capital gains, which can do a lot more for the equity inflows as well? See, everything said and done, the debt will create a payment wall somewhere around 29-30, fiscal year 29-30-31, depending on whether it's a 3-year or a 5-year FCNRB. And therefore, if some relaxations is done on equities, which can be a little more permanent capital, then it will open up a reasonably large flow should things change. In light of that, you look at how the banking space has behaved over the past 3 or 4 months, especially. FIs can only sell what they own. 6 out of the 10 large ownerships that they have are banks. And therefore, it's not really reacting to fundamentals as much as it is reacting to flows. And if there is a semblance of flows reversing, that is why we think the markets may be, especially the BFSI names, will be acting the way they are today in trade. As a fund, Buoyant Capital has a sizable exposure to the banking names. It is among the largest ownerships that we have today.
I do want to specifically, Akshay, speak to you about the banks, right? Because this is a cohort of stocks that is doing particularly well. And it has to do with, of course, the fundamental reasons that we were just speaking about. But on the bank Nifty and on individual names in the banking index, specifically, for example, State Bank of India was one of the stocks that our technical analysts that we spoke to at the start of trade today was positive on. What would you say with regard to that?
Yeah, so absolutely. If you look at the banking pack and I were to dissect as to which banking pack is doing well, clearly the PSU banks are taking the lead here. And the flow is clearly, money flow is chasing the PSU bank from a momentum perspective. So if you talk about State Bank of India, we are at 1006. There is a small range bound consolidation breakout which we have noted on the technical charts today, and that is signaling a possible upside target till 1045 from the short term perspective. Another name you can choose here is the Union Bank of India, again from the PSU banking space. The breakout is not yet on, but possibly you may see a strong breakout in the making in tomorrow's trading session. The breakout lies at 172. So once it takes out with good volume support at 172, you can look forward for tentative targets till 180 to 182. And the third trade here will be Bank of Baroda, again, which has shown 4 to 5% of intraday gains on the technical charts and does show some promising 2 to 3% further up move from the current market prices.
Got it. Okay. Just a quick view on why banks are likely buzzing in trade. It has to do with the FCNRB deposits and the ECB raising, which is supportive, right? So what has Jeffries said? For FCNRB specifically, banks won't bear the cost of the hedge, which is quite significantly, it stands at 3.5%. Or it rather stood at that level in 2013. The second point is that the deposits will be exempt from CRR, which is the cash reserve ratio, and the SLR, unlike in 2013. So this is also significant. There is leveraging which will be permitted as well, which means that you will be, as a foreign investor in these FCNRB deposits, you will actually be able to avail of loans against them, which is quite significant. For ECB, banks and PSUs can raise, and the second point is that the bank's cost of hedge is 1.5% versus the 1% discount to market in 2013. Both of those are actually positive. The leverage, according to Jeffries, will be key attraction, 7 to 10 times the leverage at 1.5 to 2% spread, which drives the US dollar IRR of 17 to 27%. These can drive larger inflows, according to Jeffries, between $50 and $70 billion compared with $34 billion in 2013. So multiple factors that it affects. It affects the rupee. Pull up the rupee, by the way, and just see where it is. It's appreciated just a tad bit, if I remember correctly. It's not moved very dramatically. It's 95.3. It's still 0.5%. So far from the 93, 94 levels that people were anticipating on account of this, but maybe we'll head towards that mark, but also implications for the banks.
Yeah, implication for the banks. And very quickly, I just want to address the flashes at the bottom of your screens, which is an exclusive to NDTV Profit from CEA Nageshwaran, where he's indicating that meeting the 4.3% fiscal deficit target this year will be challenging. The real growth will be lower, though the nominal growth could be closer to around 12%. That's the indication coming in from the CEA. In fact, the government expenditure will depend on many factors, including international fertilizer prices. And, you know, this fertilizer discussion is something that we've been having for a long amount of time, where everyone is talking about the second order impact on fertilizers, and that is going to be a bigger impact for a country like India. What he's indicated is that it's not impossible, but a tough task to meet the target this year when you're talking about the fiscal deficit target of 4.3%. And that is a very important statement that is coming in from the CEA. Apart from this, what he's said is, in terms of the currency devaluation, that the rupee is undervalued at this level. And from a fundamental perspective, the rupee is absolutely attractive. Financial markets have taken a very homogeneous view that Asian countries are large energy importers from the Persian Gulf. Therefore, the view has been that investors should not be buyers of the Indian currency. However, if you look at the market views, they are reflected in the dollar-rupee rate, and India's fundamentals are solid, and on that basis, the currency is undervalued and competitive. Alex, what do you think of these comments coming in from the CEA, one, on the rupee, and two, when you're talking about the fiscal deficit target as well, 4.3%, categorically saying that it is going to be a tough task. I mean, it's not going to be impossible, but a tough task.
Yeah, but so again, it makes sense ultimately because to a certain extent, the government is protecting the end consumer. It's not something that everybody else is doing, right? So this is spending that the government is going to have to do. It's shared between the government as well as the OMCs on crude oil. But ultimately, it's a provision that is allowed for in the law to say that external situations like war in West Asia will give the government a little bit of room on the fiscal side. And we've been on a consolidating path for some time. And who knows, you can have a situation where a divestment takes place in the second half of this year. The government has ample opportunities to do that.
So that's all. It's not an impossible task. It's a tough one. That's the only comment coming in there. But very quickly, PI Industries, sharp rally coming in there, and NDTV Profit was first to actually flash this with regards to their key client, Kumaya, who's gone ahead and upgraded their outlook for H1 CY26. Why does it matter to PI Industries? Varsha joins us with all the details. Let's talk. Seeing some smart moves. Varsha, I mean, PI Industries is an interesting one to look at as the stock of the day today.
Yes, absolutely. And you know, PI Industries, if you see, Kumaya is the largest client, I would say, for PI Industries. And Kumaya raising guidance has actually led to the buzz. Let's see, the revenue guidance has been raised, by 10.9% by Kumaya. Even the operating profit guidance has been raised by almost 70%. This is huge. This is due to the strong demand visibility that they are expecting in one of their product, Exeev. Now, why PI Industries is in focus? Because PI supplies pyroxasulfone to Kumaya, which is a key ingredient in their product, that is Exeev. Now, overall, if you see, this is a herbicide, and this contributes, or this herbicide forms almost 35 to 38% of the PI's total revenue, and hence you are seeing that the client raising a guidance will actually help financials for PI Industry, and hence the stock is up in trade today. Now, but we also have to consider the other factors as well. We saw weak Q4 FY26, wherein company missed sales, EBITDA and PAT estimates. Even EBITDA declined due to a negative operating leverage, and the margins were compressed sharply. Outlook for the company remains uncertain. Now, why do I say this? Because FY27 no revenue guidance has been given. It remains vague, undirectional. Also, gross margins is expected to likely stable, but higher OPEX may pressure EBITDA margins going forward for the company. And the near-term risk in the pyroxasulfone, the generic competition is expected from Q1 FY27, which will impact pricing and volumes for the company. H1 FY27 is expected to be weak despite positive demand signal. This is said by management, by the way. But the gradual recovery is expected only in H2 FY27. Lastly, CSM business, which is the core business for the company, if you see, is down 15% due to global agrochemical slowdown, and there's been seen a weak demand when it comes to patented molecules, which has been impacting growth, and domestic business also declined. So overall, while this news is a positive one, but you also have to consider the other factors as well.
Positive news. Thank you so much for that. I know the management of EPAC Durables is absolutely waiting by patiently, but we'll go to them. A quick question, Jigar, with you in terms of where PI Industries go on the back of the announcement that has come in, with where valuations are stacking up, with the way the industry has been right now on the back of the West Asia crisis. How would you look at this one?
Sorry, Hiral, we don't own the space. Stocks anyway, we are not allowed to discuss.
Okay.
But it's not something we are interested in.
All right, no problem. Stay with us. In fact, EPAC Durables, that's another one that you should be watching out for. There has been a sharp drop in AC sales and inventory-led working capital stress as well. But the question is, with the summers coming in, what is the outlook looking like? Joining us on the show is the management of EPAC Durables to talk to us about FY27 as a whole. Ajay Singhania joins in, MD and CEO at EPAC Durables. Ajay, welcome to the show, and it's always a pleasure to speak to you. My question is, if you have to look at the fourth quarter and if you have to look at what happened in FY26, everything was absolutely depressed in an industry like yours to some extent when we speak to other managements as well, and everyone was hoping for a ray of hope. The sense that we got this time around as well, that it's not as good as we had anticipated, but probably things will improve. What is the trend telling you now?
So good afternoon. First of all, after a very subdued and a pessimistic FY26, I think we are in for a better 27. And the first 45 days or so, I mean, starting mid of April onwards, we have seen the heat waves, we have seen the El Nino effect, and we have seen the delayed winter, the delayed rains everywhere. So the market has responded well. The tailwinds are very strong. We've seen brands liquidating inventory largely, and new production orders coming up. So yes, things are very positive now, and most of it, the increased prices is something which was a worry point for most of us. So that seems to be well taken now and settled. So the price increase has been accepted widely across the channel. So that's a better thing. I see that now inventories have come down, prices have been accepted. So going forward, I think 27 is going to be much better.
Ajay, good afternoon. Alex here. Could you help us put some numbers to that, or at least some color to that? If you say that it's better, how do you define better?
Okay. So see, overall, if we look at FY26, industry-wide, we are seeing a 20 to 25% of degrowth for the whole industry in terms of the sales number. And same was with us as well. So we saw the AC business degrow by almost 33%. Whereas if we compare it with FY25, which was one of the best years in the last 5 years, current year is on track to pass the 25 growth. So definitely, I mean, I'd not like to compare it with FY26, which was a very slow number. But even if we compare it with FY25, we see a definite growth. So a growth of, let's say, almost a 10% on FY25 number, or a growth of 35 to 40% on an FY26 number is something which is a positive sign for us.
For the industry as a whole. Okay. So then what does that mean for your financials? And at the same time, when you're talking about price absorption, this has taken place. But let's face it, for the segment that you're talking about, there is a significant amount of inflation. And so those pressures will likely continue through the rest of the year as well, Ajay.
Right. So see, like you rightly said, it's the INR depreciation, the commodity increase. So everything, all the worst that could have happened in the fourth quarter, and everybody of us had to take a hit on the margins. But now the price increase, which was passed on in a phase manner to the market, has been accepted. And henceforth, from May onwards, we are seeing that prices stabilizing, or the current prices not increasing any further. So whatever price increase we have passed on to the market has been accepted. And we see that overall the margin should improve from the mid of Q1 onwards.
Ajay, my question to you is, what happens in terms of where the inventory goes? Because I think that was one of the concerning areas for the industry, not only yours. So how are you looking at the inventory, and when do you expect that working capital then to normalize for you as well?
So, see, typically for a AC industry, Q1 is the quarter wherein the inventory should get liquidated, and we should not have any overflow beyond July, when the rains actually hit the almost the entire India. So, based on the sales volume indications we are getting from April and May, it seems that the inventory levels have normalized, and hence the production quantities also have been very good for April and May. So that gives us a lot of confidence that going forward, we will not be in a position carrying an excess inventory once the rain season starts. So that gives a lot of comfort, not only to the brands, but also to the dealers and distributors. So I think it's one of the best situations we have ever had in the last 4 to 5 quarters.
Ajay, so therefore, with regard to the pricing from this point on, what is the kind of outlook that you have in terms of ability to pass on? You've said that there has been some absorption. What is your expectation in the remainder of the financial year?
So first of all, for us as a manufacturer, we pass on every quarter the price decrease to the brands, and then brands in turn have to pass on the price increase or take a hit on the margins, but that's the way it works. So for us, there's a lag of a quarter by the time it actually hits the market and we pass on to the brand. So in the current quarter Q1, we have seen that whatever price increase because of the commodities was done in Feb, March and April onwards have been passed on by the brands, and most of the price increases have been accepted by the trade. So that makes us believe that the entire value chain now is in a same situation in terms of the pricing.
Ajay, a quick one in terms of, I mean, you're talking on one side where, if price hikes will be passed on or not, but on the other hand, if you have to look at the supply chain constraints that a lot of consumer companies are facing right now on the back of West Asia crisis, where does it stand for you? Because one side, the problem is of getting the material, and two is if you don't get the material, the prices which have spiked as well. So it's a double whammy here. Where do you sit on that one?
So see, thankfully, because of all the measures taken by the government in terms of PLI, localization of the supply chain, so a lot of supply chain have already moved in India for us. So import dependence have gradually reduced, and in last 3 years, if I see, it has almost become 50%. So the current dependence on import as it is very low, and still the supply chain, especially for appliances, has not been hit so much. I mean, except that the dollar value has gone up, but otherwise, I mean, we don't see any constraint in terms of procuring raw materials or the critical raw materials from within India or from China.
Okay, let me ask you a very simple question to end, because Ajay, for AC business, certainly this is looking like a much better year, right? So therefore, in the face of all of the concerns that have been raised with regard to India macro, with regard to the external front and various other things, would you say that you are still optimistic on FY27, cautiously optimistic, or you think that there are tough times ahead?
No, so I'll be very optimistic, not just optimistic. I can say with a lot of confidence that not only AC is growing, but at the same time, there are other opportunities around. So like the fuel crisis and all has been helping us market the induction cooktops and the smaller appliances which we do. So a lot of cooking appliances have shifted to electrical. So that's another vast field which has, or an area which has opened up for us. So there's always a silver lining in, and we see that both the small appliances and the AC business growing this year, and a double-digit kind of a growth is definitely on the cards.
Okay, on that note, Ajay, absolute pleasure and wish you all the best in FY27.
Thank you so much. Thank you so much.
Okay, all right. Now, we were referring to the chief economic advisor to India and what he was saying with regard to fiscal deficit and with regard to the rupee and various other things. All of that is in a conversation that he has had. This is, of course, CEA Anantha Nageswaran with my colleague Shrimi Chaudhary. Here's a slice of that conversation.
The growth numbers has surprised many of us. What's your outlook for FY27? And as the Modi government, completes 12 years, what's your assessment on the economic progress so far?
No, I think you have packed multiple questions into one sentence. No, the Indian economy's resilience should not have been a surprise, because post-COVID, we had consistently grown at over 7%. And I think some of the effects of the lagged effects of the reforms starting from 2014 were beginning to show through, particularly the supply side capabilities in the economy having improved so much, and the fact that fiscal consolidation and fiscal prudence brought down the interest rates for the government, and naturally spilling over into the private sector borrowing costs, etc. I think there shouldn't be a sense of surprise at how well the economy was doing before the West Asia conflict began. Now, talking about the outlook for 26-27, naturally it is clouded by uncertainties. We were very confident on February 27th about the growth rate being 7 to 7.4% for the current financial year. Obviously, that's going to be a very humongous task to get there. It will be more likely in the range what the central bank put out on Friday, 6.6% with downside risk. But that should not take away from the fact that once the conflict subsides and energy prices return to pre-conflict levels, India's growth trajectory will bounce back towards the 7+% range that we had gotten used to post-COVID.
So you expect that 7% once we will get into the recovery mode, but you kind of refrain from giving a specific, estimates for FY27, and you said during your briefing also
Right.
that you will go with the RBI
That's
projection, the latest one. But wanted to understand if this drag on and for a longer period, do you think that the growth will spill below 7%?
No, I think for the current financial year, I think 7% looks like a stretch. There's no question about that, which is why I said I'll go with the RBI's projection, which is 6.6, with the downside risk attached to it. I think that's a fair characterization. In the light of what has been achieved in 25-26, which is a 7.7% full year growth rate, RBI has projected 6.6, which is a 1 percentage point drop. And with the downside risk label attached to it, which I think is a fair characterization of the uncertainties that we face in the current financial year.
But sir, tell me, the Q4 numbers, we have seen it's beaten the estimates.
Yeah.
Even the overall FY26 looks really strong. Do you think that it's because of rebasing of the GDP, or is it consumption and demand and the several reforms which government has taken in the past few years, and that is reflected in the growth numbers?
No, I will not attribute to just the rebasing alone, because naturally last year, if you look at both the supply side, the GVA numbers and the GDP by expenditure numbers, which MOSPI puts out, it was a balanced growth profile. I mean, manufacturing was a stellar performer in the GVA in the supply side, and on the demand side, you had good growth in across all segments of the expenditure, which is government, private consumption, capital formation, investments, and net export growth as well. So it was a question of all-round growth that was contributing to the 7.7% overall growth outcome.
So can we say it's a combination of reforms also and the rebasing of GDP? Can we say that? Or?
I would actually attribute more to the lagged effects of the 12 years of reform that were eventually coming through, as I mentioned, tax reforms, the GST, and then the direct tax slab widening and rates lowering that happened in the course of the budget, February 2025 budget, and the lagged effects of supply side infrastructure that improved the economic capability. If you remember, in January, when we released the economic survey, in chapter 1 on the state of the economy, we actually did upgrade India's potential growth estimate from 6.5%, which we had put out 3 years ago. And now we said we had reached a steady state of 7% growth rate, and we had explained the reasons, and it was not rebasing. It was the cumulative effect of all the reforms, which we felt, barring external uncertainties, the Indian economy was poised to have a steady state growth rate of 7%. And that's exactly what the 25-26 numbers reflect.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है।
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews, across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform.
Welcome back. You're watching India Market Close, and it is turning out to be a decent day of trade. And you had a bit of a spike for the benchmark Nifty 50, about 0.5% now higher, but it's given up a little bit of ground. Really, the big action is in the broader end of the market, where you have gains of about 1.3% for both the mid cap as well as the small cap index, 1.4% at this stage, and climbing just a tad bit. So pull up the market breadth just to see whether that has changed dramatically. It will likely be at the widest point. That is indeed the case. And there are quite a few stocks in the broader markets that are doing well. as well. You have the Nifty Bank that is doing particularly well. It's gaining about 2.2%. I want to ask Vinay Rajani what he thinks about this. He's joining in along with Sunny Agarwal, Head of Fundamental Equity Research at SBI Capital Securities, and Vinay Rajani, of course, with HDFC Securities. Vinay, what do you make of the spurt that we're seeing? Quite a bit of action at the broader end.
Yeah, good afternoon. So broader end of the market is performing very well. In fact, banks have been doing very well. The PSU bank, the small private sector banks, all have been performing well. And now I can see in the last half an hour, the traction has increased in the other sectors as well. So Nifty as well as Nifty especially is closing on a strong note, and the broader end of market is showing that there is no not at all weakness in the market, though Nifty has been trading below all the moving averages. But if we were to look at the micro cap 250 index, the mid cap index, small cap index, these are the indices. In fact, Nifty next 50 in fact is also showing very good strength. So this is a positive sign, and today is the expiry, Nifty expiry. But however, I can see that the broader market is continuously showing strength, and even in yesterday's trade also there were some stocks and sectors which were performing very well. So I think for traders there is an opportunity to trade on the long side, and today is a day where we can see that participation is increasing in the broader market, and one should definitely take a participate in this particular bullish move, which can sustain for next couple of days also.
Okay, so that's with regards to where markets go right now. Vinay, but in this kind of a scenario with the surge that we are seeing today, anything that comes to your radar that could be a good momentum buy as well?
Yes, as I said, we are bullish on the PSU banks. Today's move is quite good with the rising volume momentum is building in. And one of the cash stock which is available in the PSU bank is the Bank of Maharashtra, which is strongest of the PSU banks if you were to go by the positional setup. So I like Maharashtra a lot for the trading. So one can go along around 83.50 range. Stop loss can be kept at 82. On the upside, I'm expecting a target of 86, immediate target at 86. The second stock can be from the segment BHEL. So BHEL has corrected from the 50 high and now seems to be resuming its trend. So overall trend has been bullish. So there is a good chance that this should rise from this current level. So 395 is the price around which one can go long in BHEL. I would suggest a trading stop loss at 388. On the upside, I am expecting a target of 410.
All right, Sunny, what do you make of the banking pack? It seems to have caught fire today, and the thesis really is that it is on the back of the FCNR deposits scheme that has been announced by the Reserve Bank of India and certain other positive developments that could come through that could have a bearing on cost of funds down the road as well. What do you make of it?
Yeah, good afternoon, Alex. Good afternoon, everyone. Thanks for having me on the show. Yeah, definitely, I think the recent step by RBI and government to ensure that dollar inflow through an fixed income instrument, whether it is through FCNR deposit or through an ECB route, that is something which is taking care of two big narratives, which is one is the overhang of continuous depreciation of rupee against dollar. So there is an expectation that as the various experts have pointed out, closer to $50 to $60 billion kind of inflow can be expected over the period of next 3 to 6 months. So that gives a lot of comfort in terms of stability on USD INR. On the other hand, the narrative of inflation or increase in rate because so as to temper the USD INR on the one hand, that is something which has died down post this measures taken by banks and RBI. And third is obviously the leeway to not to do provide for CRR or SLR on the FCNR deposit. That is something which will ensure that the margins of the banks are protected on all these whatever the deposit which they mobilize through FCNR deposit. So that is again one of an positive sign as far as the margins are concerned for banks. So on the other hand, because of all this narrative, we have seen that there is a probability that there may be some pull off in terms of bond yield, which again augurs well for treasury portfolio of all these banks. So I think multiple positive factors that is leading to an positive sentiment for the entire banking space. In addition to that, anyway, if you look at the credit growth number, the industry credit growth is also running at 14 to 16% on a month-on-month basis. So that is something which is driving the positivity across the banking.
Absolutely, Sunny. I mean, lots of positives that we're seeing right now in terms of banks. In fact, Equitas Small Finance Bank, a sharp comeback is what you're seeing, because from March lows, the stock is up nearly about 46%, and a lot of factors that are working in its favor as well. My colleague Shivam is standing by to tell us more in terms of what's really working out for Equitas Small Finance Bank and what's in store going ahead. Shivam, what do you have for us?
Yes, the stock has seen a significant up move since the lows in March 2026, and the stock has been up around 46%. Now, if we look at the FY26 overall picture, in first half of FY26, the bank has recorded a net loss, and also there were higher provisioning. Also, if we look at the MFI lending segment, there has been a slowdown. Now, if we look at the second half of FY26, there has been recoveries in the bank. The margins have expanded, and also the bank is mainly focused on secured lending growth. Now let's understand what were the key concerns that has affected the performance in first half of FY26. So bank has reported a quarterly loss first time since 2008, and that was on the back of higher provisioning as the bank was facing collection issues in the MFI segment. Now in fact, the FY26 profits of the bank has also lowest since FY19, and the collections, as I mentioned, wasn't normalized in FY26 starting. Now the company has also expected recoveries by the quarter first of FY26, but got delayed to quarter 3 and quarter 4 of FY26, and the result of that we have seen in the margins, which have witnessed a sharp decline, and the yields have also dropped, and there has also been increase in the credit cost, which was mainly due to higher provisioning. Now, what has led the improvement in quarter 3 and quarter 4? So the bank has shifted to a monthly repayment model, and also has maintained the MFI mix at 8.5%, which is down from 12% in quarter 4 of FY25, and the company has mainly shifted towards the secured segments. Also, the non-MFI disbursements have improved to record levels in quarter 4 of FY26, and the bank is also focusing on acquiring customers which have lower leverage. In terms of outlook, the MFI exposure is currently capped, and the collection and slippages are improving, and the main key monitorable remains this CV segment, where the segment can see a stress due to the rise in the fuel cost. Also, the company aims for the 20% advances growth, and with a sustainable margin which is guided at around 7% levels, and the credit cost will also normalize to 1.5% going forward.
Okay, thank you so much for that interesting deep dive, Shivam, because that's clearly telling you a story. Sunny, any view when you talk about Equitas Small Finance Bank, because a sharp recovery that we've seen, and financials also are showing you some bit of an improvement?
Yeah, definitely. We have witnessed a very sharp turnaround across all these small finance banks, including Equitas, as the stress on MFI portfolio reduces, and at the same time, proactively, all these banks have taken steps to diversify away from MFI portfolio, and that is something which is bearing an result. So, as Equitas has also guided that FY27 exit ROE can be in the range of 1.5%, so that itself augurs well. And anyway, trading at a very reasonable valuation with all the product portfolio which has break-even as far as loan book is concerned. So we continue to remain a positive stance, maintain a positive stance on small finance bank, including Equitas.
Got it. On the technicals, since we're on the subject, Vinay, what do you make of Equitas Small Finance Bank?
So there was a multiple top resistance around 73, 74. The stock has recently surpassed that resistance, and it is a clear-cut reversal case on the charts on the positional that I'm talking about. And entire this NBFC and the finance space has been performing well for last couple of weeks, and it seems that the stock has seen a good reversal on the positional chart. So there is a breakout above 74. Stock is comfortably trading up there. Right now it is trading at 75, and we can expect higher levels. So yes, positionally I'm expecting this stock to do well. We can immediately expect a 8 to 10% upside from this current market price, and stock looking good. Immediate support is placed around 68, 69. So with traders can keep that level as a stop loss in their mind.
Okay, so that's Equitas Small Finance Bank. You know, a couple of other names which are buzzing in trade today on the back of volumes. Studs Accessories. Daily volumes are 17 times its 20-day average. If you pull up that one on the screens, the stock has hit a 3-month high in today's session. The second one I want to talk about is a Mahindra Holidays as well. Very strong volumes. Largest single-day gain that stock is seeing since the 13th of January, January of 2013, I beg your pardon. And it snapped a 2-day losing streak. You have a Patel Retail as well. largest gain since March 2020 in a single day, and it's actually snapped a 2-day losing streak. When I want to come to you on these three names, are you seeing a trend reversal with the kind of gains that are coming in here and the kind of volume built up that you're seeing?
Yeah, so as far as studs is concerned, the history is less on the NSE, and the stock has gone up by 20% with a significant jump in volumes. So definitely we cannot comment against the trend. So definitely it has surpassed the previous swing high of 500 and trading at 527. So nothing to be shared. I have never tracked or recommended this stock in the trading. So I don't have that much, we can say, knowledge about it, and history is also not there. But definitely stock has moved up, and the previous resistance is now likely to act as a support, which is around 500. So 500 should be the stop loss, and one can expect some higher gains. And as far as this Mahindra Holiday Resort is concerned, yes, the primary trend has been into clear cut on the downside. Today, after a long time, this stock has moved up by 10% with a great jump on volumes. So this could be a short-lived bounce back because the primary trend is clearly on the downside. So if somebody wants to trade this stock, I would suggest a strict stop loss should be kept because the primary trend is not supporting. So I would suggest 220 should be the trailing stop loss in this stock. And as the stock goes up, you should trail the stop loss on the higher side. That would be the best strategy because overall the setup of the sector as well as on the stock side, it is not that good. So trailing stop loss of 220 is recommended.
Right. Okay, I want to add to that list and a few trending stocks. In fact, you have J&K India, which spoken about it at the start today because the stock actually was in focus because it's gotten an order win. It designates this as a large order win, 100 to 300 crore. This is an export order win for a company in Abu Dhabi. And remember, this is for gas handling. 35% gains in the last 5 days. Panacea Biotech, by the way, is arguably one of the stocks of the day, gains nearly 50% over the course of the last 4 days. What bear market are we talking about? To launch India's first indigenous dengue vaccine. And this is where significant strides are being made in the pharmaceutical space. This is the second only single shot dengue vaccine globally, and the commercial launch is scheduled for 2027. And finally, NLC India. It's all set to close in the red for a 5th consecutive day. And this is where there is significant pressure on the downside. It's lost almost 10% in 5 days, and the government is set to do a 2% offer for sale. And really, it's on account of the discount that was being offered to the share price. And that was as much as 9% or thereabouts, which is why it was expected to see a little bit of ground lost. But Sunny, on maybe Panacea Biotech, you're going to have an opinion on the fundamentals. Would you say that it's still a buy at these levels?
Again, Alex, sorry, this company is not under my coverage, but the kind of development which we have seen on dengue vaccine, that is something I think the total addressable market will be pretty large, being the only player to launch an indigenous dengue vaccine. As we have always hear a lot of cases during the monsoon or post-monsoon regarding dengue. So I think that is something which should give a very large uptick in terms of earning. But to be frank, I have not worked on the number, what is an additional revenue which company can garner because of this launch of new product.
It is going to be in sub-Saharan Africa.
Correct. But let's see, I mean, how it pans out, because you're still watching out for a year and a half from now where, execution will come through. But telecom space, we opened up in the positive. You're seeing some bit of pressure building up on a Bharti Airtel as well. And that's why it becomes a tale of two sides. And hence, we've picked up the telecom sector for a bull versus bear case scenario, because the Bombay High Court did give in a relief as well. Plus, you have the demand, the ARPU that is being looked at. Sharad is standing by with all the details. Sharad, why a bull versus a bear case scenario? Because this is a sector where you're seeing some bit of positivity which is still emerging right now, but you already have a bear case for it.
Exactly, Hiral. Of course, there was a very positive news flow, but I try to get views from the brokerages also, and there seems to be some kind of contradiction happening. So that's why this bull versus bear case has come in. First of all, the one-time spectrum charges waiver was there coming in from Bombay High Court. We saw a positive momentum in the stocks, but remember, the broader picture is still not very much clear. There is a broader legal battle still at play for this OTSC, which is pending before the Supreme Court. So it's not out of the woods yet. Elara is expecting ARPU CAGR of 7% over the next 3 years. But on the other hand, UBS is expecting in the near term there might be a delay in the mobile tariff hike, seeing how the geopolitical situation is there of the country. Also, Elara, a bullish case they have given is there the entire sector is in a multi-year recovery mode, and strong data consumption is something which we are factoring in as well. UBS, on the other hand, they have stated that the growth momentum is there in ARPU, but it's likely to slow down at least in the near term. Elara Capital, they have given an initiate buy rating for Bharti Airtel and Bharti Hexacom, while on the other hand, UBS has downgraded Indus Towers to sell rating, target price coming in at 395 rupees per share. Also, the last point I would like to talk about, that is Vodafone Idea. The stock is up more than 30% in the last 6 months. Little bit of cool off might be there, but for a bear case scenario, valuations of Bharti Airtel is also on the expensive side since it's near its record level. So these are the important reasons, the bull case as well as the bear case in the telecom segment.
Okay, thank you so much for that. Any quick view, Sunny, if you're to look at Bharti Airtel in one way, that stock right now is what, down 1%. Vodafone Idea is also seeing profit booking after the sharp run-up that we've seen. And you have a Bharti Hexacom as well as Indus Towers that comes to the forefront. How are you looking at this entire space?
We continue to maintain a constructive view on telecom service provider, because we feel that still there is a lot of scope in terms of ARPU rise, which although there has been some delay in terms of price hike.
What would your top pick be if you have to look at any of the four names?
Bharti Airtel.
Okay, so Bharti Airtel it is that you should be watching out for. I'm not sure if I want to take a technical view on that, but Adani Energy Solutions, that's another one to focus on. They're looking to acquire IntelliSmart. Sharad continues to be with us to tell us more. Sharad, tell us more in terms of the acquisition and how would this actually aid the company?
Well, this is a very large acquisition coming in from Adani Energy Solutions, and after this acquisition, the company is on track to become India's largest smart meter player. Now, to put that in perspective, Adani Energy Solution is targeting almost 4.7 crore smart meters after this acquisitions, and IntelliSmart is already having 2.2 crore meters order coming in from the states of Gujarat, Madhya Pradesh, Bihar and Uttar Pradesh. Also, let's look at the key finer details. The proposed acquisition is almost 3,050 crore rupees. It includes, of course, 100% equity stake in IntelliSmart, and also the acquisition includes the redemption of the optionally convertible debentures of IntelliSmart held by NIIF. Remember, this company is a JV when it comes to energy efficiency services and NIIF, which is nothing but National Investment and Infrastructure Fund. IntelliSmart is among the top 3 players of India's smart metering segment with 2.2 crore meters across the 5 states. And looking at the overall order book currently standing for Adani Energy for smart meters, it stands at roughly 2.46 crore. So definitely it's an important acquisition, on track to become India's largest smart meter company.
Very interesting. Adani Energy Solutions. Thanks so much, Sharad, for that. Let me ask you about this, Sunny. The smart meter business is something that earns money over a period of time, and of course we're talking about significant numbers that are being installed even as we speak right now. So what, according to you, is the earning potential if you've done the numbers, and what is your opinion on Adani Energy?
I think again, as you rightly pointed out, that smart meter is something which gives you a kind of annuity income over the period of whatever the life cycle of a smart meter. I think opportunity definitely exists for all the distribution company, and at the same time, the propensity to control your client in terms of payment cycle and all the other aspects, that is something which where there is a lot of flexibility. At the same time, the leakages is something which is taken care of. So I think opportunity definitely exists. The only issue which we have observed in the smart meter space has been then that there has been some resistance in terms of consumer accepting that as a product. But anyway, being a regulatory requirement, gradually everyone, each one of us has to accept that product, and gradually that is something which should lead to a kind of new revenue stream for many players, including Adani Energy Solution or Genus, which was leading this this race going ahead. In terms of numbers, so again, Alex, I have not worked on the what is an consolidated number post merger of this new entity for Adani Energy Solution. But having said that, broader view continue to remain positive for distribution companies, as we have seen that gradually as this geographical area keeps on expanding, we believe that the earning will keep on compounding at the rate of 10 to 12% for all such utility players.
Take coming in there, and just a disclaimer that Adani Energy is, NDTV Profit is an AMG Group company, which is owned by Adani Group as well. But moving on, you have the pharma pack that is in focus, and especially the CDMO players, because Pentagon's WuXi has actually red flagged that it has a red flag which may trigger a gradual pharma shift away from China, positioning Indian CDMOs as key alternatives for global outsourcing. It's a pharma pivot that has probably going to hit China, where US Pentagon has flagged the WuXi Aptech as linked to Chinese military sources. In fact, this could become a positive, because this is not a ban right now directly, but a strong warning tag that they've given out as well. Now, if they continue with WuXi, they risk losing US government business, and companies will try to reduce their Chinese exposure. It matters because WuXi Aptech is a key global CDMO player doing drug research and manufacturing, and around 75% of WuXi's revenues come in from US clients. It works with many top pharma companies worldwide and supplies key ingredients for Eli Lilly's obesity drug Zepbound, and the disruption here can actually impact global drug development. Now, if something like this happens, what happens is your Indian CDMO companies can benefit, because global pharma companies could look for non-China alternatives, and there could be a shift in outsourcing orders towards India for diversification. TVS Labs, Cohance Life, if you pull up the intraday charts, Sai Life Sciences, Loris Labs, Piramal Pharma, Syngene, Newland Laboratories, Blue Jet Healthcare, these could be some of the beneficiaries as well. And probably that's one of the reasons why you're seeing that space trading in the positive. Sunny, any views on the back of this commentary that has come in so far?
Yeah, I think definitely positive read through for domestic CDMO player, has China plus one opportunity plays out in a longer run. As you mentioned, all the names will be the key beneficiary in case there is some diversion of business from Chinese supplier to an domestic CDMO supplier in a medium to long term.
Got it. All right, gentlemen, on that note, thanks so much for taking the time. Pleasure speaking with you as always. Let's talk about market close, and we're seeing gains of about 0.5%, close to 0.6%. So for the benchmark Nifty 50, ending maybe 0.2% off the high point of the day, but certainly about 0.5% or so off the low point of the day. And you'll take this in the kind of scenario that we're currently playing. In fact, if anything, the broader end of the spectrum, as we've been pointing out through the session today, is where the story lies. The mid-cap index gaining about 1.3%, the small-cap index up about 1.4%, and the market breadth tilted very comfortably in favor of the advances. If yesterday was a day for the bears to take charge and really pushing the bulls down with just about 2 advances for every 9 declines, today is the opposite, or well, close to an opposite. The Nifty Bank doing particularly well, up as much as 2.2% or thereabouts, and that's where we're pretty much closing shop today. The Nifty IT also ending off the low point of the day, so quite a few of the indices where there was a little bit of pressure on the downside, Hiral, where it's given up a little bit of those losses, and we're ending off the low point, which is positive.
Which is a positive, and as Alex was mentioning, your PSU Bank Index is the star highlight of the day, seeing some smart gains towards close. Bank Nifty follows. After that, if you have to look at defense, that has also gained some momentum, though it started trading in the positive itself. So interesting sectors that have come to the forefront in today's session. In terms of broader markets as well, data patterns, that has seen a sudden spike, 10.5 to 11% up move towards the end of close. Easy Trip Planners is another one. We already spoke about Mahindra Holidays, Relaxo Footwear, Kaplan Point, Mishra Dhatu, some smart moves coming in on those names in today's session. Tata Tech has been under pressure. Schneider Electric has been doing the downward trend over the last couple of days as well. But Balrampur Chini, Titan, NLC India, CCL Products, were few of the top losers. But I think overall, I would say an interesting day of trade, because in terms of the advanced decline ratio on Nifty 500 as well, you almost had nearly 400 gainers vis-a-vis 100 losers. So there is that momentum that is continuing to build up in terms of the small and the mid-cap space. And the setup that we've been talking about over the last couple of days with regards to Bank Nifty, which is looking stronger as compared to Nifty 50, that has continued.
Yeah, absolutely. So I would wait to see whether that broader market gain, and we've been talking about it not just on the basis of technicals and a few of these individual stocks here, but the data and the expectations that earnings is supportive, right? So whether it is a Motilal Oswal or it is a Piper Serica, ultimately everybody is seeing opportunities in the broader markets and earnings potential.
Yeah, I mean, we spoke to Shankar Sharma today as well, where he said that the opportunity comes in the small cap space. And we had data points coming in with regards to large caps, where in the last 5 to 7 years, they have actually not done anything. And that was one of the data points that we used in India Market Open for a conversation as well.
Yeah, absolutely. On that note, that brings us to the end of this edition of India Market Close. Thanks so much for tuning in. But lots more action right after this very quick break from the team that put this show together, and from Hiral and myself. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है।
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have really fared today. So viewers, benchmarks have attempted a recovery with the Nifty closing above 23,200 levels and the Sensex also gaining over 400 points. If we look at the broader market, so they have outperformed the benchmarks today in trade. And talking about the sectors, so most of the sectors have closed in the green. PSU banks have led the gains with banks, realty and auto also in good shape. Meanwhile, if we talk about IT and media, so they were on the back foot. Viewers, banking stocks have led the market higher after the Reserve Bank of India announced operational guidelines for its concessional forex swap facility, and the measure is also aimed at encouraging overseas fundraising and also attracting foreign currency inflows into the country. The announcement triggered broad-based buying across the banking space, with private and public sector lenders advancing as investors cheered the potential liquidity and also funding benefits. Now let's look at some key counters that were buzzing away in trade today. First up, we have Vodafone Idea. So it has secured a significant legal victory after the Bombay High Court has quashed demand notices issued by the Department of Telecommunication for one-time spectrum charges, and the court has also directed the return of bank guarantees submitted against the disputed demand. And the ruling strikes down the centre's 2012 decision to levy additional charges on spectrum holdings, providing a major relief to the telecom operator. Next counter to look at is Paytm. So the shares have moved higher after reports suggested the fintech major plans to hire around 4,000 employees as it scales its merchant network and also AI-led offerings. And the company is set to be expanding across product, technology and even leadership roles through FY27. So the hiring push comes even as Paytm looks to optimize its workforce following its annual performance review process. Next counter in focus is PI Industries after its key partner Kumiai Chemicals has upgraded its first half 2026 outlook. Now the company has raised both revenue and also operating profit guidance, citing strong demand visibility, and the development is significant for PI Industries, which supplies the herbicide pyroxasulfone to Kumiai. Now, the product accounts for more than third of PI Industries' revenue, making the upgrade a positive signal for business prospects. Next counter to look at is Fino Payments Banks. So its May business update has presented a mixed picture with strong growth in the core banking metrics offset by weakness in transaction volumes. Now deposit accounts have rose 29% annually while loan dispersals have jumped 186% to 210 crores. Average total deposits have also posted healthy growth. However, the throughput transaction business has declined sharply, falling about 48% as compared to the same period last year. Next counter to look at is SML Mahindra, which has delivered a solid performance in May with both production and sales registering healthy annual growth. Now, production has rose 7% while sales have increased nearly 12%, and this is also reflecting steady demand in the commercial vehicle segment. Exports have also showed strong momentum, more than doubling from the year-ago period, adding to the positive operating update. And US Panacea Biotech has launched the Denstar project to expand access to its dengue vaccine across Africa and also other global markets. And the company's dengue all vaccine targets all 4 dengue strains and is also currently in late-stage clinical trials. And Panacea is saying that the vaccine is designed to provide broader protection with also fewer side effects, and the commercial launch is targeted for 2027 and also marking a key step in the company's global vaccine strategy. Viewers, HSBC has initiated coverage on IDFC First Bank with a buy rating and also a target price of 90 rupees. Now, the brokerage believes the bank is well placed to deliver multi-year high loan growth, and this has been supported by strong execution and also operating leverage. Now, HSBC is expecting robust earnings momentum, also projecting a 35% core PPOP CAGR between FY26 and 29, and along with improving return ratios, also expanding profitability. Next counter to look at is Wartech Wabag, which has secured a large order in the UAE for a biorefinery plant from Ajman Sewerage. Now, the contract, categorized in 250 to 600 crore range, further strengthens the company's presence in the GCC region. Now, the order also underscores Wabag's expertise in water and wastewater infrastructure and also adds to its growing international project pipeline. Next stock that was buzzing away in trade was Lemon Tree Hotels, which has signed a new franchise agreement for a key Prima hotel in Rajasthan, further expanding its presence in the state. Now, the property will feature 88 rooms along with restaurants and even other guest amenities, and the addition is part of the company's asset-light expansion strategy and also strengthens its growing hospitality network across India. Viewers, Electronics Mart India has commenced operations at a newly opened store in Telangana, further expanding its retail footprint in a key market. The store opening is part of the company's strategy to strengthen its presence across high-growth regions and also improve customer reach. Now, the expansion also supports its long-term growth plans in the consumer durables and electronics segment. Next counter to look at is Ratnavir Precision Engineering, which has announced that its board will meet on June 11 to consider a potential fundraising proposal. Now, the company has not disclosed further details on the size or mode of the fundraise. Investors will be watching the board meeting closely for some clarity on the capital raising plans and also their impact on the company's growth strategy. Next counter to look at is Ola Electric. So the shares have staged a sharp comeback, rallying over 115% from their record low levels and also emerging as one of the market's standout performers. Now, the recovery has been driven by improving investor sentiment, also expectations around operational improvements and optimism over the company's long-term electric vehicle growth story. However, analysts remain divided on whether rally can really sustain at the current valuations. And your Zepto is lining up a 12,000 crore IPO with a large fresh issue while promoters retain their stake. So the IPO will have a large component of offer for sale, with existing investors selling nearly 11.3 crore shares in the issue. The company's founders, Adit Palicha and also Kevalya Vora, they've received summons from the Enforcement Directorate in April this year, seeking information and also documents related to foreign investments, financials, and even the company's business in connection with proceedings under the Foreign Exchange Management Act. Now, First Cry-backed Swara Baby Products is preparing to enter the capital markets with a proposed IPO of up to 1,000 crores. Now, the issue is expected to include a fresh issue of shares along with an offer for sale by existing investors. Now, the company manufactures baby diapers, adult incontinence products, and even feminine hygiene products, and has built a strong presence in the contract manufacturing space, and draft papers are likely to be filed with SEBI later this month. And China's trade momentum remained strong in May, with exports rising nearly 20% annually, beating expectations and also accelerating from the previous month. Imports also posted robust growth, also signaling resilient domestic demand. Exports to the United States have jumped sharply, while technology, semiconductor, computing equipment, and also automobile shipments continue to drive the growth. Now, the strong trade performance comes despite the ongoing geopolitical tensions and even disruptions linked to the conflict in the Middle East. Here's a major milestone has been achieved in the strategic Zojula Tunnel project, with more than 13 kilometers of excavation now complete. So the tunnel will provide all-weather connectivity between Kashmir and Ladakh, significantly improving the access across the challenging Zojula Pass. Now, once operational, the project is expected to reduce travel time between Gandarbal and also Kargil from hours to just over 20 minutes. And this is also boosting both connectivity and economic activity in the region. And viewers, Lucknow police have busted an alleged counterfeit currency racket and also arrested 3 accused involved in circulating fake notes. Now, acting on specific inputs, the police has recovered counterfeit currency worth nearly 14 lakh rupees from the suspects, and authorities are saying that the accused were allegedly converting fake notes into genuine currency and also operating a wider network. Now, investigations are now underway to identify other members linked to the racket and also trace its broader reach. We are looking at some international news now. US President Donald Trump has said that US is in the final stages of a deal with Iran that would prevent Tehran from acquiring nuclear weapons, also adding that the Strait of Hormuz could reopen immediately after an agreement is signed, possibly within days. Now, but even as diplomacy gathers pace, tensions remain high. Iran and Israel have paused direct attacks, yet Tehran has warned that military action could really resume if Israeli operations continue. So Iran has also accused Israel of repeated violations, raising fresh questions over the durability of the fragile ceasefire. And whereas tensions in the Middle East remain elevated despite efforts to maintain a fragile ceasefire, the Israeli military has issued a new evacuation order for the southern Lebanese city of Tyre, and also urging residents to move further north. And the move comes just a day after Iran called for an end to attacks on Lebanon. Now, Israel is saying that it is targeting Hezbollah positions, while also reports of fresh casualties have raised concerns over a broader escalation. And Chinese President Xi Jinping has concluded a high-profile visit to North Korea, his first trip to Pyongyang since 2019. While no major agreements were announced, the visit underscored the strategic importance of ties between the two neighbors. And coming at a time when North Korea has moved closer to Russia, the visit is seen as Beijing's effort to reassert its influence over a key regional partner. And viewers, the UK government is considering a ban on social media use for children under the age of 16, with a policy announcement expected in the coming days. Prime Minister Keir Starmer government is reviewing options ranging from a complete ban to restrictions on key features of social media apps. And the move comes after overwhelming support from parents in a government consultation, and also could mark a major shift in the online safety regulations. Because violent clashes have erupted in Pakistan-occupied Kashmir following the ban on the Joint Awami Action Committee, which is a civil society group that has led protests over economic and also political issues. Now, reports are suggesting that more than 30 people have been killed and hundreds have been injured as tensions have escalated between protesters and also security forces. The unrest, intensified after alleged firing incidents involving group members, further fueling anger across the region. And the Pentagon has expanded its list of companies it says are linked to China's military, adding several of the country's biggest technology and also industrial firms, including Alibaba, Baidu, and also electric vehicle giant BYD. Now, the move is likely to add fresh strain to US-China relations, with Beijing condemning the decision and also vowing to protect the interest of its companies. And a fresh controversy has emerged ahead of the FIFA World Cup, with Iran claiming its official ticket allocation for supporters has been withdrawn just days before the tournament begins. And Iran's Football Federation has said that fans who had already made travel plans could now be left without access to matches. And the federation has urged FIFA to intervene, calling for fairness and also equal treatment of all participating nations. And the music industry is mourning the loss of Grammy-winning songwriter Tale Riley, who was fatally stabbed in East London at the age of 35. Now, Riley, known for his work with stars including Dua Lipa, Nick Jonas, Britney Spears, and he was found with stabbed wounds on June 5, and police have launched a murder investigation while tributes continue to pour in from across the global music community. And viewers, before we slip into a short break, we have India's growth story, which remains pretty resilient, but dark clouds still remain on the global front and are also beginning to weigh in. Now, Chief Economic Advisor V. Anand Nageswaran said that the economy was firmly on track before the West Asia tensions, but rising crude and uncertainty are now dragging the expectations closer to the RBI 6.6% mark. Listen in to a slice of that conversation my colleague Shrimi Chaudhary had with the CA.
The growth numbers has surprised many of us. What's your outlook for FY27? And as the Modi government, completes 12 years, what's your assessment on the economic progress so far?
No, I think you have packed multiple questions into one sentence. The Indian economy's resilience should not have been a surprise, because post-COVID, we had consistently grown at over 7%. And I think some of the effects of the lagged effects of the reforms starting from 2014 were beginning to show through, particularly the supply side capabilities in the economy having improved so much, and the fact that fiscal consolidation and fiscal prudence brought down the interest rates for the government, and naturally spilling over into the private sector borrowing costs, etc. I think there shouldn't be a sense of surprise at how well the economy was doing before the West Asia conflict began. Now, talking about the outlook for 26-27, naturally it is clouded by uncertainties. We were very confident on February 27th about the growth rate being 7 to 7.4% for the current financial year. Obviously, that's going to be a very humongous task to get there. It will be more likely in the range what the central bank put out on Friday, 6.6% with downside risk. But that should not take away from the fact that once the conflict subsides and energy prices return to pre-conflict levels, India's growth trajectory will bounce back towards the 7+% range that we had gotten used to post-COVID.
So you expect that 7% once we will get into the recovery mode, but you kind of refrain from giving up specific estimates for FY27, and you said during your briefing also that you will go with the RBI projection, the latest one, but wanted to understand if this drag on and for a longer period, do you think that the growth will spill below 7%?
No, I think for the current financial year, I think 7% looks like a stretch. There's no question about that, which is why I said I'll go with the RBI's projection, which is 6.6, with the downside risk attached to it. I think that's a fair characterization. In the light of what has been achieved in 25-26, which is a 7.7% full year growth rate, RBI has projected 6.6, which is a 1 percentage point drop. And with the downside risk label attached to it, which I think is a fair characterization of the uncertainties that we face in the current financial year.
But sir, tell me, the Q4 numbers, we have seen it's beaten the estimates. Even the overall FY26 looks really strong. do you think that it's because of rebasing of the GDP, or is it consumption and demand and the several reforms which government has taken in the past few years, and that is reflected in the growth numbers?
No, I will not attribute to just the rebasing alone, because naturally last year, if you look at both the supply side, the GVA numbers and the GDP by expenditure numbers which MOSPI puts out, it was a balanced growth profile. I mean, manufacturing was a stellar performer in the GVA in the supply side, and on the demand side, you had good growth in across all segments of the expenditure, which is government, private consumption, capital formation, investments, and net export growth as well. So it was a question of all-round growth that was contributing to the 7.7% overall growth outcome.
So can we say it's a combination of reforms also and the rebasing of GDP? Can we say that? Or?
I would actually attribute more to the lagged effects of the 12 years of reform that were eventually coming through, as I mentioned, tax reforms, the GST, and then the direct tax slab widening and rates lowering that happened in the course of the budget, February 2025 budget, and the lagged effects of supply side infrastructure that improved the economic capability. If you remember, in January, when we released the economic survey, in chapter 1 on the state of the economy, we actually did upgrade India's potential growth estimate from 6.5%, which we had put out 3 years ago. And now we said we had reached a steady state of 7% growth rate, and we had explained the reasons, and it was not rebasing. It was the cumulative effect of all the reforms, which we felt, barring external uncertainties, the Indian economy was poised to have a steady state growth rate of 7%. And that's exactly what the 25-26 numbers reflect.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is
US President Donald Trump signals that a US-Iran nuclear deal could be just days away. Oil prices ease after Israel and Iran agreed to halt attacks, while Brent slipped towards $92 a barrel. Markets end at a high point of the day as benchmarks snap the two-day losing streak. Broader indices too see recovery as global peers rise on lower crude prices, awaiting developments around US-Israel-Iran deal. But Nifty IT remains down for the fifth consecutive day. TCS AI strategy took center stage at its AGM, with the company highlighting the launch of sovereign AI infrastructure for India. Management also said that AI is increasingly moving into the physical world, while demand for AI-led solutions continues to drive steady revenue growth. Rajesh Exports' loan route under scanner now. A debt recovery tribunal order says Rajesh Exports routed the bank-funded letter of credits to its own Swiss arm, leaving Canara Bank exposed after defaults of 509 crore rupees. US court strikes down Trump's $1 lakh fee for H-1B visas. Court terms it unlawful. Lawmakers welcome the verdict, but White says will repel against the order. NDTV Newsbreak confirmed as quick commerce major Zepto is gearing up for a 12,000 crore rupees IPO. But profitability remains a challenge. Losses stand at 5,900 crore rupees. ChatGPT maker OpenAI confidentially files for an IPO, but public listing may still take time. OpenAI confirms confidential S1 to SEC filing. A plethora of new features and updates and the long-awaited overhaul of Siri AI were top announcements during Apple's WWDC event. The last by Tim Cook as CEO, and the software updates will launch alongside new hardware in the fall. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and let's begin the show on what are the top developments of the day. First, beginning with the update on the Middle East war. And US President Donald Trump now says that both Iran as well as Israel have agreed to halt the hostilities after his intervention. In fact, he claims that the US is in the final throes of a deal with Iran soon. Now, Trump has even hinted that the Strait of Hormuz could really reopen immediately after an agreement. Meanwhile, oil cools slightly as Israel and Iran halt the strikes, with Brent crude hovering around $92 a barrel. Listen in to what Donald Trump said on this development.
We should be able to do it in 1 hour, if you want to know the truth.
What's the biggest sticking point right now?
I don't think there are any sticking points. I think we're very close to having a very, very good, strong, powerful deal. If we go and bomb, which we can do very easily if we want, and we spend another 2 or 3 weeks bombing, they'll have nothing left whatsoever, but you won't have the strait open for months. If we do the bombing, you know, a lot of people are going to be killed. Who wants to do that? I don't. And we'll have a signed document that's actually stronger than doing the bombing. What has proven to be a very powerful thing is the blockade. The blockades turned out to be much stronger than bombing. And it was really a combination. It was our initial thrust and then the blockade. But, you know, their economy is really suffering, and they're going to make a deal.
All right, so that was Donald Trump, and de-escalation of the war is good news for the markets, especially with crude softening. So let's focus on the Indian market action for the day. And benchmarks, they attempted a recovery with the Nifty closing above 23,200 level, and the Sensex gaining over 400 points, while the broader markets, they are the ones which really outperformed the key benchmark indices today. In fact, sectorally speaking, most of the sectors closed in the green. PSU banks really took the lead in gains today, while the IT sector as well as media that were on the back foot today. That's a snapshot. Parth is joining in to give us a complete roundup of the market action today. Parth.
Nifty has closed in green today, snapping its two-day losing streak up by almost 0.5% today. This was led by Indigo and Jio Financial Services, both of which gained over 2.5%. And we have seen broader markets outperforming the benchmark, with Nifty Midcap 150 closing in green, snapping its two-day losing streak as well, gaining over 1.2%. This was led by L&T Technologies and PI Industries, both of which saw an uptick of 7% today. On the other side as well, Nifty Small Cap 250 also managed to close in green by gaining almost 1.5%. This was led by Data Patterns and Kaplan Point Laboratories, which were the top gainers in Nifty Small Cap 250. In fact, Data Patterns gained over 10% today, while Kaplan Point Laboratories was up by over 6.8%. Moving on to the sectoral side as well, all sectors have ended in green except Nifty IT. Nifty PSU Bank was the top gaining sector, up by over 3.5% for the day, led by Bank of Baroda and Bank of India, both of which saw an uptick of 5.5%. On the trend side as well, Nifty Metal has snapped its 4-day losing streak, while Nifty Oil and Gas was managed to snap its 2-day losing streak. Also, Nifty IT has closed in red for the 5th consecutive day.
All right, thanks so much, Parth, for giving us the full roundup of the market action. Let's focus on an important development that happened in the US. A federal judge struck down a $100,000 fee that the US President Donald Trump really imposed on new H-1B visas for highly skilled foreign workers, concluding that it constituted an unlawful tax that Congress never authorized. In fact, Jasmeet, my colleague, is poring over this and its impact. Joins us with all the details. Jasmeet, tell us.
That is rightly said, the US federal judge has struck down the entire approach of Trump, which says that of having rupees $1 lakh as the overall fees and calling it as unlawful. While the court also says that the overall tax which they were taking is unauthorized, and also stucks it down by stating that the overall Congress never authorized such fee to the court. Now, well, this will have a direct impact on Indian IT companies, given Indian IT companies have their employees sourced out to US and most of them require the visa. But the good part is the Indian IT companies have been reducing the dependence on the overall H-1B visa over several years, and currently they have very minimal stance and minimal dependency on H-1B visa. While if you look at the overall IT companies, the Indian IT origin companies have roughly 20% requirement of H-1B visa, but over the time they have reduced. Now here's the management commentary of TCS, Infosys and HCL Tech, where they have told how they have reduced the dependency on the overall H-1B visa. Well, TCS states that the dependency has reduced significantly and they have localized the workforce over the period, while Infosys also sees that the majority of the employees in the US do really require the support of the immigrant. While further, the HCL Tech says the dependence on visa has reduced to few hundred over the time, and right now the impact from the overall 1 lakh fee was negligible, but this reduction will also reduce the cost to the company whatsoever. While lastly, if you look at the overall Trump administration, it's likely they might appeal the entire thing again, so it's a wait and watch of how does the entire process goes ahead.
All right, Jasmeet, it's a big matter for the Indian workers looking at jobs in the US. So Donald Trump also spoke about the US judge striking down that enormous fees on H-1B visas, which have been struck down by the US court. Listen in to what he had to say.
Our federal judge today struck down the $100,000 fee for the H-1B visas, saying you need congressional approval. Are you going to push for Congress to do this?
These federal judges are really giving us a hard time. It's really crazy what's going on with the court system. They are giving us a very, very hard time, and they shouldn't be doing it. They're hurting our country very badly.
All right, we have a special guest today. Salesforce India head Arundhati Bhattacharya now joins in. In fact, Salesforce has met a significant milestone of the Hyderabad Center of Excellence completing 10 years. What does this milestone really signify for Salesforce in India, Arundhati?
Well, I think we are sort of coming of age
in the sense that we were very small when we started in 2016. We were less than, I think, 1,000 people. When I came on board in 2020, at that point, I was the first CEO for India. There was no CEO role in India, and we were about 2,500 people at that time. Today, we are 17,000 people plus. We are there in 7 centers, and we are part of almost every single global production team, meaning whether they be in products, in engineering, or even the platform functions such as finance, compliance, legal, you name it, we are part of those teams. And we support our global operations quite a bit from India. So I think this is really a coming of age, the fact that we have completed 10 years. We have done so successfully. We are now part of all of the newer products that are coming up, part of all the teams. A number of global leaders have begun to sit out of India, which was not the case when we started. So yeah, I think it's been a very satisfying journey and one that we very much cherish.
All right, Arundhati, from banking to Salesforce, that was quite a move, and Salesforce has come of age. But what's really driving the agentic enterprise for the company?
So agentic enterprise, as you know, globally, we were the first one to come out with the agentic layer. And it's not been very different in India. In India, of course, the usage of cloud was not as much as in some of the other countries. The countries where the usage of public cloud was higher, we have been able to move a little faster. In India, that has been a little bit of an issue, especially in the public sector. But I think at this point of time, most of them realize that if they are to move forward with the agentic story, if they are to become agile and nimble, then it makes sense for us to be in the cloud, especially because it lowers the requirement for capital. And it can be very capital intensive if you're trying to do everything yourself, including the infrastructure. The infrastructure costs a lot. But given the fact that most people are realizing that the benefits that will come from this are far more, they are now becoming a little more flexible regarding the infrastructure. Also, given the fact that, when you use public infrastructure, you are not compromising on the security in the sense that for security, everybody becomes responsible for it, not only the organization, but organization like ours, which uses third parties' infrastructure, as well as the third party that's providing the infrastructure. Everybody is responsible for security. And therefore, you have that much more of, attention being given to that. Having said that, I think today, if you look at the scale of our country, just population-wise, there is no way that we are going to make available the services and goods that are required by a country as large as ours if we don't use AI, agentic AI, and whatever else comes after that. Because to do it in the brick and mortar way is just not feasible.
That's right. Doing it the brick and mortar way is just not possible in this tech age right now. But Arundhati, the AI transition is very critical for India's growth. What's your view on AI talent in India?
So my analysis is that people, at least where enterprises are concerned, there are two things, I think, that is holding them back a little. One, of course, is the fear that there will be runway costs. Okay, so people still haven't got an idea as to how these things can be done and still keep your costs within reasonable limits. And it is feasible, by the way. It's not something that's not doable. It's absolutely doable. Okay. Initially, when you give anybody anything, costs do tend to soar because people tend to play around with it. People make mistakes. The optimization doesn't happen. But over a period of time, all of these can be done and costs can be kept under control. So one was the area of cost. People didn't quite understand where it was heading. And the second, I think, has been the area of security and doubts regarding how secure are these systems, whether they are going to take your data and train their models on it, whether you lose control of it. And all of that, again, is something that people are discovering that they need not be the case. In fact, if I consider the fact that generative AI made its appearance in 2023, today sitting in 2026, I am finding far more openness towards using AI, towards experimenting with AI. Not only experimenting, by the way, people are actually now moving off from the pilot hell, as we used to call them, and going into production. They would obviously try it out in their sandboxes before putting it into production, but they are talking production now. They are not talking about POCs and prove the value and then we'll take a call. They are quite clear that the call is taken, they will go into production, they'll try it out in the sandbox to ensure that there are no concerns, and then they will put it into production. We are seeing much more of that now than we did even this time last year.
All right, Arundhati. So AI adoption really increasing fast in India. Thank you so much, Arundhati Bhattacharya, for joining us right here on NDTV Profit. All right, moving on, the government has offered fresh insights into its fiscal as well as disinvestment roadmap. In fact, sources say that the finance ministry has compensated oil marketing companies with 1.23 lakh crore rupees over the 78 days for absorbing the excise duty hikes on petrol and diesel, preventing the burden from being passed on to the consumers. Now, the centre as well as the RBI also made a fresh push for the inclusion of Indian government bonds in the Bloomberg Index. On the divestment front, officials say that the IDBI Bank stake sale remains on track, while the asset monetization collections are expected to exceed the 80,000 crore rupees target this fiscal. Now, the government also expects a clearer picture on the impact of El Nino by mid-July and says that the higher import duties are already helping curb the gold imports. So some of the critical points and important clarity coming in on the fiscal picture as well as the divestment push of the government coming in from the sources that we are getting. Now, India's growth story remains resilient, but dark clouds on the global front are really beginning to weigh in. Chief Economic Advisor V. Ananthanageshwaran says that the economy was firmly on track before the West Asia tensions emerged, but rising crude as well as uncertainty are now dragging the expectations closer to the RBI 6.6% mark for the GDP growth. Listen in to a slice of that conversation my colleague Shrimi Chaudhary had with the CEA.
You know, the growth numbers has surprised many of us. What's your outlook for FY27? And as the Modi government, completes 12 years, what's your assessment on the economic progress so far?
No, I think you have packed multiple questions into one sentence. No, the Indian economy's resilience should not have been a surprise because post-COVID, we had consistently grown at over 7%. And I think some of the effects of the lagged effects of the reforms starting from 2014 were beginning to show through, particularly the supply side capabilities in the economy having improved so much, and the fact that fiscal consolidation and fiscal prudence brought down the interest rates for the government, and naturally spilling over into the private sector borrowing costs, etc. I think there shouldn't be a sense of surprise at how well the economy was doing before the West Asia conflict began.
All right, and fresh troubles for Rajesh Exports. A debt recovery tribunal order has alleged that the company routed the bank-funded letters of credit through its Swiss subsidiary, leaving the lender, Canara Bank in this particular case, exposed when repayments were failed. Now, the order related to outstanding dues of around 509 crore rupees and raises questions over the use of credit facilities within the group structure. Now, the development, remember, comes amid heightened regulatory scrutiny of Rajesh Exports, with both lenders as well as the market regulator SEBI examining the company's financial transactions as well as disclosures. Okay, this will be on our radar. Moving on to the IPO market, and it's quick commerce major Zepto, which is gearing up for a 12,000 crore rupees IPO with a large 8,010 crore rupees of fresh issue, while the promoters stay away from selling any shares through this IPO. Now, the company has delivered decent growth, with FY26 revenue rising to 22,600 odd crore rupees, and the order volumes are rising nearly fivefold over the last 2 years. But remember, the profitability, as is the case with the sector, remains a challenge. Losses stood at 5,905 crore rupees, with EBITDA losses still elevated despite improvement on a per-order basis. Zepto is also flagging risks around regulatory scrutiny, intense competition, as well as execution. So that's going to be a big IPO coming in. In a recent corporate development, Adani Energy Solutions is set to acquire IntelliSmart, strengthening its play in the smart metering segments. And Sharad is here with all the details of the development. Sharad.
Well, this is a very large acquisition coming in from Adani Energy Solutions, and after this acquisition, the company is on track to become India's largest smart meter player. Now, to put that in perspective, Adani Energy Solution is targeting almost 4.7 crore smart meters after this acquisition, and IntelliSmart is already having 2.2 crore meters order coming in from the states of Gujarat, Madhya Pradesh, Bihar and Uttar Pradesh. Also, let's look at the key finer details. The proposed acquisition is almost 3,050 crore rupees. It includes, of course, 100% equity stake in IntelliSmart, and also the acquisition includes the redemption of the optionally convertible debentures of IntelliSmart held by NIIF. Remember, this company is a JV when it comes to energy efficiency services and NIIF, which is nothing but National Investment and Infrastructure Fund. IntelliSmart is among the top 3 players of India's smart metering segment, with 2.2 crore meters across the 5 states. And looking at the overall order book currently standing for Adani Energy for smart meters, it stands at roughly 2.46 crore. So definitely it's an important acquisition, on track to become India's largest smart meter company.
All right. Thanks, Sharad, for all the details. And while talking about the IPO momentum, well, the AI industry's biggest names may be heading to the public markets, according to reports. Well, OpenAI has confidentially filed for an initial public offering, following a similar move by the rivals Anthropic as well as SpaceX. Valued at more than $852 billion, the AI giant has yet to announce the IPO timeline. If it proceeds, an OpenAI listing could become one of the most closely watched technology IPOs in the recent years, offering investors a direct way to participate in the rapidly growing artificial intelligence sector. So big IPO boom coming in. Now let's talk about the Indian monsoon, single largest factor for our economy at the current moment to be watched out for. Well, the southwest monsoon has advanced further, covering the remaining parts of the northeast. Now, the entire state of Sikkim and parts of sub-Himalayan West Bengal, well, the IMD forecast suggests isolated heavy to very heavy rainfall across Kerala, Karnataka, Tamil Nadu, northeast India and parts of West Bengal over the next 5 to 7 days. Meanwhile, a western disturbance is really expected to bring thunderstorms, gusty winds of up to 60 kilometers per hour, and also hailstorm activity across parts of North India on June 11th as well as 12th. But of course, El Nino will be on the watch list, as even the government sources suggest. With that, we are completely out of time on this edition of Profit 360, but do keep it with NDTV Profit, and thank you so much for tuning in.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of...
Hello and welcome to NDTV Profit. I'm Vikram Oza. Now, can a mainstream Bollywood film really make India's most important economic crisis and the people who actually prevented a sovereign default? Can a film make this part of popular culture? That's exactly what has happened with the film Governor, The Silent Savior. It's a film that's inspired by the life and work of former RBI Governor S. Venkata Ramanan and, of course, the extraordinary events that surround India's darkest economic hour. Joining us today on the channel, two people bringing that story to audiences across the country. Manoj Bajpayee, one of India's most versatile actors. And of course, we have the producer of the film, Vipul Shah, who's made some excellent cinema in the past. And here we are talking about a film that perhaps kind of digs into India's, like I said, that dark economic hour. To kind of choose a film which is of that period, that kind of history, that time when we are currently grappling with an oil crisis. How did you choose a film like that? What was in your mind when you were reading the script for the first time, Manojji?
Okay, creatively, because when it came to me, it was around 4 years back. People called me up, and both of us have been looking for an opportunity to work with each other, and because we've known each other, right, as a colleague in this fraternity. But one film that we tried to make it happen and it didn't happen. Then 4 years back, he gave me a script. I went through it. First of all, I was surprised. And I can see the same kind of surprise and also some kind of apprehension on everybody's face when they come to know that we are making a first economical thriller. With a backdrop of 1991 economic crisis and in the time of complete political instability. So yes, I was surprised and shocked in the manner the script was written. That the script was very much accessible to a person like me who always ran away from the economics classes and the mathematics classes. I found it very difficult to really pass those years somehow, and kept on, feeling that once the board exams happen, I'll be completely free. And that is the case with every student and everyone, mostly. Mostly people, when you speak to them, most of them are either unaware or not interested. They find it quite tedious one. But the way the group of writers, including Vipul, they have managed to put a mainstream thriller in that backdrop, made so simple for everyone to understand, and to put the context so directly and in a very simplified manner.
Right.
For everybody to understand, even from anybody who is walking on the road to anybody who is having a great lavish office like yours, everyone will understand it equally.
Right.
Yeah, they will understand the gravitas of the crisis, and they will understand the struggle of the protagonist and the journey of him emotionally. That was very a tedious task that these guys have accomplished. I think every time I talk about the film, the first and foremost which comes to my mind is the humongous task the group of writers have achieved of making it simple, engaging, and accessible to each and every one.
So it's not an easy task to be able to do that, Vipulji, and it's something that comes after years of doing work in that genre, if it were. You know, if I can call it that, because there is a certain genre. You're talking about biopics, but here you're talking about someone who has been on the sidelines, the silent savior, like you call him. So what about him interested you, or was it much more that period that interested you to make a film on?
Actually, the whole point is that in Indian history, we've got some amazing unsung heroes. And generally, we don't talk about them. We talk about, people who are right in the front of the, focus. So we forget about those people who have quietly built something, quietly worked, and done something so heroic. So I think that was one of the most inspiring part about this film. And if you ask today's generation, they don't even know what 1990s India was. They don't know there was no Coke, no Pepsi, no Domino's, no McDonald's, no multiplex, no shopping mall, nothing. And they find it very difficult. And in 35 years, what started then has transformed India into a very powerful country today. So I think that journey was fascinating. For us, it was a story of financial independence. One independence we got in 47. In 1990, we got 1991, we got financial independence, and we are now enjoying the fruits of it. So the challenge as a writer and as a director for Chinmay Mandlekar, who is not here right now with us, for all of us was that how do we make people interested? And how do we make them feel that this is a story that they must watch? Now, I can tell you one thing, we've done few shows now, and lots of people have watched it, and I can tell you that females are loving the film more than the males.
Why is that?
More than the males.
It's surprising. I mean, they come out and they say, oh, you made us cry, you made us laugh, and we can't imagine in a subject like this, you've been able to put humor, you've been able to put so many human emotions, and it is so relatable. So I don't understand finance, but I understood the film. I understood the crisis. I understood your heroism that you are trying to portray.
Right.
And they all are going gaga over his performance, obviously.
As we do very often.
I mean, yeah, we've always done that. So they come out and they say, oh my God, what performance, this, that, the other. But what connects to them is the way the narrative has been, woven in a very simple story.
Right.
And that is what they are taking home. So many people may think, this is a story which might just appeal to males. But I can assure you that your wife is going to like it as much, if not more.
So then, Manojji, you vet your stories very closely. From the choice of stories from a Bhikhu Matre to playing an RBI governor who goes down in the annals of time. Matlab, history to such a great deal, but also leadership qualities of a certain period in our economic history. To be able to choose a character of that kind, what did you have to understand of the period that India was going through that made you say that, look, this character deserves a mention? Because like I said, he's not known. Many people from the younger generation who will be watching this film will not understand that period that India went through.
Right. There are 2-3 things to it. Why I do it? Because, in our industry, it's very important for us to understand your strength very early in your career, and start chasing that and start building it. If I'm a real person, I should do that immediately and start working on it. The 30-year bias, I realized that my strength is not going to be my face. My strength is not going to be my dance. My strength is not going to be how I fight. My strength is only going to be the thing that I have learned during my theatre days, and I have to build my career on it. Yes, it will take time. because the going is not favorable for an actor like me. So, brick by brick, you have to build it. You have to have patience and hard work, which is needed, mostly all the time.
But I want to interject. Why are you saying that the going is getting increasingly tough for an actor like you?
Yeah, because in the time of in the time when the commercial films, wherever we used to go to the studios, people will tell you, because we belong to the same time, every studio that we used to go asking for work, looking for work, there was some hero or the other singing a song. There is some song shooting happening, yes, some dance sequence happening. So that was the going on of that time. The commercial films were ruling the roost.
Correct.
Okay, and there was hardly any space for anything else at that point of time. Okay, and satellite was something that I was keeping a distance from, because in those days, people who were working, the actors, not considered as the possible talent on the big screen.
Right.
So for that, in the initial days, till the time I could survive in Mumbai, I stayed away from television. But I eventually had to do it, because you have to do it. But the first thing you're looking for is to survive in the city.
But it's interesting that the transition into OTT and the amount of work that you're doing over there.
See,
but that was an easier choice, right?
Yes,
between film and television to television, now of course that much more OTT. Was that an easier transition?
So people also vouch with me on this, that on OTT was rising. It just came in. It's still in its baby phase, and I happened to be in the US, and I watched Narcos and Breaking Bad.
Wow!
And that was not available to us.
Right.
So I watched it for the first time at my friend's place where I was staying, and then I started talking about the series with my friends, and they said that all of these actors are big stars here. They are ruling Hollywood. So in our country, in our industry, everything comes from there.
Right.
The tradition, whenever it is changing, shifting to something else, somehow it starts reflecting on our industry a little bit late. But I realized that OTT is entering Indian space. I think it will be interesting to try my hands with this.
Right.
And luckily I got Family Man. I realized when I heard the story, I realized that this is it. Because we have a very different audience sitting at home. Very, very different audience.
True.
Their way of consumption, the stuff on television, is it's something that satellite has changed it completely. So Family Man was the right choice, where you are talking about a family person and how he's trying to find the balance between his job and the family, and
right.
it is something that everybody can relate to, whether you are a producer or a news anchor. Everybody can relate to that struggle. Correct. All of us have been doing that. Our fathers have done it. We've been doing it. Yeah.
So that relatability is very important, Vipul.
It's very. So this is I was coming to that factor. Why women are liking it? I think if the head of the family is going through a dilemma, a conflict, the family comes together. And this is what is touching the family. The family scenes between me and my wife Madhu, she's a very known actress, and the daughter. So they are connecting the dots quite emotionally.
Right.
It is touching them there. So I think that is where the film has been successful.
So when you talk about relatability, there have been films in the past, like a Scam 1992, about exploiting the financial system. Here you're making a hero of the system, hero of the person who drove it, who happened to be on the fringes, was not right there in the center, not with Mr. Narasimha Rao and Dr. Manmohan Singh, who get celebrated for that entire crisis management that took place. And the very important juncture of moving the gold, that is the big dramatic point. to bring that story alive, to choose that, to make a celebration of that and putting the spotlight on it, was that a tough decision to make from the kind of cinema that you've made in the past?
Not really. Actually, when I heard the one line of the idea, I was very sure that I wanted to make the film. Because very seldom you get a film which is so rooted and yet it talks about unparalleled heroism. And it's such a positive film. It's a patriotic film, but it's a patriotism that doesn't come from the borders. It's a patriotism that comes from within the system. The system we generally hate so much. We say every government organization is bad and corrupt and this, that. And here is a group of people led by these exemplary gentlemen who fought a crisis and got India out of a situation which is unimaginable. So such a huge task, and they just did it without a noise. So I thought that was the best, greatest part about the script, that you are talking about something so monumental, but done without absolute, with absolute zero noise. And to me, that was the biggest heroism. And the character that Manoj plays,
yes,
even if you see the trailer, he is not shouting or screaming, but when he says that I will not let India fail, you know that this guy is going to do something massive.
He means business.
He means every word of it from the core of his soul. And the way he has performed it, it's amazing to see.
Right.
So I think these are the reasons why this film had to be made.
Right.
And again, you're talking about a financial world which is supposed to be a boring sector, so to say, but everybody is involved in financial sector.
Yes.
So it's the responsibility on us was to make it entertaining, interesting, and truthful. I think we've been able to do something.
But Manoj, you're known for your nuanced playing of characters of various kinds. Often they're on the fringes of the power play, whether it's like a lawyer or a policeman or, here you're right in the center of how this entire decision-making was happening at a very crucial moment in our economic history. So to be able to understand that character, the leadership that he portrayed, an RBI governor.
Right.
Today, the RBI governors are much more celebrated, but we don't know enough about the one that you're talking about.
Right.
In fact, that's why the spotlight is on him.
Right.
What did you understand about this gentleman who you're portraying? What was it about him?
People just mentioned that, so there's some people who are working very quietly behind the doors, and they don't care about the spotlight. They mean business. They are very serious about the job, and they understand the burden of the country that they are carrying, and the hopes of so many millions and billions of people they are carrying on their shoulder. So these people are not made of the material which is looking for some kind of validation. They are actually all the time struggling and working to find some solution, some way forward for the country. Their every decision, every policy where their signature is going is measured 1,000 times by these brilliant minds who's working on it day and night.
Right.
So that itself, shapes your personality.
Yes.
It's not only knowledge, just the understanding of the position that they are holding, the weight of the position that they are holding, the responsibility, So when you are working on the character, when you start getting all of these elements, your focus is to get it just right. That silence, that pause, that stable gravitas about the person that you are performing, that it should not look like your pretension from any angle. It should look like natural, free for flowing mind which is occupied only with data and calculation and statistics. So, yeah, I mean, it takes time.
But if a certain situation of this nature that was so critical for us, because here you're talking about such a hideous balance of payment situation,
yes,
that you have to move your gold to a Bank of England to be able to mortgage it and to be able to kind of play that risk. If that kind of situation, God forbid, had to happen today, how do you think that would play out in a film? How would you choose to kind of portray that? Would it be very different, this kind of situation that you're speaking about historically? And if you had to kind of see that happen in a current context where we're still grappling with oil prices, we're still talking about the impact of higher oil prices in the future, which of course led to that situation as well because of the Gulf War, right? So something like that, if it were to happen today, would that be as easy to turn into a film, perhaps years later?
See, the most important thing is that this man, as I understand him, is one of the most patriotic men who served our nation. Unless and until you are so patriotic, when you come in the office and first day, if your team tells you that the country is going to go bankrupt in 1 month and you don't quit, quitting was one option. He never took it. And he fought and fought and fought with the team, and he led them from the front, and he got India out of that. So to me, that patriotism is massive. And I think that today India is such a powerful country that I don't think we are going to come into a situation like that. But we both have been very carefully again and again, and even my director Chinmay, we have tried to tell audience through the film that history can repeat itself. If you don't learn from history, you're going to make a very big mistake.
Right.
And history is there for you to learn. All the kids, all the students, all the people who are young, they are going to be future leaders. They must watch this film to understand the kind of crisis India was in and how we came out of it. Tomorrow there can be a different kind of crisis. The war is still not over, and nobody knows where it's headed and what can happen. There can be a different challenge. So today's leaders can take some kind of a message from that crisis, and that was the effort. That if this film is viewed by today's audience, it will make them a bit richer after watching the film. They will come out a little more mature. They will come out with a little more sense of patriotism towards our country.
Also, knowing things in context always helps you.
Right.
Right. And here is a big context to refer to and to learn from, as people were saying.
So when you want people to think about this film, perhaps years later, looking back at it, Manojji, and your performance in it as well, for everything that you bring into it, how would you think people are going to reflect on a film of this kind?
If that happens, I'll be very happy. All of us will be happy because this character is part of the script. I'm really hoping that through my performance, they will understand the job very well. First of all, you are also educating the people about the seriousness of the job and what is their contribution to the growth of the country. So even that, reaches straight, will be very happy.
Well, certainly that's a hope. It's a fascinating story because it reminds us that history is often shaped not only by elected leaders and the ones who grab the headlines, the headline makers, but also by the institutions, the technocrats, the individuals who are working quietly behind the scenes when a nation actually is facing its most difficult moments. And whether viewers come away thinking about economics, leadership, public service, simply the importance of difficult decisions that are taken under immense pressure, well, this story, Governor, the silent savior, this film certainly revisits one of the most consequential chapters in modern India's journey. I want to thank Manoj Bajpayee and Vipul Shah for joining us and walking us through what we can expect from the film. We wish you great success with it.
Thank you.
And Mr. Bajpayee, of course, we are looking forward to all those nuanced characters that really stay etched in our memories.
Please watch this film, Governor, which is releasing on 12th June. In theaters, I'm always, repeating it, in theaters nearby you, and go with your family. I am very, very sure with Vipul and my team, we have a great confidence in the film. the story that we wanted to put it out there. We can assure you about a very truthful story and truthful work from our side.
Looking forward to it, sir, and all the
Thank
best.
you.
Thank you so much.
Thank you.
Yeah.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. I'm going to start with making a bit of a generalization. Most people that I speak to, there are two asset classes that they're extremely passionate about. One is gold, for obvious reasons, because most people I speak to are Indians, and the second is real estate. Practically everyone I speak to says that one of the first major purchases that they do make once they start earning, or at least they aspire to, is real estate. What I want to ask today though is, how do you identify whether you've made a bad investment in real estate and how do you rectify it? I'm joined by Vishal Dhawan, founder and chief executive officer of Plan Ahead Wealth Advisors. Vishal, controversial subject, and I'm going to ask you to put your neck on the line. But having said that, it's fairly easy to accept and acknowledge a bad investment in the equity market. The signs are available for you to see on an ongoing basis in whatever application you're using. It's not as easy for somebody to accept and acknowledge a bad investment in real estate. How do you define one though?
Thank you for having me over, Alex. Always a pleasure. So I think it's, I think first of all, it's never easy for anyone to accept any investment as bad. But I think real estate it's much, much harder. And I think there are a few reasons for that very clearly. One is that you first of all struggle to actually put a correct cost to what is it that you've actually paid for your real estate asset. And this happens because besides just the money that you put out to the developer or the seller of the asset from whom you bought it, you also have other costs associated with it. You have stamp duty, registration costs, which go to the government. If you bought an under construction property, you may have GST. You could have maintenance going into societies or into a corpus fund continuously every month, every quarter, irrespective of whether your place is rented out or not. You could have interest costs loaded on because you've taken a loan for that asset. And then there is also just upkeep of that particular asset, which could also come into play. So there are a whole bunch of costs which all come together, including property taxes, which make it that much harder for someone to actually sit down and say, okay, what is this real estate actually cost me? And put numbers down to that cost. So that's on the cost side. The second side is obviously the fact that you don't even know what's the correct value of that asset, because if you go out to buy a real estate asset versus selling a real estate asset, you will hear different prices for exactly the same asset. When you go out to buy, that asset price will be inflated. When you go out to sell, that asset price will be depressed. So you have to be able to somehow figure out what's the right value of that asset as well. And most often it will end up being some sort of an estimate in terms of what that selling price is. And then when you put both these together, you have the added complexity that by its very nature, like equity, it is expected that you have a long-term investment horizon, very typically about 7 to 10 years. And the difference is in equity, your upfront costs can be quite low because you may end up paying a brokerage or some STT when you buy something, but you don't end up paying a lot of money right at the start, unlike real estate where you pay a lot of upfront costs in the form of taxes, etc. So I think the biggest thing for people to do is to be able to first convert the difference between the selling price or what you think is the selling price versus all the costs associated with purchasing that asset. Then looking at what is the annualized rate of return that you've done, because unlike equity and other asset classes, which very often get denominated in CAGR or in IRR terms, with real estate, very often you will see numbers being spoken about in absolute terms only. I bought something worth 1 crore, it is today worth 1.5 crores. In 7 years. No one has converted that into an IRR number saying that this is what it ended up being. So it's a very different methodology of how it gets talked about.
Okay, so you've described how to come up with that, or what the methodology is, Vishal. So and you've actually answered my question before I asked it, which is, should you look at it post-cost? And effectively what you're saying is that you should be looking at it post-cost. And that is inclusive of the EMI that practically nobody tends to talk about, to say that when you're investing in something in the equity market, say, there is a compounding effect that comes through, or even in a simple fixed deposit that reinvests your money if that is the case. But let's say an employee provident fund, right? Let's not talk about a fixed deposit, an EPF or a PPF, but that's not the case with real estate. So therefore, the question I'm asking is, how do you call something a bad asset or a bad investment? Where do you draw the line?
So I think, for every investor, there is going to be an opportunity cost and there is a cost of funds. Now, for most people who are using unleveraged assets, very often it's a lot easier to measure your opportunity cost because you simply have to look at the rate of return you've made on that asset versus a competing asset that you could have invested in. Let's say a real estate investment made a 7% CAGR. How does that compare with equity, which may have done 8% CAGR, or a fixed deposit, which may have done 6% CAGR? Of course, we need to account for taxes everywhere because asset classes could have different taxes, different holding periods, etc. But it tends to be, very often a comparative cost because you aren't using leverage on one side. The moment you have leverage coming in, all of a sudden, within an EMI, as everyone would know, there is an interest cost and there is a principal component that you are paying back to the institution that you borrowed from. And the moment you have an interest cost attached to it, automatically your ability to break even or make more gets raised. So I think it's very important to keep in mind that on one side, you have the opportunity cost, saying there are a bunch of other assets which over long periods still deliver a certain type of return. The second is you have cost of funds very often on real estate, which you also need to factor in. And thirdly, you need to have a liquidity premium assigned to those assets because they're liquid, or you have to assign an illiquidity premium to break even on real estate because it's not a liquid asset. So typically the way we would look at this is that at any point in time, assuming that, growth assets like equity tend to have a reasonable expectation over 7 to 10 years to deliver to you like a low double-digit return, you should imagine that your real estate costs all put together, including the interest cost, plus any incomes that you get from there, which is your rental yields, should be at least a couple of % over that rate of return that you get of equity, so that the illiquidity premium that would have come through is well covered. And you unfortunately discover this only over 5 to 7 years, because at the end of the day, you want to give that asset enough time, because a lot of times real estate gets sold on location.
Yeah.
And a lot of the location gets built around infrastructure creation that's going to happen around that particular location.
Fair. But Vishal, so point taken, but I do want to ask, so therefore, if you're not getting that kind of a return, and if, for example, you're getting a single digit return and you're putting your rental yield alongside that, and you're saying that you're at 7 or 8%, which is the case for a lot of people, let's face it. When do you decide that you need to pull the plug, especially if you have an ongoing EMI, which is draining your finances on an ongoing basis, so that opportunity cost is actually double?
Yeah. So I think there are three sort of triggers that you might want to look at. So one is clearly because it's an illiquid asset. If you have a goal which you have created this asset for, which is coming up in the next 2 to 3 years, you need to start that process of trying to liquidate the real estate asset 2 to 3 years in advance to give you enough time to be able to actually complete the transaction in the way that you wanted to without selling at distress. So that is point number one. Point number two is if you don't have a goal and are looking at it purely as an investment asset, you need to now understand that over a 5 to 7 year period, when you've realized that this asset is not growing the way it is because either infrastructure development did not happen the way that you had planned, or because supply far exceeded demand, or maybe you just bought into a particular segment within real estate, which is not done well. Let's say, for example, if you look at investors who may have bought into affordable housing over the last few years, they may have underperformed investors who have bought into more premium real estate, because these two segments work differently in the last few years. So when you see these trends play out, which are over 5 to 7 years, I think you need to be very rational about it, saying that this was a pure investment decision that I was making and it hasn't worked for me. While it's always very hard to, accept it, especially if you've made a net loss because your costs of the, when you put the EMI and everything together could be higher than your purchase price. I think it's good to bell the cat, because ultimately, you need to be aware that there could be a very large pool of capital stuck here. And the more it underperforms going forward, the more likely that you're going to end up impacting other financial goals that you might have.
Yeah, it's a good answer. Vishal, at what point are you over leveraged? And this is pure financial planning 101, because people tend to say that, let me bear the cost right now, it'll settle itself off down the road. If I can bear a little bit of a burden right now and pay an EMI that I may not completely be comfortable with, in 3 years' time, because my earning potential is there, I'm going to be more comfortable then. At what point are you over leveraged and you have to make a choice to pare this down?
So there are 2 or 3 different aspects to this which are critical. One is that, for a lot of double income couples, there is a tendency to look at both incomes together when you're out there looking for a loan. And very often when people are buying real estate, especially for end use, there is a tendency to go a little over what you actually wanted, because clearly somehow everyone seems to like something which is more expensive than their budget. So one of the things that you need to keep in mind is that in a career, there could be one partner who's either forced to get off that career path, either temporarily or permanently, or there could be a situation where due to ill health, the person or not so great health chooses to get off that path as their choice. So either it's forced upon them or it's a choice they make. Therefore, first of all, please ensure that you're looking at only one income while you're building out this model, not 2 incomes. Having done that, I think it's important to keep in mind that if that situation happens, the amount of EMI that you end up paying should not be more than 40 to 45% of your total net take-home salary. And also keep in mind that you may have other loans that you're servicing at the same time. Maybe there's a car loan, maybe there's something else that you borrowed against. So try to ensure that all your EMIs put together don't go beyond 40 to 45% of your net take-home, so that you are covered against most eventualities that could end up happening, and you can ride out a weak period that tends to happen. I think in today's world, with the way AI is happening, with the way India's demographics seem to favor younger people, I think being cautious while taking on loans is very critical. And also, we may be at the start of an interest rate cycle, which could start to move upwards. And because most loans today are set to external benchmarks, every time that external benchmark rate goes up, your EMI will either go up or your tenure is going to go up. And both of them are not good for your finances.
Yeah. The bottom line, of course, of this conversation, Vishal, is to go back to the drawing board and to study what the post-cost returns of your investment have been, if indeed that real estate was an investment. And it's better to bell the cat, as you've said earlier, rather than later, because these issues tend to compound. Thanks so much for taking the time.
Thank you.
All right, now, so that's one leg of today's program. In the second leg, I'd like to talk about what you should do if you are trying to keep the powder dry. This is a term that is used for investors in the equity markets. If you feel that you foresee an opportunity that could emerge over the next few months, and you want to keep a certain amount of funds available for you to deploy. It's not necessarily a philosophy that everyone ascribes to. It is something that a few people say is a good idea to do, but a lot of people also say equally on the other side that it's better to be invested full time. I want to ask that question to Varun Fatehpuria, who is the founder and chief executive officer of Daulat Wealth Management. Varun, hi, thanks so much for taking the time. Does it make sense to have dry powder right now? Because a lot of people are talking about large cap earnings and the fact that they're expected to be single digit based on what we're seeing globally and the implications of imported inflation, etc., slowing growth. There are still opportunities at the broader end, though, is what the consensus at this point is. Does it make sense to have dry powder?
Yes, hi Alex. I would say it's a fair question, and the instinct to be deploying in this market where the markets have sort of, corrected very steeply in the first half of 2026 and have not really gone anywhere since Nifty reached its all-time high in September in 2024. So it's a fair question to ask, right? And investors would be grappling with this question almost day in and day out. And my short answer to that is yes, I would say keeping in some amount of dry powder definitely gives you the flexibility to act in a market which is sort of remained sideways over the last 3 months, 6 months, right? And there are not really any trigger right now at this point in time that would make the index go higher. So yes, I would say keep some dry powder. To what extent do you want to keep that dry powder? I think that's a separate question. But definitely having some dry powder at this point in time would give you the flexibility, I would say at least, to deploy when the markets turn even more attractive than what it is right now.
Okay, so what is the definition of dry powder? Because this is something that some fund managers tend to do as well. And we've spoken about Parag Parikh, and we've spoken about the Flexi Cap Fund. The fact that at last count it's at 15% cash, and that's down from 20+% cash. But that's a cash call that the fund manager said he's comfortable with taking. Your average investor is not a professional fund manager. So what is appropriate when you talk about a cash call or dry powder?
I would say there's a very famous saying actually, or an adage in the market that more, I would say, returns are actually lost waiting for the correction rather than the correction itself, right?
I'm glad you used it because I was going to use it after.
You can always sort of keep on holding on to cash rather indefinitely. But how I would view it is, let's say, if you're an investor who has already a fully built equity portfolio, been in the markets for the last 4 years, 5 years, a good dry powder could be anywhere between 8 to 10%, right? That could be, let's say, including the amount of capital that you want to introduce in the markets today, and any sort of a readjustment that you want to do from your existing stock portfolio or mutual fund portfolio. So that's for, I would say, already investors who are invested heavily into the markets. The second set of, I would say, investors are those who have received any sort of a liquidity event, whether it is a bonus, whether they have exercised their RSUs or ESOPs, or for that matter, are just holding and received a big chunk of cash. I would say then the question sort of, tends to differ slightly differently, because then the cash itself is not really just a function of where the index is, but also really where you are in your overall investing journey. And then I would say then you need to have a more systematic approach of introducing that capital into the market over a period of time.
Okay, so then let me ask you this, Varun, which is, where do you put that money? Where do you park that money? Because it cannot be lying in your savings bank account if you don't have visibility that you're going to invest it in the very short term, right?
Yes, Alex. I would say the only place where keeping money into your savings bank account actually really shines is if you want to deploy that capital at a very short notice, let's say on an intraday move, or you see the Nifty go down 200, 300 points on a single day, and you want to take advantage of that opportunity almost immediately. For any other reason, I would say keeping money into a bank account, which gives you about 3.5%, I would say financially does not really make a lot of sense. So the second set of opportunity that you have is you could keep it in, let's say, a liquid fund for any of the needs, let's say lesser than 3 months. Given that I would say redemptions are pretty much on a T+1 basis, there is very little NAV volatility, and the yields of the liquid fund actually ends up tracking what the overnight rates are. So today the liquid funds are giving you anywhere between 5.75 to 6% on an annualized basis. But let's say if you have a horizon which is slightly longer than 3 months, let's say a 3-month or a 6-month period, then something like an ultra short duration fund or a money market fund could also provide you with that uplift in the yield, let's say in the range of 6% to 6.5%, which is obviously considerably higher than what you get in your bank account. The reason being is whenever you are, Alex, putting money into these instruments, you're not just optimizing for yield, you're optimizing for also protection of capital in the short period of time and the liquidity with which you want to access that money.
There's also the argument of deferment of tax. If you're putting this same amount of money in a fixed deposit for that same duration of 1 year, chances are that you will get less in the way of returns, and the tax also that you have to pay is more periodic, right? Because the interest rate hits, or the interest hits your account and you have to pay tax basis that. But Varun, you've not mentioned arbitrage funds and income plus arbitrage funds. Where do they fit in? Should you not be able to use even them for keeping powder dry?
So I would say, Alex, where income plus arbitrage and let's say arbitrage funds really shine is for a duration greater than 12 months. So arbitrage funds have a favorable equity taxation of 12.5% if you hold them off for a period greater than 12 months. But then let's say you are taking a slightly more longer call, and I'm not really sure you want to be keeping your cash for a period of 12 months, 13 months, just waiting for a correction to happen so that you can deploy in the markets. Because what really ends up happening is then you have an opportunity cost, and then you probably have not made use of the opportunity. And the similar argument also applies for most of the income plus arbitrage, where the holding period is actually 2 years to get that favorable taxation. So I would say that's a slightly higher play that you have on your shorter term money. But for, let's say, anything less than 12 months, you're better off putting on to more simple, plain vanilla debt funds like liquid, ultra short money market funds. I think for most part, that would do the job well.
Okay. After the derivative charges changes that took place, there was, of course, a change in the way that arbitrage funds would return money to you. What is the rough estimate of what arbitrage funds give you? And income plus arbitrage would be a slightly lower than that, right?
So I would say arbitrage funds today, Alex, we have looked at the returns historically, it has almost always tracked closely the repo rate that we have in the economy, right? So today the repo rates are closer to 5.25. And if you add a certain amount of spread over and above that, today most of the arbitrage funds are giving in the range of 5.75 to 6%. Even if we take into account the split between the TER, between the base expense ratio and the derivative charges over and above that. So we have not really seen a very high differential, let's say over a 3-month, 6-month period, whether it is for the arbitrage funds or for the income plus arbitrage funds alike.
Yeah, the primary advantage is the tax treatment, where post 12 months it becomes significantly more attractive than the liquid and the ultra short term, because you get equity taxation of 12.5% compared with a slab rate. So if you're in the top tax bracket, then you're paying effectively 30% on a liquid fund or an ultra short-term debt fund. I think that covers all of the bases, Varun. We've explained what keeping powder dry means and where you should park that money. Thanks so much for taking the time. Pleasure speaking with you.
Thank you, Alex.
All right, now, we've had two very interesting conversations, and one I'm sure that you have some opinions on, and I'm talking about the real estate conversations. Write to us and tell us what you think, and let us know what you'd like to listen to or hear about on this platform. Thanks so much for watching. This is NDTV Profit.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhagna. Let's get straight into the show and see how the markets have really fared today. So viewers, benchmarks have attempted a recovery with the Nifty closing above 23,200 levels and the Sensex also gaining over 400 points. If we look at the broader market, so they have outperformed the benchmarks today in trade. And talking about the sectors, so most of the sectors have closed in the green. PSU banks have led the gains with banks, realty and auto also in good shape. Meanwhile, if we talk about IT and media, so they were on the back foot. Viewers, banking stocks have led the market higher after the Reserve Bank of India announced operational guidelines for its concessional forex swap facility, and the measure is also aimed at encouraging overseas fundraising and also attracting foreign currency inflows into the country. The announcement triggered broad-based buying across the banking space, with private and public sector lenders advancing as investors cheered the potential liquidity and also funding benefits. Now let's look at some key counters that were buzzing away in trade today. First up, we have Vodafone Idea. So it has secured a significant legal victory after the Bombay High Court has quashed demand notices issued by the Department of Telecommunication for one-time spectrum charges, and the court has also directed the return of bank guarantees submitted against the disputed demand. And the ruling strikes down the centre's 2012 decision to levy additional charges on spectrum holdings, providing a major relief to the telecom operator. Next counter to look at is Paytm. So the shares have moved higher after reports suggested the fintech major plans to hire around 4,000 employees as it scales its merchant network and also AI-led offerings. And the company is set to be expanding across product, technology and even leadership roles through FY27. So the hiring push comes even as Paytm looks to optimize its workforce following its annual performance review process. Next counter in focus is PI Industries. After its key partner Kumiai Chemicals has upgraded its first half 2026 outlook. Now the company has raised both revenue and also operating profit guidance, citing strong demand visibility, and the development is significant for PI Industries, which supplies the herbicide pyroxasulfone to Kumiai. Now, the product accounts for more than a third of PI Industries' revenue, making the upgrade a positive signal for business prospects. Next counter to look at is Fino Payments Banks. So its May business update has presented a mixed picture with strong growth in the core banking metrics offset by weakness in transaction volumes. Now deposit accounts have rose 29% annually while loan dispersals have jumped 186% to 210 crores. Average total deposits have also posted healthy growth. However, the throughput transaction business has declined sharply, falling about 48% as compared to the same period last year. Next counter to look at is SML Mahindra, which has delivered a solid performance in May with both production and sales registering healthy annual growth. Now, production has rose 7% while sales have increased nearly 12%, and this is also reflecting steady demand in the commercial vehicle segment. Exports have also showed strong momentum, more than doubling from the year ago period, adding to the positive operating update. And US Panacea Biotech has launched the Denstar project to expand access to its dengue vaccine across Africa and also other global markets. And the company's dengue all vaccine targets all 4 dengue strains and is also currently in late stage clinical trials. And Panacea is saying that the vaccine is designed to provide broader protection with also fewer side effects, and the commercial launch is targeted for 2027 and also marking a key step in the company's global vaccine strategy. Whereas HSBC has initiated coverage on IDFC First Bank with a buy rating and also a target price of 90 rupees. Now, the brokerage believes the bank is well placed to deliver multi-year high loan growth, and this has been supported by strong execution and also operating leverage. Now, HSBC is expecting robust earnings momentum, also projecting a 35% core PPOP CAGR between FY26 and 29, and along with improving return ratios, also expanding profitability. Next counter to look at is Vartech Wabag, which has secured a large order in the UAE for a biorefinery plant from Ajman Sewerage. Now, the contract, categorized in 250 to 600 crore range, further strengthens the company's presence in the GCC region. Now, the order also underscores Wabag's expertise in water and wastewater infrastructure and also adds to its growing international project pipeline. Next stock that was buzzing away in trade was Lemon Tree Hotels, which has signed a new franchise agreement for a key Prima hotel in Rajasthan, further expanding its presence in the state. Now, the property will feature 88 rooms along with restaurants and even other guest amenities, and the addition is part of the company's asset-light expansion strategy and also strengthens its growing hospitality network across India. Whereas Electronics Mart India has commenced operations at a newly opened store in Telangana, further expanding its retail footprint in a key market. The store opening is part of the company's strategy to strengthen its presence across high-growth regions and also improve customer reach. Now, the expansion also supports its long-term growth plans in the consumer durables and electronics segment. Next counter to look at is Ratnavir Precision Engineering, which has announced that its board will meet on June 11 to consider a potential fundraising proposal. Now, the company has not disclosed further details on the size or mode of the fundraise. Investors will be watching the board meeting closely for some clarity on the capital raising plans and also their impact on the company's growth strategy. Next counter to look at is Ola Electric. So the shares have staged a sharp comeback, rallying over 115% from their record low levels and also emerging as one of the market's standout performers. Now, the recovery has been driven by improving investor sentiment, also expectations around operational improvements and optimism over the company's long-term electric vehicle growth story. However, analysts remain divided on whether rally can really sustain at the current valuations. And your Zepto is lining up a 12,000 crore IPO with a large fresh issue while promoters retain their stake. So the IPO will have a large component of offer for sale, with existing investors selling nearly 11.3 crore shares in the issue. The company's founders, Adit Palicha and also Kevalya Vora, they've received summons from the Enforcement Directorate in April this year, seeking information and also documents related to foreign investments, financials, and even the company's business in connection with proceedings under the Foreign Exchange Management Act. Now, First Cry-backed Swara Baby Products is preparing to enter the capital markets with a proposed IPO of up to 1,000 crores. Now, the issue is expected to include a fresh issue of shares along with an offer for sale by existing investors. Now, the company manufactures baby diapers, adult incontinence products and even feminine hygiene products, and has built a strong presence in the contract manufacturing space, and draft papers are likely to be filed with SEBI later this month. And China's trade momentum remained strong in May, with exports rising nearly 20% annually, beating expectations and also accelerating from the previous month. Imports also posted robust growth, also signaling resilient domestic demand. Exports to the United States have jumped sharply, while technology, semiconductor, computing equipment and also automobile shipments continue to drive the growth. Now, the strong trade performance comes despite the ongoing geopolitical tensions and even disruptions linked to the conflict in the Middle East. Here's a major milestone has been achieved in the strategic Zojula Tunnel project, with more than 13 kilometers of excavation now complete. So the tunnel will provide all-weather connectivity between Kashmir and Ladakh, significantly improving the access across the challenging Zojula Pass. Now, once operational, the project is expected to reduce travel time between Gandarbal and also Kargil from hours to just over 20 minutes. And this is also boosting both connectivity and economic activity in the region. And viewers, Lucknow police have busted an alleged counterfeit currency racket and also arrested 3 accused involved in circulating fake notes. Now, acting on specific inputs, the police has recovered counterfeit currency worth nearly 14 lakh rupees from the suspects, and authorities are saying that the accused were allegedly converting fake notes into genuine currency and also operating a wider network. Now, investigations are now underway to identify other members linked to the racket and also trace its broader reach. Viewers, looking at some international news now, US President Donald Trump has said that US is in the final stages of a deal with Iran that would prevent Tehran from acquiring nuclear weapons, also adding that the Strait of Hormuz could reopen immediately after an agreement is signed, possibly within days. Now, but even as diplomacy gathers pace, tensions remain high. Iran and Israel have paused direct attacks, yet Tehran has warned that military action could really resume if Israeli operations continue. So Iran has also accused Israel of repeated violations, raising fresh questions over the durability of the fragile ceasefire. And viewers, tensions in the Middle East remain elevated despite efforts to maintain a fragile ceasefire. The Israeli military has issued a new evacuation order for the southern Lebanese city of Tyre, and also urging residents to move further north. And the move comes just a day after Iran called for an end to attacks on Lebanon. Now, Israel is saying that it is targeting Hezbollah positions, while also reports of fresh casualties have raised concerns over a broader escalation. And Chinese President Xi Jinping has concluded a high-profile visit to North Korea, his first trip to Pyongyang since 2019. While no major agreements were announced, the visit underscored the strategic importance of ties between the two neighbors. And coming at a time when North Korea has moved closer to Russia, the visit is seen as Beijing's effort to reassert its influence over a key regional partner. And viewers, the UK government is considering a ban on social media use for children under the age of 16, with a policy announcement expected in the coming days. Prime Minister Keir Starmer government is reviewing options ranging from a complete ban to restrictions on key features of social media apps. And the move comes after overwhelming support from parents in a government consultation, and also could mark a major shift in the online safety regulations. Viewers, violent clashes have erupted in Pakistan-occupied Kashmir following the ban on the Joint Awami Action Committee, which is a civil society group that has led protests over economic and also political issues. Now, reports are suggesting that more than 30 people have been killed and hundreds have been injured as tensions have escalated between protesters and also security forces. The unrest, intensified after alleged firing incidents involving group members, further fueling anger across the region. And the Pentagon has expanded its list of companies it says are linked to China's military, adding several of the country's biggest technology and also industrial firms, including Alibaba, Baidu, and also electric vehicle giant BYD. Now, the move is likely to add fresh strain to US-China relations, with Beijing condemning the decision and also vowing to protect the interest of its companies. And a fresh controversy has emerged ahead of the FIFA World Cup, with Iran claiming its official ticket allocation for supporters has been withdrawn just days before the tournament begins. And Iran's Football Federation has said that fans who had already made travel plans could now be left without access to matches. And the federation has urged FIFA to intervene, calling for fairness and also equal treatment of all participating nations. And the music industry is mourning the loss of Grammy-winning songwriter Tale Riley, who was fatally stabbed in East London at the age of 35. Now, Riley, known for his work with stars including Dua Lipa, Nick Jonas, Britney Spears, and he was found with stabbed wounds on June 5, and police have launched a murder investigation while tributes continue to pour in from across the global music community. And viewers, before we slip into a short break, we have India's growth story, which remains pretty resilient, but dark clouds still remain on the global front and are also beginning to weigh in. Now, Chief Economic Advisor V. Anand Nageswaran said that the economy was firmly on track before the West Asia tensions, but rising crude and uncertainty are now dragging the expectations closer to the RBI 6.6% mark. Listen in to a slice of that conversation my colleague Shrimi Chaudhary had with the CA.
The growth numbers has surprised many of us. What's your outlook for FY27? And as the Modi government, completes 12 years, what's your assessment on the economic progress so far?
No, I think you have packed multiple questions into one sentence. The Indian economy's resilience should not have been a surprise, because post-COVID, we had consistently grown at over 7%. And I think some of the lagged effects of the reforms starting from 2014 were beginning to show through, particularly the supply side capabilities in the economy having improved so much, and the fact that fiscal consolidation and fiscal prudence brought down the interest rates for the government, and naturally spilling over into the private sector borrowing costs, etc. I think shouldn't be a sense of surprise at how well the economy was doing before the West Asia conflict began. Now, talking about the outlook for 26-27, naturally it is clouded by uncertainties. We were very confident on February 27th about the growth rate being 7 to 7.4% for the current financial year. Obviously, that's going to be a very humongous task to get there. It will be more likely in the range what the central bank put out on Friday, 6.6% with downside risk. But that should not take away from the fact that once the conflict subsides and energy prices return to pre-conflict levels, India's growth trajectory will bounce back towards the 7+% range that we had gotten used to post-COVID.
So you expect that 7% once we will get into the recovery mode, but you kind of refrain from giving up specific estimates for FY27, and you said during your briefing also that you will go with the RBI projection, the latest one, but wanted to understand if this drag on and for a longer period, do you think that the growth will spill below 7%?
No, I think for the current financial year, I think 7% looks like a stretch. There's no question about that, which is why I said I'll go with the RBI's projection, which is 6.6, with the downside risk attached to it. I think that's a fair characterization. In the light of what has been achieved in 25-26, which is a 7.7% full year growth rate, RBI has projected 6.6, which is a 1 percentage point drop. And with the downside risk label attached to it, which I think is a fair characterization of the uncertainty that we face in the current financial year.
But sir, tell me, the Q4 numbers, we have seen it's beaten the estimates. Even the overall FY26 looks really strong. Do you think that it's because of rebasing of the GDP, or is it consumption and demand and the several reforms which government has taken in the past few years, and that is reflected in the growth numbers?
No, I will not attribute to just the rebasing alone, because naturally last year, if you look at both the supply side, the GVA numbers and the GDP by expenditure numbers, which MOSPI puts out, it was a balanced growth profile. I mean, manufacturing was a stellar performer in the GVA in the supply side, and on the demand side, you had good growth in across all segments of the expenditure, which is government, private consumption, capital formation, investments, and net export growth as well. So it was a question of all-round growth that was contributing to the 7.7% overall growth outcome.
So can we say it's a combination of reforms also and the rebasing of GDP? Can we say that? Or?
I would actually attribute more to the lagged effects of the 12 years of reform that were eventually coming through, as I mentioned, tax reforms, the GST, and then the direct tax slab widening and rates lowering that happened in the course of the budget, February 2025 budget, and the lagged effects of supply side infrastructure that improved the economic capability. If you remember, in January, when we released the economic survey, in chapter 1 on the state of the economy, we actually did upgrade India's potential growth estimate from 6.5%, which we had put out 3 years ago. And now we said we had reached a steady state of 7% growth rate, and we had explained the reasons, and it was not rebasing. It was the cumulative effect of all the reforms, which we felt, barring external uncertainties, the Indian economy was poised to have a steady state growth rate of 7%. And that's exactly what the 25-26 numbers reflect.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company. a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest...
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to NDTV Profit. I'm Vikramosa. Now, can a mainstream Bollywood film really make India's most important economic crisis and the people who actually prevented a sovereign default? Can a film make this part of popular culture? That's exactly what has happened with the film Governor, The Silent Savior. It's a film that's inspired by the life and work of former RBI Governor S. Venkata Ramanan and, of course, the extraordinary events that surround India's darkest economic hour. Joining us today on the channel, two people bringing that story to audiences across the country. Manoj Bajpayee, one of India's most versatile actors. And, of course, we have the producer of the film, Vipul Shah, who's made some excellent cinema in the past, and here we are talking about a film that perhaps kind of digs into India's, like I said, that dark economic hour. To kind of choose a film which is of that period, that kind of history, that time when we are currently grappling with an oil crisis. How did you choose a film like that? What was in your mind when you were reading the script for the first time, Manojji?
Okay, creatively, because when it came to me, it was around 4 years back. People called me up, and both of us have been looking for an opportunity to work with each other, and because we've known each other, right, as a colleague in this fraternity. But one film that we tried to make it happen and didn't happen. Then 4 years back, he gave me a script. I went through it. First of all, I was surprised. And I can see the same kind of surprise and also some kind of apprehension on everybody's face when they come to know that we are making a first economical thriller with a backdrop of 1991 economic crisis and in the time of complete political instability.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hello and welcome to The Big Question. I'm Vikram Oza. Our focus on the show tonight, Mumbai's tanker strike. Once again, it exposes just how fragile the urban water supply situation really is. And that is certainly true as far as India's financial capital is concerned. More than 2,000 tanker operators have gone on this indefinite strike, and they are protesting a government crackdown on groundwater extraction. Also, the new licensing rules that are linked to the Central Groundwater Authority. But really, it's not about just one strike alone. It's about a city of over 2 crore people that still depends on private tankers. Now, these are private tankers. We rely on them for nearly 8% of our daily water needs. For decades, tanker networks have supplied housing societies, hospitals, offices, restaurants, construction sites. All of them have been supplied